Good morning, Ms. Tamburu.
Good morning, how are you?
I'm very well, Mr. CG.
Thank you very much.
Okay, great. So thank you for joining the session. The main goal of the session was to just ensure we can see you clearly and hear you clearly.
Can you do so?
Yes.
You see me properly? Are you hearing me properly?
Yes.
Okay, that is good.
Oh, sorry, someone was talking to me on the end. Okay, great. So on our end, Wageni Wamba is our moderator, as always. She'll walk us through the session, or rather she'll prompt when you are meant to speak. We'll begin the session by playing the national anthem. So Wageni will ask us all to either stand at attention or something for the national anthem. Then after we've played the national anthem, she'll invite Commissioner Karanja to speak. And Commissioner Karanja will then speak through a video that was already pre-recorded. After that video, it's when then Wageni will introduce you to speak. She'll mention that you're speaking, and then after you, Ambassador Muthaura is speaking. And so after you speak, we ask that you kindly introduce or invite Ambassador to speak. Then after he's spoken, we'll go back to videos and Wageni will take it up from there.
Okay.
So on our end, I think that's it, unless there's any clarity we need to provide.
No, that's okay. That's okay.
Oh, okay.
So, then you can confirm you can see CG?
Yes, we can see CG. We can see him very clearly, actually.
So I think the only test we want to do is to see him read, so that it doesn't look awkward. So he's going to read, and then you assure us from your end that it's okay, and that it will not be seen like he's actually reading. Okay.
Oh, okay, understood.
So just do a line or two, and then you let us know. You ready, Dana?
Yes, we are ready. We are ready on our end.
Okay, Diana, I'm delighted to join you as we begin this year's tax summit. This summit is part of KRI's Taxpayers Month activities aimed at bringing together experts and policymakers to engage on pertinent issues that affect our tax systems.
Okay. Yes.
So Diana, how is it appearing?
Yes, it appears we can see that you're reading, but it's okay. As in, it's clear. It's very clear. It's very
But
clear, as in you're not facing.
I'm supposed to read. I'm not supposed to.
Agreed. It's okay. We can see. We can
So
see clearly.
what you are preventing is just bending down like this.
Yeah.
That's true.
How come
Okay.
I can't see you yourself? Where are you?
Ah, I'm back.
Oh, okay.
Yeah.
Thank you very much.
Thank you, sir.
I think we are now set up, and so we will move the way you have guided.
Okay, great.
Okay.
All right. All right, so good morning all. So we are stopping the practice session now because we have to start the webinar for attendees to start joining so that we are ready at 9 a.m. We are reaching out to Dr. Karanja and Jean-Louise in the background for the practice session.
hands, paying their taxes, and in every other way that we can support them in ensuring that then we meet this mandate. As we look at ourselves amongst our staff, with our taxpayers and everyone around us, even in the Kenyan spirit, we strive not to leave our kin behind. Taxpayers Month is a very important month to us in the sense that it gives us the opportunity to engage with our key stakeholders, the taxpayers, to interact at different levels with them, to better understand them, what the successes that we have recorded, the challenges that they continue to face in interacting with us. It also gives us an amazing opportunity to showcase our facilitative spirit of reaching further and deeper into the community as we give back. To us, it is indeed a great honor to serve our country in the capacity that we are in. A lot. This Taxpayers Month is going to be a very exciting one. We have planned very many activities where we will have the opportunity to continue interacting with our taxpayers. These activities will be done both in Nairobi and in the regions outside Nairobi, which then further cements the theme of leaving no one behind. In particular, we will be launching an exciting and new service for our taxpayers. We will also have our annual tax summit where we would have in-depth, interesting conversations on revenue generation and collection. This will be discussions where we'll have a meeting of great minds, both within Kenya and beyond. To Capital, which will be the highlight of the month, we will have the Taxpayers Day towards the end of the month. This is a day that has been set aside to recognize our esteemed taxpayers, those who have consistently filed their returns, paid their taxes diligently, and continued to be compliant in their tax affairs. I would like to personally thank our esteemed taxpayers for diligently filing and paying their taxes where due. I would also like to welcome you to this year's 2022 Taxpayers Month. Happy Taxpayers Month.
The paying of taxes by all of us is not an option. It is not something we choose. It is something we must do if we have to secure our independence and our democracy.
As a nation, we are able to meet our sustainable development goals because of taxpayers' hard work and their thoughtful efforts in being tax compliant.
Taxpayers remain our most valued customers. We continue our journey of simplifying tax procedures through the use of technology, including enhancement of the iTax portal. KRA's customer satisfaction journey is also anchored on improved trade facilitation to enhance tax compliance.
Tulipe ushuru tujitegemee. tulipe ushuru tujitegemee.
Tulipe ushuru tujitegemee. Yeah.
Tulipe ushuru tujitegemee kwa sababu hiyo ni haki yetu, ni haki ya Mwanakenya. Na lazima tutimize wajibu wetu ili Kenya yetu iendelee.
Good morning, Africa, and welcome to this year's 8th Annual Tax Summit hosted by the Kenya Revenue Authority. This is the biggest tax conversation and it's happening right here. And I'm so glad to see the close to 700 of you who have joined us to be with us during this summit. My name is Wageni Kimani Wamba, and I will be your moderator. To start us off, we shall have the Kenyan national anthem, followed by the East African anthem.
Nguvu yetu ilete baraka kwetu, haki iwe ngao na mlinzi, na tukae na udugu, amani na uhuru, raha tupate na ustawi. Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu, jumuiya yetu sote tuilinde, tuwajibike, tuimarike, umoja wetu ni nguzo yetu.
The theme for the 2022 Annual Tax Summit is Now and Beyond, enhanced service delivery to improve tax compliance. For the next 2 days, we shall be ruminating and granulating this theme by asking ourselves, what is the nexus between enhancing service delivery and improving tax compliance? We shall talk about how do we enhance risk-based tax compliance? What is the role of technology in compliance? What is the place of data and big data in compliance? What about customs in a globalized age? Now, last year's summit, we began the conversation on the Africa Free Continental Trade Area, and we continue the conversation this year. And tomorrow, we shall conclude the summit with a public lecture. We want you to be part of this conversation. I'm informed that we're about 800 now. And so in your chat box or in the Q&A area, please let me know your name. Let me know where you're joining us from, which organization or country you are representing, and tell me what is that one word that you want that will define and describe your expectation of the summit. Ladies and gentlemen, we are also on the social media platforms with the hashtag Tax Summit 2022. Now, I will be looking for the most active participant per session. So maybe it's you, wherever you are. I want you to engage with us. Post your question or your comment, and the team who's working in the background will be looking through, and they will randomly select the most active delegate and receive a gift hamper. All right. So let's start engaging. Distinguished ladies and gentlemen, it is now my humble duty to welcome the Commissioner for Investigations and Enforcement at the Kenya Revenue Authority, Dr. Edward Karanja, who will be giving us his welcoming remarks. Dr. Edward Karanja, over to you.
The annual tax summit is an annual event organized by KRA to engage the stakeholders, the taxpayer. We use as KRA to get feedback from the stakeholders and see how we can come up with solutions, the pain areas for the taxpayers, and address them so that we can be able to make tax payments a better experience for taxpayers. This year's summit theme is Now and Beyond, enhanced service delivery to improve tax compliance. Our focus this year will be on how to entrench risk-based tax compliance, enhance trade facilitation, and position KRA as a service-driven agency for the future. Specifically, the role of technology in strengthening VAT compliance, the place of data analytics in enhancing tax compliance, and how customs can better support legitimate trade and value chain development in globalized age. Our focus this year is to ensure that we entrench KRA as a service-driven institution by making sure that as we interact with our customers, it will be driven by the risk and by risks in both domestic taxes and in customs. Specifically, we'll be looking at how we can use technology to drive compliance in VAT. We'll also be looking at big data analysis as a way of driving also business. We'll also be looking at how customs can better support legitimate trade transactions in line with the global trends. In this year's summit, we've lined up great speakers across all the areas, in the government, in academia, international organizations, and all our key stakeholders. So this summit, we have great speakers, we have people who have a lot of experience in those areas, and we believe we are going to benefit from the discussions which will be taking place and help us improve on our service delivery. This is one of the summits which we believe that it's a must attend by everyone who would want to be enlightened in terms of what is happening globally in tax administration. So the whole of KRA management, the board will be available and will participate in various discussions. So it's a summit. I would like to take this opportunity to invite all of you and ensure that you carefully follow through the discussions which will be taking place. On behalf of Kenya Revenue Authority, I welcome you all to the 8th Annual Tax Summit, where knowledge meets practice. Karibuni sana.
Thank you very much, Dr. Karanja. Indeed, this is where knowledge meets practice. Now, I asked you to head over and let me know at the Q&A section. Let me know where you're joining us from. And wow, this is very overwhelming. I understand we're now about 1,000 plus. And so thank you so much once more for joining us. I see you, Tivenda Jutla, and you're joining us from Nairobi. Solomon Omware, you're joining us from Kenya. Emmanuel Miliko, you're from Laikipia North. Chelanga Rotich, you're from the Parliament of Kenya. James Mugo, you're joining us from Reading in United Kingdom. Filippo Gola, you're joining us from Fogo Group in Nairobi. Daniel Motiso, you're joining us from Nairobi. Joseph Mogwero from ACCA. And you are saying you expect an informative and eye-opening session this year. Well, we are here to deliver that for you, Joseph. Ibrahim Odhiambo, you're joining us from Kisumu. Lillian Obura, you're joining us from Mombasa, from the Kenya Safari Lodges and Hotels. Mohammed Ali, you're joining us from Kakamega, and you're saying you're here to learn and know about the tax man. Well, that for sure, we're going to deliver for you. Victoria Cheptumo from Debt Enforcement from Kitale Station in Kenya. Carl Karanja from Masai Mara, and you say you're delighted to be part of this summit. Roy Kemboy, you say, I'm Roy, an accountant from Rutuba Limited, and I'm happy to be part of this year's Taxpayer Summit, and you're looking forward to a productive engagement. Thank you very much. Keep them coming. They're so overwhelming. And yes, we are going to be looking for the most active participant today. And so your engagement is very important to us. And now, the beginning of this month, which was on 3rd of October, we had the launch of the Taxpayers Month. So the annual Tax Summit is one of the major activities or flagship activities for the Taxpayers Month. And what we launched on that day was the KRA TV. Now, the KRA TV is an online educative platform just to ensure that the taxpayers know more about their taxes. And I'm pleased to let you know that we are now live on KRA TV. The summit is live on KRA TV. And just to give us a quick recap, I'd like to welcome Commissioner for Domestic Taxes, Madam Rispa Simiu, to share the notes, the welcoming address that she gave us during the opening of the Tax Summit month. Media team, please go ahead.
Greetings, fellow taxpayers. On behalf of the Board, Commissioner General, Senior Management, and staff of the Kenya Revenue Authority, I wish to welcome you to the Taxpayers Month 2022. In meeting our mandate, which is really collection of revenue for our country, we strive to facilitate every taxpayer who reaches out to us in filing their returns, paying their taxes, and in every other way that we can support them in ensuring that then we meet this mandate. As we look at ourselves amongst our staff, with our taxpayers and everyone around us, even in the Kenyan spirit, we strive not to leave our kin behind. Taxpayers Month is a very important month to us in the sense that it gives us the opportunity to engage with our key stakeholders, the taxpayers, to interact at different levels with them, to better understand them, what the successes that we have recorded, the challenges that they continue to face in interacting with us. It also gives us an amazing opportunity to showcase our facilitative spirit of reaching further and deeper into the community as we give back. To us, it is indeed a great honor to serve our country in the capacity that we are in. A lot. This Taxpayers Month is going to be a very exciting one. We have planned very many activities where we will have the opportunity to continue interacting with our taxpayers. These activities will be done both in Nairobi and in the regions outside Nairobi, which then further cements the theme of leaving no one behind. In particular, we will be launching an exciting and new service for our taxpayers. We will also have our annual tax summit where we would have in-depth, interesting conversations on revenue generation and collection. This will be discussions where we'll have a meeting of great minds, both within Kenya and beyond. To cap it all, which will be the highlight of the month, we will have the Taxpayers' Day towards the end of the month. This is a day that has been set aside to recognize our esteemed taxpayers, those who have consistently filed their returns, paid their taxes diligently, and continued to be compliant in their tax affairs. I would like to personally thank our esteemed taxpayers for diligently filing and paying their taxes where due. I would also like to welcome you to this year's 2022 Taxpayers Month. Happy Taxpayers Month.
Indeed. Thank you very much, Mrs. Rispa Simiu. She is the Commissioner for Domestic Taxes right here at the Kenya Revenue Authority. Thank you very much for your engagement. I've seen loads and loads of your comments telling us where you're joining us from various parts of the country and across Africa. Keep your conversations coming in the Q&A section. Like I said earlier, we have a panel of experts who are ready to handle your issues, your questions in the Q&A section as well. Distinguished ladies and gentlemen, it is now my humble duty to welcome the Kenya Revenue Authority Commissioner General, Mr. Githim Mboro. Mr. Githim Mboro is a member of the Golden Heart and a chief of the Burning Spear. Mr. Mboro will then invite the KRA Board Chairman, Ambassador Dr. Francis Muthaura, to deliver his address to us. Good morning, Mr. Commissioner General. Over to you.
Thank you very much, Wageni, and good morning.
Good morning, sir.
The KRI Board Chairman, Ambassador Francis Muthaura, the KRI Board members present, our KRI staff, distinguished delegates, ladies and gentlemen, good morning. Allow me to proceed to my opening remarks. I'm delighted to join you as we begin this year's tax summit. This summit is part of KRI's Taxpayers Month activities aimed at bringing together experts and policymakers to engage on pertinent issues that affect our tax systems. This year's summit forms part of KRI stakeholders' engagement strategies that provide an opportunity for KRI to engage in its partners in open dialogue and develop practical solutions to various economic and tax challenges. We believe that viable solutions to various challenges can be developed when key stakeholders and major economic players meet and engage in such discussions. This is the 8th year that KRI is hosting this summit since its inception. And through this forum, KRI has collectively reached over 12,000 participants and audiences, including but not limited to public servants, technocrats, tax professionals, civil societies, private sector players, academia, among others. The summit has also drawn together over 100 speakers from more than 50 different countries. The tax summit, ladies and gentlemen, is significant to our operations and implementation of various recommendations from the previous fora. KRA has been able to improve service delivery and enhance revenue collection. The theme of the 8th Taxpayer Summit is Now and Beyond, enhance service delivery to improve tax compliance. The discussions come at an opportune time when KRA is focusing on its journey to transform to Kenya Revenue Service, with a focus of improving service delivery and enhancing compliance. One of the most effective ways of addressing non-compliance is through offering quality and efficient tax service. It is projected that where there is a superior tax service quality, then voluntary tax compliance among taxpayers is promoted. This is because when a customer is treated with courtesy and with respect, then they are able to do more. At KRA, a taxpayer remains our ultimate customer, and their gratification is a primary motivation towards transforming our processes to make them easy and simple for them to comply and meet their tax obligations. Ladies and gentlemen, the authority's key focus is to become a service-oriented revenue administration. The authority has therefore begun implementing an open door policy that embraces approachable mechanisms in serving taxpayers. Through our robust stakeholder engagement plan, KRA is now able to facilitate structured engagements which help to tackle key tax issues. KRA has progressively enhanced its service delivery and technology has played a key role in improving our services. The use of technology reduces the burden of manual tasks by automating the processes. KRA continues to leverage on technology to improve speed and accuracy in its tax services. For example, the iTax system has integrated almost all processes, making it convenient for taxpayers to access services while enhancing KRA's efficiency. Today, our customers can access most of our services at the comfort of their homes and offices. KRA has also enhanced its customer services, which has consequently aided trade and improved ease of doing business in Kenya. The rollout of the integrated customs management system has modernized customs and border control operations. The system has enhanced cargo clearance and processing time and has improved compliance and increased our operations at the port. Ladies and gentlemen, I'm pleased to inform you that KRA has implemented a number of recommendations that have been employed to resolve taxpayers' concerns, which include implementation of a customer relations management system. This is a system that we use to engage our customers. The development of the M-Service platform to cater for the needs of all segments of taxpayers. Here we are saying you are able to pay your taxes or even receive our services through your mobile phones. KRA has also collaborated with the Kenya Institute of Curriculum Development in mainstreaming tax education in competency through the launch of a tax-based curriculum. We would like our children, as they go through school, to become educated on tax matters. We have also seen the acquisition of a cargo scanner management solution that has automated and centralized our cargo scanning. Here, what we are saying is that we have now integrated all our scanners across the country. We are able to view them from a single command center, and we are able to receive those messages and analyze them as required. We have also operationalized the data warehouse solution that facilitates the use of data-driven compliance and interventions. Ladies and gentlemen, in this solution, we have integrated with other databases, and we are able now to receive information from those databases, then analyze the same and use it for our compliance management. We have also deployed and effectively used our electronic cargo tracking systems, which allow us to monitor goods from the point of ports of entry all the way to the countries of destination within the region, and that has enhanced or significantly reduced dumping of goods. We have also effectively employed our accessible goods management system, which allows us to then monitor and ensure that taxes are properly paid on accessible products, including alcohol, alcoholic products, and cigarettes. Finally, KRI is also implementing the tax invoice management system, which provides real-time information on business transactions. We believe that the launch of this tax invoice management system will enhance our efficiency in collecting value-added tax. I am optimistic that by the end of this two-day forum, we will document key ideas which we can implement to enhance our service delivery and transform our tax administration in our quest to become the Kenya Revenue Service. I wish us a very successful and fruitful deliberations as we chart a way forward for our tax administration and tax administration globally. I now welcome the KRI Board Chairman to make his opening address. God bless you.
Thank you very much, Commissioner General, our esteemed taxpayers, fellow board members, chairpersons and CEOs of various associations, tax consultants present, distinguished guests, ladies and gentlemen. I wish to welcome you all to the Kenya Revenue Authority's 8th Annual Tax Summit. The Annual Tax Summit brings together experts and specialists for open discussions on the various tax-related matters affecting tax administrations around the world and their possible solutions. During this year's summit, we will converge to discuss the subject now and beyond, enhanced service delivery to improve tax compliance. The theme is an inspiration to the need of tax administrations to create a pleasant customer environment that will foster a tax compliance culture to enhance voluntary compliance. Globally, tax compliance administrations have been striving to undertake reforms and adopted various measures to enhance excellent service delivery. This has proven critical in the facilitation of tax collection through voluntary compliance. This has also led to reduced costs of tax collection. Growing revenue collection through customer service is now at the core of achieving the fiscal targets. This has not only transformed the traditional ways of revenue mobilization through enforcement, but has also strengthened the bond between tax administrations and the taxpayers. Tax administrations serve diverse customer segments. The requirements of large taxpayers are different from those of the medium taxpayers and those of small taxpayers. Even the individual taxpayers have their distinct requirements. It is therefore paramount for tax administrations to develop policies that respond to the needs of various customer segments. It is fundamental for the tax administration to understand all their taxpayers, develop policies that respond to their needs, and implement the appropriate service delivery strategies which correspond to the taxpayer needs. KRA has continuously improved the tax system in the country with the goal of enhancing efficiency and improving customer satisfaction. We continue to implement strategies aimed at becoming a customer-centric organization. We have commenced our journey to transform from KRA to Kenya Revenue Service. This will enable KRA to review its processes and make them simpler, as it also upgrades its technology to enable multi-channel interaction that is simple and secure. The authority is also working towards transforming its workforce to be more customer-centric and responsive to the challenges of taxpayers. As I conclude, I wish to challenge all the great minds gathered here to use the forum in coming up with the recommendations that will position our tax administrations as respectable position on matters of tax. I once again welcome you all to this annual tax summit to engage in this wide-ranging subjects aimed at providing innovative and most efficient ways of enhancing service delivery and consequently tax compliance. I sincerely thank you very much.
Thank you very much, our KRA Board Chairman and the KRA Commissioner General. Indeed, the great minds gathered in this summit, I'm told we are over 1,900 of us. We've accepted the challenge to use this forum to come up with recommendations that will position our tax administrations at the pinnacle of our nations. Thank you very much. Distinguished ladies and gentlemen, thank you very much for your chats and just letting us know where you're joining us from. Thank you, Celestine, who's joining us from Busia. Thank you, Mark, joining us from Tabasin Group right here in Nairobi. Thank you, Bernard, for joining us from CDN in Nakuru. Emmanuel Wesangula joining us from Bukoli in Bungoma County. Marion from the Sinovate Center right here in Nairobi. Ladies and gentlemen, the Q&A is open for you. Do you have questions for us? The subject matter experts from KRA are here and ready to answer your questions. A gentle reminder is that we are also on our social medias. We are streaming live on KRA TV and on YouTube. Ladies and gentlemen, the Tax Summit is now in its 8th year. To give you just a little background of where we are coming from, this is our story. Wasn't it amazing to just look at the history of the annual tax summit? We had it before COVID, we had it during COVID, and now we are blessed to have it post-COVID and continuing with the tax conversations. Distinguished ladies and gentlemen, we have hit the 2000 mark and we're excited. Thank you so much for telling a friend to tell a friend to join in, because now it is time to begin our conversation. Here to deliver on the keynote address on enhancing risk-based compliance. What are the achievements? What are the challenges? What are the prospects? Is Mr. Justin Zake. Mr. Zake has over 30 years experience in revenue administration and technical delivery at the Uganda Ministry of Finance, the Uganda Revenue Authority, and the International Monetary Fund. Mr. Zake has been a member of and also led capacity development missions to various countries across the world. We are indeed honored to have you, Mr. Zake, joining us from Washington, D.C. He was with us from about 1 a.m., and so we're grateful that you could join us. Mr. Zake, please, over to you.
Thank you very much, Wageni, and it's really good to be here. I thank the organizers for inviting me to give this. It's called a keynote speech, but I'm just going to be sharing experiences, sharing some thoughts, and probably some perspectives that are sometimes not thought about very strongly. I'm really impressed by the participation of over 2,000 people right now and ticking. And thank you to the board chair of Kenya Revenue Authority, Commissioner General, senior management and staff of Kenya Revenue Authority, guests from beyond Kenya as well, all taxpayers on the call and those who are watching on the stream, partners of Kenya Revenue Authority, ladies and gentlemen. I've been introduced. I head the TEDAT Secretariat, long word, but we'll explain that as we go along. But there are some perspectives that I would like to bring through. And when I was looking at the topic and also hearing from the Commissioner General, the theme of now and beyond, and I agree, it's really now and beyond. We need to do now and beyond. And looking at the title itself, risk-based compliance, there was really no clear definition of risk-based compliance. It is normally directed at taxpayers, that taxpayers, you must comply or should comply, and Kenya Revenue Authority provide the service so that taxpayers comply. I want to pose a question here. What about compliance of Kenya Revenue Authority itself and the staff within Kenya Revenue Authority? And again, food for thought. And this is something that has been on my mind for a long, long time. To what extent do tax administration overtly or covertly impact or encourage non-compliance? That's food for thought. On the next slide, I'm just going to go through a broad presentation framework. Next slide, please. And I'll be looking at the context. I'm approaching this whole keynote speech or conversation with the background of the TEDAT, Tax Administration Diagnostic Assessment Tool, which has been in place for over 8 years now. And the essence of the tool itself, or the methodology, is to gauge the strengths and weaknesses of a tax administration. As I speak now, we have conducted 144 assessments around the world, both at the national level or federal level and the subnational level, or in Kenya, it is counties. And in Kenya, 11 counties have been assessed. There's an assessment being finalized now, Iraq, and that will be coming through in the next 2 weeks or so. So I'll give some definitions in the context of what I'm talking about, compliance management, risk management, and where we are coming from, compliance improvement planning, And then I'll give you some evidence around risk-based compliance management. I'm adding the word management because I'm cutting it both ways, from a taxpayer perspective and also a tax or revenue administration perspective. So globally, I'll give you data. As of yesterday, the 144 data assessments, the situation as we see it through our diagnostic tool to that, and Kenya Revenue Authority has undertaken 2 assessments, one in 2016 and another in 2021, to see whether progress has been made. And I also give you the perspective in sub-Saharan Africa itself. So out of the 144 assessments, total assessments, 68 have been in sub-Saharan Africa. And issues for reflection: quality service delivery, enhancing risk-based taxpayer compliance. But I'm also thinking about it from the aspect of tax administration adherence to basic standards of delivery. I've been going through the chat and the comments that are coming in now and beyond. That's what it's really saying. And then, you know, I'll give you a perspective on what we've seen using artificial intelligence stroke machine learning algorithms on where we should really be going and where we should be focusing. Next slide, please. As the next slide comes up, the Tax Administration Diagnostic Assessment Framework, the TADAT, we have 9 performance outcome areas that range from registration of taxpayers, risk management, supporting voluntary compliance, and in there's an issue of service delivery. And then, you know, timely filing and payment of taxes, how accurate the tax returns are, or the filings are, whether in a debit or credit position. And I've seen issues on refunds and VAT filing coming on in the chat. And then the issues to identify the strengths and weaknesses and where to go from there. So it's really providing a baseline for reform. The other area that is germane for this particular, seminar is compliance management itself. The cardinal issue here is facilitating taxpayers and ensuring that they meet their obligations or fulfill their obligations. And these are really 4. Registration, filing of returns, payment, and I have inserted refund of taxes because that's another issue. And then accurate reporting by the taxpayers and being fair to the taxpayers on the tax administration side. And of course, we have risk management. You can't do everything, so you need to prioritize and go where it seems to hurt most, but also do a random selection of interventions and conversations with taxpayers. On compliance management planning, that there must be a structure of sorts, documenting whatever risks have been identified. And here I'm broadening the issue of risk, both taxpayers and within the tax administration itself. That's why I said, to what extent do tax administrations, let me use the word, encourage non-compliance, inadvertently or otherwise? And then at the end of the day, monitoring all these interventions, including service delivery and the conversations with taxpayers and other stakeholders, because we talk about taxpayers and may not necessarily talk about other stakeholders, but other stakeholders who watch and see what we do as tax administrators also have a view. They have a perception that should be taken into account. And at the end of the day, reviewing and refining the compliance improvement plan or planning in that instance. This is just a broad view of the TADAT framework as a context, that we have 9 performance outcome areas. I just went around them, registration through to accountability and transparency, there are 9. And then how the measurement framework works, that we really have 55 at the national level, dimensions from where we start measuring performance, and then 53 for the subnationals. But it's actually a very interesting framework, especially when, as I will do, talk about the linkages or the associations or interactions or impacts between the measurement levels. And really that is really for the beyond, but we should start now in order to go to the beyond. Next slide, please. And in this instance, because we are talking about compliance risk management, the TDAT framework, I'm using TDAT, has a performance outcome area number 2 that deals with effective risk management. So I'm putting all this keynote speech or conversation in context. What we all desire is that risk to revenue and tax administration operations, and I will add, businesses or business transactions are really managed effectively. We identify whatever risks there are to the revenue, to the tax administration, to the economy, and then we manage them effectively. In this particular instance, we are talking about tax, and this is what that framework has. You identify the risks, you rank them, and quantify them. So you don't need to go to everybody. There may be a random, but you focus on where it hurts most or where the high risks. And then once you've identified these, ranked and prioritized them, what are you doing to mitigate these risks? I mean, a risk may be low, it may be high, and I'll show you very shortly some of the interventions that can easily be used depending on the level of risk. So you need to intervene. And then at the end of the day, monitor and evaluate what you're doing. Service delivery is one answer to these risks. So you start, as the West Africans say, jojoing with the taxpayers and other stakeholders. Not only taxpayers, but other stakeholders. And those stakeholders include staff of the tax administration itself. So to what extent, from a horizontal perspective, is Kenya Revenue Authority jojoing with taxpayers? Yes, that has been illustrated. Digitalization has been introduced. What about the staff? What you realize, and I've been in tax administration, I come from Uganda and just across the road, and I was in the tax administration. So tax administrations and also the tax-paying population and stakeholders have their grapevine where they exchange messages. To what extent is Kenya Revenue Authority leveraging those messages? Some may look innocuous, some may appear to be offensive, but when you look at an offensive communication, you draw threads from it, and it's an opportunity either to say something or do something, but to improve on what and how you perceive things and how you transact. Next slide, please. And this particular slide, and I noticed that there's a blob at the bottom of the screen, at least is what I'm seeing. That particular slide has 4 quadrants. This is risk differentiation. So how do we differentiate the risk? And this is really targeted at both the taxpayers and the tax administration themselves. So you have 4 quadrants. The one on the upper right is where you have the highest risk taxpayers. You detect and deter in real time. I saw a comment on the chat. Why aren't some people paying tax? Why are they being exempted? The rich being exempted, and I mean, it's looked at as some kind of discrimination. But from a taxpayer perspective, so the quadrant 1 in the upper right-hand side is where you have the high risk or non-compliant taxpayers, most non-compliant taxpayers, and there you detect and deter in real terms. As we move towards the bottom, the quadrant 3, where we have medium risk taxpayers, there are certain interventions that have been indicated in there. Assist them and encourage them to pay. So service delivery is an important point here, including digitalization or making life easy for people to comply, taxpayers to comply. And then on the upper left quadrant, you have your key taxpayers who should be engaged continuously and supported as well, so that these who contribute close to 70 to 80% of your revenue are really engaged. You know, you're co-creating with them. You're not doing things on your own. You know, you're bouncing things off them. Not that you're not doing it for the others as well, but engage them and support them. And the bottom left, the lower risk taxpayers, just simplify things, make it easy. You look at the developments in technology, and who would have believed long ago we had these telephones on the desks, the dial telephones. So you dial the thing and, you know, you communicate. Now we have mobile phones, and those are making things a little bit easier. So this is the risk differentiation, but it must cut taxpayers, the tax administration, and the tax administration staff, and the conversations that need to be had between and within that nexus. Next slide, please. Now, I just want to give you a perspective of what we have seen. We've analyzed the data out of these 144 assessments as of yesterday. And on your left-hand side, you'll see the total 144, Sub-Saharan Africa, 68 assessments that have been conducted, and then Asia Pacific, Europe, Middle East, and then the Americas. On your right-hand side, the orange, this is across all the tax administration assessments that we've done. You're looking at the extent to which people have actually done well or not. The yellow at the top is saying there's a deficiency in there. So in identification of risk globally, 24% of the ratings, were very poor. So 24%. Then in assessing and in terms of prioritization of the various risks, we are seeing 49.6%, 50% for mitigating. These are initiatives that have been undertaken to mitigate the risks. And then the last one is monitoring and analyzing the impact. Impact analysis. What have your interventions told you? Are they palatable or not? Are they achieving what you want to achieve? And thank you very much for moving very quickly on the Sub-Saharan Africa one. You can see the situation is not as good. And what worries is that assessing and prioritizing taxpayer compliance risks is extremely poor. In fact, if you add the 63% and the 23% odd, really we are 87% out of line. So assessing and prioritizing is a problem. And again, here the next one in terms of mitigating, 90%, 94%. And then another, we don't analyze the effects or impacts of mitigation. That is another 88%, nearly 90%. So now and beyond, what are we doing? How are we doing it? How can we do better? Next slide, please. And these are reflection issues, service delivery and digitalization. I'm not going to go through the whole of it. I'm mindful of the time. To what extent does quality of service delivery enhance risk-based taxpayer compliance? We assume that it does, but have we analyzed it? In fact, one of the things that we look at in that framework, we have something called, promoting or encouraging voluntary compliance. So much money is poured into this particular area. Roadshows, adverts, KRA TV, and so on. I'm not saying it's not working, but is that on its own enough? I've said, to whom are we directing risk-based compliance? Staff or the taxpayers, a combination thereof. Food for thought. Are we integrating it in other delivery approaches? Customer relationship management issues for both staff and taxpayers. I'm bringing in staff of KRA and other tax administrations in this question. And sometimes service delivery is an afterthought. I am glad that the Commissioner General has talked about the thrust for service delivery. And that's important. And then digitalization, it has its benefits, but on its own is not enough. You can give somebody a mobile phone and say, there you are, but they use only 0.5% of the functionality. So there are issues in there. And we all realize, the slide that has just been put on, that there's organizational complexity. Organizations are complex, and you will read the quote from Dooley on that. But I think the essential thing is, and what we found, do people actually in the organization itself talk to each other? Or do they compete with each other? I was in Brazil and I was addressing very senior people, equivalent of county secretaries. And I asked them, in your own organizations, do people collaborate, support each other, or do they compete with each other? That's a major question. And as we do go on in the deliberations, something that we need to address. We may be competing with the taxpayers to collect the money, but internally, are we competing with each other rather than supporting each other? Next slide, please. And as I've told you, we've done some work using artificial intelligence, stroke machine learning, and we see associations across all the key dimensions or the key functionalities of tax administration. This slide itself would take a long time to explain, but essentially what it is saying, and I'll give an illustration. If Ambassador Muthaura depends on the Commissioner General, and the Commissioner General depends on me or RISPA, there may be a direct relationship between the Ambassador Muthaura and the Commissioner General, and the Commissioner General dealing with me. But if Commissioner General does anything, he will impact both Ambassador Muthaura and myself. So they are direct, and the direct linkage, Ambassador Muthaura, Commissioner General, and myself. But if I do anything that impacts Commissioner General, it'll also impact Ambassador Muthaura indirectly. How are we collaborating? And I know for a fact now, because I've been working with KRA on some of these issues, they are now trying to map, and that can be elaborated later, trying to map how these interactions within KRA work, whether there's collaboration and support for each other, and how that can be taken to the next level, the beyond. We start now and then go beyond. Those are issues that need to be looked at. Are we encouraging or are we not encouraging voluntary compliance? Our own mechanisms internally and how we operate. Next slide, please. And I'm not going to go too deep in this, but we've been able to map, who depends on the other, just like I've said, Commissioner General depending on Ambassador Muthaura, and Ambassador Muthaura indirectly impacting myself or me. Next slide, please. And this is just a snapshot on the risk management area, which includes human capital risks and operational risks, and all these interact with each other. So you'll when they give you a slide, you'll see how these interactions happen, that this particular area, identification of tax compliance risks, is impacted by directly or impacts accuracy of the taxpayer register and so on, and then the detection of unregistered taxpayers and so on and so forth. So this is really the conceptual approach. Next slide, please. I'm about to finish. In summary, we should be looking at the interrelationship of the activities within the tax administration holistically, and put in place interventions that encourage support and collaboration within the tax administration. That then reflects out there to the taxpayers. And if you're just focusing on specialist functions and so on, and operating in silos, as opposed to horizontality, there is a problem. And we actually may, as an organization, think that we are delivering service out there, but we actually disimpacting, if I may use the word, disimpacting ourselves internally. We are not moving as a team. It's really a divide and rule issue. I've seen some comments on the chat that can be responded to. And again, digitalization on its own is not a solution. It is a good solution, but it must be, it must interact with other organizational functions, and measuring all these multidimensionally. Pulse and other surveys can be done internally and externally, but importantly, let's all co-create, both within the Kenya Revenue Authority or intra-tax administrations, and then with external stakeholders. It works. It has worked for me in whatever I've been doing, and it should be able to work for Kenya Revenue. I thank you very much.
Oh, wow. Mr. Justin Zake, I think we were not prepared for you. Mr. Justin Zake, I think we were not prepared for you. Thank you very much. Mr. Justin Zake is the Unit Chief at TADAT, which is the Tax Administration Diagnostic Assessment Tool Secretariat, based in the Fiscal Affairs Department of the International Monetary Fund. You have thrown a lot of challenges our way. I like that you've started with, to what extent do tax administration encourage tax compliance? And then you taught us a new one, jojoing. And you jojoed for us. I'm just challenging us in terms of where is sub-Saharan Africa in terms of compliance? Why are we performing dismally based on what you shared with us, the statistics that you have shared with us, and to whom are we directing risk-based compliance? To help us break down that conversation, understand it more in context, share a bit more experiences from various countries, from Kenya, from Rwanda, from Uganda. I would like to bring on board our discussants, and the discussants will break down Justin Zake's keynote address, quite heavy hitting right there, but we'll focus a lot on tech for VAT compliance. Now, teams in Kenya is being rolled out. KRA is currently rolling out the tax invoice management system, and it is a key strategy for enforcing implementation of the VAT regulations. Now, to bring on to us our group of panelists, I would like to introduce them one by one. We have 4 panelists, as you can see on your message board right there. The first one is Mr. Mukesh Shah. Mr. Shah is a board member at the Kenya Revenue Authority. Alongside being a KRA director, Mr. Shah is the director and founder of Strategic Consultants Limited, a practice that he established in 1992. Now, this practice provides specialized consultancy services in the areas of strategic planning, high-level advisory to family-owned businesses, business revival and reconstruction and mergers and acquisitions to national and international clients. Our second discussant is Mrs. Rispa Simiu, who is the Commissioner for Domestic Taxes at the Kenya Revenue Authority. Mrs. Simiu is an advocate and a seasoned and ground tax professional with over 21 years experience. Before joining KRA, she served as the Standard Chartered Bank Regional Tax Manager for East Africa, where she also covered transfer pricing assignments in the larger Africa, Middle East, and Pakistan. Our third discussant, joining us from Rwanda, is Mr. Jean-Louis Kalingondo. He is the Deputy Commissioner General of the Rwanda Revenue Authority. Prior to joining the authority, 2020, Mr. Jean-Louis was the managing director of the Rwandan subsidiary of Harel Malak Technologies, a system integration company based in Mauritius with several branches in African countries. In that capacity, he helped deliver solutions to various Kigali-based banks and government institutions. And our last discussant, but definitely not the least, is Mr. Swalehe Biarugaba. He is the Deputy Commissioner Operations of the Tanzania Revenue Authority. Ladies and gentlemen, welcome to this discussion. I think I just want to start with Director Mukesh. Director, good morning, and how are you today?
Good morning, Wageni. Exciting to be part of this this panel today, and to really appreciate the many participants who have joined today. I think it's tremendous that there is so much interest in this summit. Thank you.
Thank you, Director. One quick thought of Mr. Zake's presentation today. Were you challenged?
There's something Justin said, which I think resonated very, very strongly. A question whether it's compliance of KRA taxpayers and its staff, or is it just the taxpayers? And I think that's a very important point I would take away from this session, that the compliance aspect is direct and should be directed to staff as well as to customers. Justin, you talk of taxpayers, we talk at KRA of our customers, and our journey of delivering a service and being a service-oriented organization is started in earnest, and our objective is to ensure we deliver a service and continue to enhance the service delivery. So it's equally a responsibility of our staff, of KRA as an organization, to ensure that the staff are compliant in all manner of their work in terms of providing a service to customers. And we should be measuring that, and we are measuring that in terms of performance contracts of our staff in order to ensure that we deliver the highest level of service. Quite often, we get accused that because of collection targets, the focus is on only collection, and the service aspect perhaps diminishes. But the thrust from the board and management is to ensure service delivery, and that's a journey that has started, and it's an irreversible journey.
Thank you very much, Director Mukesh. I want to pick it there from the irreversible journey and talking about tax compliance. Before I bring in Commissioner Rispa, let's talk a little bit about VAT compliance. What drives the importance of VAT to revenue administrations, and more so in KRA, before we go to Commissioner and she talks about teams?
Thank you, Ugeni. VAT in Kenya was introduced in 1990 as a measure to increase government revenues through expansion of the tax base. Globally, we are all aware that VAT is perhaps one of the easiest form of tax systems to ensure compliance. Since its introduction, VAT was expanded to goods and services, and then to retail and wholesale trades. The rate, as we know, has varied from 16 to 18%, and then there is, of course, the zero rating, and more recently the 8% on fuel. The technological transformation of VAT started in 2005 when the ETR gadgets were introduced. That was a step change in terms of revenue collection from VAT. By having that system, revenue enhancement occurred. However, as time progressed, the taxpayers some of them, I stress, found ways of beating the system, if I can call it that. And in that context, it's very important to recognize and appreciate that over 90%, nearly 92% of taxpayers are compliant. They're following the rules and doing the right thing in filing returns and paying their taxes. It's between 8 and 10% of taxpayers who need some encouragement to comply. And that's where a lot of the energy and effort of the authority goes in terms of ensuring compliance. There are some global standards in terms of what to expect from VAT. In our economy, our target of VAT collection as a percentage of GDP would be around 6%. We are not quite there yet. We are at about 4.2%, and therefore we have a gap. And that's a gap of around 40% or 39, 40%. If we were to bridge that gap and collect all possible taxes that would arise in VAT, we would have an additional around 300 billion of tax collection. Now, imagine the impact that would have on our economy. The possibility of doing that, enhancing tax collection, is very much there, and that's why TIMS will talk about that as we go along. TIMS is the next step up in terms of enhancing revenue collection. Automating tax collection is a way forward in all economies now, so that you are able to track transactions and ensure that where they are taxable, due taxes are paid properly and on time. In the days gone by, when we were not digital and we were manual records, there were a lot of scope for manipulation, under-declaration, non-declaration, and therefore the country as a whole was losing out on rightful tax dues. So I hope that kind of gives you a little flavor of to the point you asked, Wageni.
Yes, it does, Director, and thank you very much. And you've actually set the stage, because I want to bring in Commissioner Rispa. Commissioner Rispa, Mr. Zake has challenged us on the differentiation approach, which Director Mukesh says 92% are what Mr. Zake named as the key taxpayers. All right, but now we are introducing teams. How do we integrate teams? First, could you give us an overview of teams and how that will help us in terms of the compliance approach that KRA is taking?
Thank you, Wageni, and let me say it's nice to meet Mr. Zaki again. The last I saw you was in the TADAT class, and when you did that presentation, it actually took me back, I think it was January this year. And I liked the challenge actually when you said, to what extent do tax administrations actually encourage non-compliance, whether deliberately or inadvertently? And it got me thinking of a number of things. And even from the comment that we may be going digital, but the element of service orientation must be there for us then to succeed. So looking at our journey of teams, and Director Mukesh has indeed painted VAT and the implementation of this whole process. This is a journey that started probably about 2 years ago with the preparation of the regulations and looking at not just Kenya, beyond. Many other jurisdictions have gone down that direction. When you're talking about digitalization, when you're talking about e-invoicing, a number of jurisdictions have gone down that road, and there are immense benefits that come with it. So apart from building efficiencies, even just for the tax administration, it also goes to the taxpayer, in the sense that when you're talking about filing, pre-population of returns, when you're discussing aspects of tax refunds, which continue to be a pain point for taxpayers, if the implementation of teams then can pull us back as a tax administration from being, in the books of the taxpayer all the time, because we can see the information, the detail on our end, either real time or near real time. So what has our journey been like? Effective date was 1st of August, 2022. And like I said, after probably a 2-year or more or less 2-year journey, and this is the backdrop of the older ETR device, which had its own challenges, as Director Mukesh has painted already. So we are going down that direction where it is not questionable what that has been transmitted or not. What the taxpayer is seeing is what we are seeing. So we have one single source of truth, actually, to put it that way. Now, as it is with our population of taxpayers, the approach that we have taken is look at, again, at our 80-20 rule. Whereas it has not been a fast journey as we would have wanted it to be, even with that implementation date of 1st of August 2022, there was still the challenge of the availability of the devices in the market. And as such, we've continued to engage very closely, talk to our taxpayers as we walk this journey together to ensure that then we don't go out and penalize them in a situation where then it is not really their fault. So we have that conversation where there are challenges on the part of the tax administration. We own up and we say, okay, fine, we admit there is this challenge. This is what the law says, but what can we, to what extent can we administratively then be flexible to accommodate taxpayers, our clients in that case? And this then, I believe, should bring out that service orientation from our part, so that it's not just KRA saying you must, and in this case, not really KRA, actually the law, because what we're doing is implementing the law, but also bringing out that human aspect of saying, okay, fine, this is what the law says, this is what you're expected to do, but what then is the reality on the ground? Are there instances where you've not been enabled to comply? So again, stepping back and looking at the approach, our various TSOs, large taxpayers office, medium taxpayers office, and the other TSOs, we have opted to take the 80-20 rule. Who are the 20 that give us the 80? So that then we have a more strategic and more pragmatic, practical approach on the onboarding of our taxpayers. So as it is now, we have just slightly above 35,000 taxpayers who are already up and running, transmitting, and this is out of a population of, say, active filers, who active, maybe when you say active, could be paying or credit filers of about 113K. So a journey, we have started the journey with the availability of the gadgets. We are getting there. About 68 to 70% of the large taxpayers and the medium taxpayers are already on board. And what this then means is that the large taxpayers and the medium taxpayers are transacting with taxpayers who are in these other tax service offices. So inevitably, for you to be able then to comply or to even continue transacting with these ones who have already complied, then we are continuing to encourage our taxpayers to onboard. And at the end of it all, it is important that we look at it from all angles, that it is not just for the sake of the tax administration, but more importantly, for the benefit of our taxpayers as we simplify our processes, as we try to make tax compliance easy. Thank you again.
Thank you very much, Commissioner Rispa. And I think you've even adequately responded to the challenge from Mr. Zake. And I challenged us to move from competition to collaboration, and perhaps now the new term should be co-creation. Allow me to request our distinguished guests who are joining us online. Our Q&A is open for you. Do you have a question for our keynote speaker, Mr. Justin Zake, or any of our discussants? Please head on to the Q&A. We are going to collate your questions and forward them to our panelists and keynote address. We have had the Kenyan experience. Where are we in terms of the implementation of teams? I want us to cross the border and move to Rwanda. I want to bring in Mr. Jean-Louis. Mr. Jean-Louis, what is your experience so far? We're itching to hear the Rwanda experience with technology-driven VAT implementation and compliance.
Well, thank you very much. First of all, allow me to quickly express on behalf of the Commissioner General of Rwanda Revenue Authority our heartfelt thanks for this invitation to be part of this very important conversation. I think this kind of summit, this kind of conferences lead to a greater awareness among tax administrations in Africa in general about the issues which are at hand, the challenges, and the solutions and approaches that our peers have adopted. So therefore, we do welcome such opportunities, and it is indeed a great privilege to be able to sit here and hear from people like Mr. Zake, whom, like our colleague Mrs. Simiu, we have also met in the context of a classroom when we were being acquainted with the TADAT. So without further ado, let me delve into the question itself. The Rwandan experience, the Rwandan journey is pretty much known now. It's been documented in various studies. We implemented our electronic invoicing system since 2013. By 2017, we moved on to a better version of that electronic invoicing system, which we call our second version, basically, which gives us much more details about transactions that are being received. So it has been a successful campaign, given the fact that we've observed a long time since 2013 when we started to today, that is 9 years later, a growth in registered taxpayers who are using the electronic invoicing system that we call EBM here, from 6,000 approximately to more than 39,000 today. So that's been a positive growth, first of all. So by 2020, through a change in the law, we also decided to extend the usage of such devices as control tools to non-VAT registered taxpayers. And we believe that given the direct link that exists between VAT as an indirect tax and the income tax, this has helped us a lot to improve on the control that we exert even on the income tax also. So it's been a very, very positive experience in that sense. So maybe if I go a little bit more in detail, since we implemented the EBM, we started in 2018 effectively to implement also specific controls related to some tax functions such as filing returns. As of today, we have a very strong controls that exist that allow us in real time at the moment of filing to check whether the VAT on inputs declared by a taxpayer are not correct or whether they are fraudulent. We can detect that in real time. So we also have some controls related to VAT reverse charge. We have controls related to VAT retained by the government, so we can check with government system whether VAT declared by taxpayer as being retained by government has been that VAT has been effectively retained by a government entity. So in general, I would say since the introduction of the electronic invoicing system, our capacity to build a richer and more effective risk-based compliance improvement program has grown. We've had more risk rules created based on the data that we are collecting through that EBM program. So I think in a nutshell, being mindful of the time, that's what I would say about how technology has driven our implementation and our VAT implementation and compliance to date.
Thank you very much, Mr. Jean-Louis. I pardon me because I didn't ask you your quick thoughts on Mr. Zake's presentation. I realized I asked our previous two discussants. I pardon me for that. Please give us your quick thoughts on Mr. Zake's presentation now that he was your teacher.
As usual, Mr. Zake he has a masterful presentation of the TADAT framework as a tool for implementing best practices in all tax administrations, a neutral tool really, but through all the 9 POAs, one comes to the understanding of how a tax administration can be really improve on its efficiency and operations. But one thing that is a key takeaway that I have from today's presentation is the crucial importance of not having a silo approach in applying the implementation of the recommendations that come from the TADAT framework. It's actually very crucial to take a broad approach, to look at all the POAs, because there are interactions between them, and missing on one may actually have a negative impact on the other. So it's very crucial to do it simultaneously and to make sure that we have an equal footing and we grow steadily on all fronts at the same time. So I think that would be my key takeaway. And as I speak today, we are currently in an exercise internally here within Rwanda Revenue Authority of doing an internal assessment against the TADAT. So we look forward to sharing maybe this information with the TADAT when we soon invite them for an external assessment from the Secretariat. Thank you.
Thank you, Jean-Louis. I want us to cross over to our neighbors in Tanzania, Mr. Swalehe Biarugaba. Hujambo and good morning from Nairobi. How are you, sir?
Good morning, madam. Good morning, the moderator. We are quite fine in Tanzania. Thank you very much for inviting us, Tanzania Revenue Authority, to join this big summit. First, allow me to express the appreciation of the Commissioner General for inviting the Tanzania Revenue Authority to be one of the panelists in this big annual tax summit of 8th. Yeah.
Quick question, Mr. Swalehe.
Yes.
I want to hear what is your takeout from Mr. Zake's presentation, and then I will ask you about VAT compliance in Tanzania.
Thank you, moderator. I've actually taken a lot from Mr. Justin Zake, but to make it summary, I have realized that whatever we think to modulate our revenue authorities, we should also take the consideration that we need to change ourselves, because having a good plan, having a good setup does not be enough. We need to change in mind and on approaches on how to save the taxpayer, because the question of Mr. Zaki is that is really is really in whatever we want to do, are we ready to implement it? So we need to change in our mind to ensure that what actually we need to do is really what actually our mind focus on that. And also the idea of digitalization is good, but we need also to be ready to implement it so that it can bring a good change. But lastly is on the issue of importance of risk. Analyzing of the risk of the institution is very crucial, so that you can understand what is the risk facing your organization and how to come up with a mitigation on how to overcome those risks. In summary, those are 3 areas I've analyzed from Mr. Justin Zake, the TADAT Secretariat.
Indeed, I agree with you. It was a very rich presentation. But I want us to focus a little bit on Tanzania. I would like you, Mr. Swalehe, to share with us what is the experience of technology-driven VAT implementation and compliance in Tanzania. We've heard from Kenya, we've heard from Rwanda, we are itching to hear from Tanzania.
Thank you very much. As regard to VAT, Tanzania, we have passed on almost 4 phases in the administration of VAT. As you are all aware that we started in 1997 by introducing the VAT. By then it was a manual-based operations, but later on 2010, we went to the second phase whereby we introduced the electronic physical devices. These EFDs was meant to ensure that at least we capture for VAT VAT registered traders to be in the position to know what is actually the sales. But this actually it wasn't did well because it was capturing the sales without taking into consideration on how to monitor the purchase or the production. With those challenges, now we moved to a semi-automation where we started linkaging with importations with ANSYS to ensure that we monitor the importations and also we monitor the production of those products. So by introducing the electronic, we enhanced the electronic physical devices by introducing the QR code on tax invoices. The QR code helped us first to verify the genuineness of the tax invoices, and also help the traders to be in the position, help the consumers to know whether the receipt, the tax invoice they have given is real valid tax invoices. So by the means of putting in a QR code, we managed at least to enhance the efficiency of VAT to around 25 to 26 enhancement to contribute to total revenue. But now we are in the fourth phase where we have introduced the full-fledged e-filing. That's the VAT returns are now submitted along with other returns electronically. And, the system we have now is able to validate all the tax invoices which are submitted to support the input tax, whether genuine or not. And for those who are not genuine, are rejected with the systems. The introduction of enhanced e-filing system has helped very much the Tanzania Revenue Authority to improve the VAT performance. And for last year, and for the end of the last year, now the VAT contribution has increased to 30% to contribute to the revenue. So you can see that the improvement, leave alone the challenge that we are facing, but the digitalization, the improvement in the system has helped much in the enhancement of VAT.
Thank you, Mr. Swalehe, for sharing the Tanzanian experience and the improvements and the implementation of the same, and how the VAT compliance has been enhanced thanks to the various systems that you have put in place. Panelists, and our keynote address, we have been engaging with our audiences who have been sending numerous Q&As. So allow us to listen to what the audience is asking so that we can respond to their questions. And I take the first question for you, Mr. Zake. And the person asks, what strategies would Dr. Zake, you have been baptized a doctor. What strategies, but you speak like a doctor, Mr. Zake. All right. So what strategies would Dr. Zake recommend for adoption to gain and or maintain taxpayer customer buy-in to compliance? Then they say, granted, there has been a documented increase in voluntary compliance. So bringing the aspect of the customer buy-in.
Thank you very much, Wageni, and thanks for the baptism. not of fire, but I mean, I've been scanning through the chat, and I've seen this particular issue. Yes, we have processes and procedures. We have metrics that measure whether we have achieved or not, whether we are highly rated or low rated. What is missing in all this? And if you recall my last bullet point on the summary, co-creation. And co-creation goes very, very far. That consult, consult, consult. If you want Jojo all the time. That's critical, because we may sit in our own premises and send our staff out there to interact with the customers, and Director Mukesh, others call them clients. Taxpayers, clients, customers, and they provide you some feedback. But and then we hold these workshops and call people in. You recall I said that in the environments that we work in, we have these grapevines. And the grapevines are actually much more informative than these formal sessions that we hold. When I was in the tax administration in Uganda, then I was Deputy Commissioner General then, I had a network of persons who would fan out there. So I get the official version from my staff, and then I have this other network that is also feeding me. And then I do a correlation. Very, very interesting. And it meant that out there was a parallel system that has its own messaging with respect to the management of the tax regime or the system of tax administration. And then we have the official version in reports and so on and so forth. And when you look at the two, they actually don't rhyme. And it's extremely important to have this correlation, because whenever I got this, it wasn't informal, it was structured. It looked informal, but whenever I got this other side, that was not the formal one, I would marry the two and say, okay, so what's going on? And that helped direct the way we should respond to the customers, the clients. In fact, in one instance, actually it wasn't one instance, and I think the practice is still being followed in Uganda Revenue Authority, we had a 1-hour session every Wednesday, 1 hour, 1.5 hours, with zoned taxpayer areas. And I would go in. In some instances, staff were being accused of very many things. So I would actually go with those staff and say, okay, you're being accused of this, talk about it. And by the time we finished, we had established a rapport, we had established goodwill, we even established channels of follow-up and feedback, not only from the taxpayers, but also from the staff. You were engaged with this person, this was the issue, how has it been resolved? I mean, go through the chat and you'll see people saying, Rispa, this is not working. You explain this, what do you mean? And things like that. It's so important that this co-creation occurs. And I'm a Scrum person, okay? Those of you who know Scrum, prototype, step at a time, make sure it works, consult. People will tell you, yes, it's working or it's not working. So you introduce a bigger product in small chunks or bites, module by module. Co-creation has done a lot. And to the issue of, the chat was saying internal standards within KRA. Director Mukesh, I agree. All these performance contracts, I know RISPA has and Wageni has, and all these other people have all these contracts. Who monitors those? You may monitor them informally, but do we have a system that monitors those and knowing that the outcomes expected of RISPA, of Commissioner General of Wageni and others, are actually being monitored formally and also informally? You get this feedback. Oh, yes. RISPA knows, I'm sure your staff have given you a paper on TADAT linkages. That TADAT linkages thing, I mean, you're able to see what interacts with what and how it impacts the other, both directly and indirectly. And you're able to say, this one is not working. For example, I'm just going to give an example of myself, that I'm working in Kenya Revenue Authority, and I have 10 functional areas that I am supervising, but I'm reporting to myself. Oh, yes. You go and check. I'm reporting to myself. So what am I accounting to? Am I according to the performance contract? And I know that the data metrics are in that performance contract as well. Or is there another feedback loop that can be used to ensure that I'm actually performing and not just reporting to myself? If I have 10 functional areas and I'm reporting to myself, then that becomes an issue. Yes, performance contract I'll fulfill, no problem. So co-creation, jojoing, the chart is very rich. I'll stop.
Jojoing is the word for the day. Thank you, Mr. Zake. Taxpayers, customers, clients, whatever we call them, I think that's what you're saying. The point is that we should have both, we should balance both the formal and informal interactions and then derive a conclusion from that. But I want to bring in Director Mukesh Chandra. I have a question for you from our delegates, and they ask, Teams is meant to increase efficiency, which is reduced costs of tax collection. Do we then look forward to a reduction in the VAT rate owing to that efficiency? Very direct question.
Thank you, Wageni. I think that there are two parts to that. One is the efficiency side. And if I can expand that a little bit to say, the efficiency is not only in the mechanics of filing, but also in terms of collection of what is due. And I would just like to share what we have seen in the Revenue Authority. You will have heard of missing traders. And it's something I'd like to just briefly touch on, that in the ETR system, taxpayers, certain unscrupulous taxpayers, if I can say, found ways of generating fictitious invoices without supply of any underlying goods or services. And unfortunately, other taxpayers were taking those on and claiming as inputs. And underlying all of that, there were no transactions. Now, that was effectively creating false inputs and therefore understating revenue collection. If that kind of mischief is overcome, and as I mentioned, if the tax gap is narrowed, we could collect another 300 billion of taxes in a year. Now, with enhanced revenue collection, I think the government and the National Treasury then has more scope of considering whether taxes can come down or whether taxes can be spread wider. If the pot is big enough, then there are all the opportunities of considering from a national perspective, and of course this is the preserve of the National Treasury, on whether there should be some tax rate reductions. So the efficiency and enhanced collection could create a foundation or a platform for tax rationalization. And you have seen in other parts of the world And it's obviously the wish and desire of every taxpayer to bring down the tax rates. In other parts of the world, through increased efficiency, they have done that in some measure. If we can continue working on efficiency and with the collaboration, and as Justin says, co-creation, where the civic responsibility of paying taxes is fully appreciated, and we avoid the tax frauds, we could create sufficient revenue generation to possibly create the environment for tax rationalization. Thank you, Vageni. You're on mute, Vageni.
Sorry, sorry for that. Thanks, Director, for clarifying. I will say thank you for clarifying that it's not a linear activity, that there are actually very many dynamics and components for that decision to be derived. So thank you for addressing that so succinctly. Allow me to bring in Commissioner Rispa, and you have a question. And the question, so the person says, my question is based on the fact that the economy is truncated with a huge part on the cash economy, which is the informal sector, they put it into brackets, and these businesses lack of visibility of business activity. What are the legal policy and analytics that have been put in place to include them? I think the questioner is asking the businesses that we have perhaps no sight of, quote unquote, what is being done to bring them to the fore. I think that's what the question is about. For you, Madam Rispa.
Thank you again, and thank you for the question. I would say sometimes we look at that as an elephant in the room, and noting that it is really not an issue that is unique to Kenya. For those who are there, even in the last tax summit, I think last year or the other year, we did bring in panelists whom, from jurisdictions where we thought they have actually hacked it, managed to address that issue of what we call informal sector, because to be honest, sometimes there's a very thin line between what is truly informal and what is not informal. So then you're left to, a number of people will be left with their devices to define what even that informal sector is. Is it that it's not a business establishment with brick and mortar? It's not an employee or sole proprietorship. What is that informal sector? But coming back to the question, I think it's more about, as it is now, we are looking at widening the tax base. A big issue as far as our corporate plan is concerned. And what we see is that when you widen the tax base, then it means ideally, much as the director said here, that yes, it's not linear. You cannot say I'm putting this in and the outcome is obviously the other, but we're looking at a place where we widen the tax base and bring in more people into the tax base. And when we widen that, then it means the load on those already paying taxes then reduces. And I think that is the ideal. So different ways of widening this tax base. We are aware of the fact that a number of businesses have actually moved from brick and mortar, which is the traditional way of doing business, to the digital space. Getting into that digital space, again, part of widening the tax base. Looking at system enhancements to be able to reach more people, again, widening the tax base. But again, going back to the earlier point that was mentioned, is that we truly believe there are a number of taxpayers out there who truly want to honor their civic duty of paying taxes. That truly is our belief. And that is why in some instances, and I think I've actually flipped through the chats, and I see some saying, we want to pay, we want to get this information. And even without getting to that question, just to answer, I think there are 2 or 3 questions around that, saying that if you can access our iTax, if you can access our website, there's a lot of information that you can get there. And there are very many channels. I think the contacts are put there on, if you want something more, what else can we do to facilitate you? And even as we're going into this digital space, we are trying to simplify it further, not just looking at the big businesses, but then there are the big businesses. And again, even looking at the relationship management model, our model is in such a way that, yes, we cater for the big, we cater for the medium,
and we cater for the small, and we cater for the micro. So trying to have an approach where you accommodate everybody. Now, stepping back again and looking at the bit of just addressing the same thing of informal and bringing more people into the bracket, is that the compliance, I think most tax administrations strive to mobilize revenue through voluntary compliance. That to me is ideal. And all we do is sit and facilitate you to do that. And you'll be surprised, and I mean, pleasantly surprised, and I think Director Mukesh alluded to that earlier, that as we measure the level of voluntary compliance, 92% are actually voluntarily complying. So perhaps a small bit, 8 to 10%, where I like sometimes loosely saying that maybe can't pay, won't pay, catch me if you can. So it's a small group, but again, also use a lot of effort in trying to bring those onto the bracket. So what are we doing? As part of our tax-based expansion, sensitization, 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 awareness creation, engaging our taxpayers, preparing, making, putting in place platforms, saying that we are here to be reached. And as it is now, moving towards that service delivery, I've also seen some concerns of questions being asked over and over again. And I think for me, the assurance on my own behalf, on behalf of senior management, and even the board, is just to reassure our taxpayers that our intention, our plan is, as we move into from an authority to a service, is to facilitate, reach out. We are here to facilitate. We are here to simplify and make it easier for you to interact with us. And in doing that, as we're passing out this information, then we're able to reach more. This then again goes back to the thing of leaving no one behind, carrying everyone along. Again, also in the chat, I noticed someone saying that all those who should pay so that then our country becomes self-sustaining, because really that's everyone's dream. And as you're doing that, as you're delivering on your service, on your duty, on your civic duty of paying taxes, we bring in more people. Where you have information to give us on some of these people, who then can we reach? How can they be facilitated? There are various channels as to how we can do this, but we are approaching this to tax-based expansion, and very many things. That is our intention, and we are always open to feedback. What else can we do better? And in some cases, and I think also Sasake alluded to it, that sometimes you sit here in a tower and believe what I'm doing is a perfect way. But you can't keep doing the same thing and it's not giving you the right results. And you still say, let me still continue. Probably down the road it will work. No, we change our way of working. We do not have the monopoly of answers. And that's why we are open to listen, to engage, and hopefully do even much better. Thank you.
Thank you, Commissioner Rispa. You know, we could listen to you all day. And thank you for helping us circle back to what Mr. Zake, I see you, Director, what Mr. Zake called the risk approach differentiation, where we have the high-risk taxpayers, medium-risk taxpayers, we have the key taxpayers, and the low-risk taxpayers. Jean-Louis and Swalehe, I have a question for you, but before I get to you, may I please just listen to Director Mukesh, and then I share with you your question from the members. Go ahead, Director.
Thank you again. I think just to reinforce what Rispa has said, the engagement, the levels of engagement have increased significantly in the last 3 or 4 years. There's a very strong message, I can assure taxpayers, from the board to management, that we have to engage with taxpayers in a collaborative manner, understand their issues, and then help find solutions to that within the framework of the law. We must always remember that the law is very clear. There are certain things you can do, and there are certain things you can't do. Quite often, and I see on the chat a lot of complaints about unable to reach officers, responses not coming back in time. It's a problem that we are all fully cognizant of and driving very hard for the culture to change. And there has been a big shift in the culture. And one thing that, one big step that took place about a year and a half ago, we now have the iWhistle platform, and taxpayers are encouraged to report any instances of improper behavior by officers or indeed taxpayers through the iWhistle platform. It's totally anonymous if you choose to be anonymous, and if you choose to state who you are, that's also possible. But then anonymity is assured. And we have seen in the last 18 months, very many cases been reported of taxpayer non-compliance, and then the teams are able to follow those up. And also staff improper behavior with taxpayers. And there is a mechanism within KRA to investigate all of those and take appropriate action. And that is happening. So taxpayers our customers are encouraged. Where do you find a challenge there? Use the platform on reporting. If, on the other hand, responses are not coming through, you can also escalate it to various levels within the organization. And please do that. It'll help our engagement. And there is a big thrust on improving engagement and communication, and that will continue. Thank you.
Thank you, Director, for that, for just giving us the 360 view of what KRA is doing in terms of compliance, both internally and externally. I'd like to bring in Jean-Louis. I look at my time and, oh, it's fast spent, but I need to hear Jean-Louis and Mr. Swalehe. There's a question for the two of you, and as I bring you on board for that question, I'm informed that there's a delegation from Zambia that is joining in, and so Zambians, hello, habari zenyu. That's the Swahili way of saying, how are you today? And thank you so much for joining us. To you, Mr. Jean-Louis and Mr. Swalehe, here's a question. It is so costly to acquire and service ETRs and is a factor of non-compliance. How has Rwanda and Tanzania managed this and share learnings on their implementation? I don't know whether, Swalehe, you want to go first, and then Jean-Louis?
Yeah, thank you very much, the moderator Wangeni, for this question. It's really a cost for electronic physical devices to the taxpayer. We really understand it, but as I already said, that it's a very useful tool to both the taxpayer and the authority as regard to keep on the proper information records. Now, to take into consideration the issue of cost, Tanzania Revenue Authority is now moving from the physical devices to virtual devices, whereby we have enhanced the electronic filing system to allow the use of laptops, mobile phones, with smartphones, and the other devices which are ready which are compatible to the individual systems to use for a recording of the sales. For example, now the petrol stations, they are no longer in using the physical device, which is very expensive. They have to join their systems with the computers to ensure that they issue the physical receipts. We have introduced such system also to supermarkets, and now we are moving to small traders, whereby they will be simply having their simple systems, but join to their smartphones and the computers to be able to record their sales and issue the tax invoice. So by doing so, we'll be refraining from the increasing the cost. We'll be reducing the cost for compliance for taxpayer to use the physical to use the system to account for their sales. So I'm sure in no time the taxpayer will be free from the high cost of using that system, and for sure the cost will be minimized to the high extent. Thank you, Madam.
Okay, thank you for sharing the Tanzanian experience. Mr. Jean-Louis, how have you managed costs of implementation of the ETR? But you call it BDM in Rwanda.
EBM, thank you very much.
EBM. EBM.
Exactly. So when we started this program, as I said, back in 2013, we envisioned EBM to be a device that comes with a certain form of firmware that is a program which is embedded into its physical element. And as a consequence, of course, that was a very difficult situation for us, though it helped a lot and it increased actually the VAT collections by at least a marginal 4%. At least it was very complicated to update those solutions. So we moved on from a hardware-based to a software-based solution, which is our second version of EBM. And that one came after we had recognized that there's not a one size that fits all kind of solution to this issue. Our taxpayer segments are very different in terms of revenue, capabilities. So we decided to offer a wide range of solutions that essentially constitute electronic invoicing systems. But mostly we moved from, the big shift was to go from hardware to software. And those flavors, of solutions, if I can summarize them, was we offered a version of a software that works as an invoicing system, which includes in itself a sales data controller, which sends us all the information. It sends information to the tax administration. We offered it as a software that could be installed on any Android platform. For example, on your smartphone, on any tablet that uses Android. We've got that one. We even started with a software, by the way, before we even moved on to Android, we started with a software that could be installed on a common Windows-based computer, so that we could allow, I would say the great majority of computer users in Rwanda, at least more than 90%, are using Windows-based kind of devices. So we also offered it. All of these were offered for free. That means they were developed and they were offered for free. Now for taxpayers who had their own customized invoicing system, we came with another innovative solution. We offer them a virtual sales data controller, which is a software module that they can install on their premises and which can connect to their invoicing system and send to us the information related to the economic transactions that they are carrying out. We've introduced as a last solution the possibility of an online invoicing system. In other words, we give access, we give credentials to people to access an online platform where they can create their tax administration recognized invoices. With that, we believe that we have tried to address different kind, but all of this, of course, is offered without any cost. The only cost comes at the hardware level, because yes, of course, they have to invest some money for their connection. Yes, they have to invest some money for having at least a smartphone, a laptop. But what we've done is, given the fact that our tax base is still relatively very small, we've offered for the first comers at least a huge number of point of sale devices, which are small tablets with the Android operating system, which already have the solution on it. So we believe that by doing that, though we may not have covered all the potential users of the invoicing system, we believe that we've covered the most probable to enter, those who are most probably going to enter into our VAT net, because we did some analytics before that, and we selected, of course, as the priority among the non-VAT registered taxpayers. I have to say that for all the VAT registered taxpayers, they had the economic muscle, the financial muscle to provide for themselves devices. But for the small ones, that's where the pain is felt. We distributed devices, point of sale devices, and it's been a good success until now. We are looking forward to seeing the kind of analytics we are going to develop, and that will help us to improve on our VAT compliance program. I'm trying to address only the issue of price here, but I think that gives you an overview of what we did. Thank you.
Yes, it does, Mr. Jean-Louis. And as you can see, it has elicited a lot of questions. And I wish we had a lot of time to just dissect just how that framework really worked, because cost at the end of the day has to be borne by someone somewhere. But because in the interest of time, we don't have the time to, and I see Mr. Swalehe's hand is up. So allow me, lady and gent, to bring this session to a fantastic close, but I will ask as we close, we're going to go round. Mr. Swalehe, we're going to start with you, so don't worry, please hold your comment. We're going to go round, and I would want you, as your parting shot, to share with us what your revenue prospects are post-implementation of the technology for VAT compliance from each of your countries. And of course, we would like to hear from Mr. Zake his overall parting shot. So I'm going to start with you, Mr. Swalehe, and then I will go to Mr. Jean-Louis, and we shall go and finish with Mr. Zake. Then after, we'll take a screen grab, and our session will come to a beautiful close. Mr. Swalehe, to your question or comment first, and then you let us know what revenue prospects TRA is projecting post-implementation, 100% implementation of the technology.
Yeah, thank you very much for the question. And in fact, the interest of the government is to see that the VAT has the topest contributors to the revenue. As already said, that now we are 30%, but we think it should be the leading one in top of other tax sources. Yeah, now, in fact, we are as now we are moving. Our interest is that to see that the taxpayer themselves, they feel free to file their returns. The minimum time to spend toward the filing should be minimized to the large extent. And in fact, the challenges which they are complaining in terms of rates, in terms of number of thresholds, all of this, as the government is keen to address those problems. Yeah, and now we are improving improving our systems to ensure that the real monitoring of the taxpayer rates is really on a real time. We now focusing to integrate the TRANSIS, the system of importation, toward the EFDMS, so that whatever the importation is done is reflecting in our EFDMS, so that we can have a control on the importations. As we all know, the VAT work on the principle of output inputs. So if you are unable to monitor the inputs, it definitely won't be able to succeed on output. So our mission as an authority is to ensure that we have a strong system that will capture all the importations of the trader, and all the manufactured products should also be captured, so that whenever items as produced or manufactured or imported are in the database of the Tanzania Revenue Authority. By doing so, we'll be on the position. We think that by doing so, we'll be on the position to ensure that taxpayers are comfortable in complying with the VAT, and the government itself is well equipped to ensure that whatever is required to be collected is collected. Thank you.
Okay, thank you, Mr. Swalehe. I was looking for some revenue prospects, but I think you've covered it well. Let me ask Rwanda, Mr. Jean-Louis, what are your revenue prospects post-implementation of EBM?
Well, as I said, I did mention a bit that the most recent study that we had shown a bump in the marginal bump created by the introduction, equivalent to approximately 12% of the revenue collected. So probably like in most EAC countries, our VAT contribution to the total envelope of tax collected is around 32-33% yearly, year on year. And what I want to say here is we have to keep in mind that technology doesn't answer all. Tax administration doesn't answer all. There's also the policy side, which we did not cover very much here in our discussion. So in terms of policies, maybe if I can quickly brush on that, we're looking at introducing a program called the VAT rebate program, which is an incentive program basically, in which we were going to, probably you're most aware of it, most of you, in which we're going to give back a certain percentage, approximately 10% of the VAT collected, back to the consumer who actually pays that VAT, as a way of incentivizing them to ask for invoices when they go and carry out transactions in a shop. So why do we do that? It's because we want to spur that culture change that we've heard of. Some of the challenges that we are meeting in the implementation of the EBM program, which we did not touch here, cover the lack of adoption, the real adoption, that is not only using the EBM invoices, but actually inputting the truthful information on the invoice. Issues of underpricing exist. Issue of non-issuing the invoices themselves exist. So I guess our colleagues in Kenya or in Tanzania will feel like I'm speaking their mind, because it's a reality. We're human beings. Behaviors in Rwanda will certainly be the same in any other country that has a similar situation. So what are our prospects? We want to introduce the VAT rebate program. We want to extend VAT on digital and online services, following the example of Kenya. So we are currently very much engaged with ATAF on a study to see what would be the impact of such a move, policy side. So another part includes the improvement of our validation controls. I just brushed a bit quickly at the beginning, but what some of the controls that we want to introduce will go at the level of the items within an invoice. To this date, though we have a real-time control of the truthfulness or genuineness of an invoice when it's declared as an input, or whether on the side of the output when it's omitted as part of the output as a way of reducing the net VAT to be paid. Still, let's say a construction company that produces a genuine invoice that contains only items related to food, like rice. They bought sacks of rice. How do sacks of rice intervene as input in a construction company? There are certain correlations which do not make a lot of sense depending on the kind of industry we're dealing with. So we intend to introduce machine learning and artificial intelligence as tools to improve on our analytics at the item level, and being able, within the context of a given invoice, to tell to a certain taxpayer that some inputs that they've declared need to be justified. Not that they are necessarily wrong, but at least we need to come to a common ground and an understanding. So we are building we're currently building that kind of program where we would have our controls, not at the invoice level only, but even within the invoice at item level. So what will be the consequence of that? I believe a huge growth, first of all, in the number of invoices that we are collecting. So if we refer to the examples that we've seen from other countries, similar economies, one country in particular that had spurred actually the introduction of the VAT rebate for Rwanda was Mongolia, where they were introducing that program for themselves, they observed approximately a tripling of the number of invoices which were collecting on a monthly basis. So, of course, by widening that overview, that the net of invoices that we are collecting, the information that we are receiving, because now people start asking for those invoices to the sellers. So we believe that, I'm not going to say that there will be a direct proportionality of tripling the VAT, but we do believe that there will be a subsequent bump in an increase of VAT generated. But remember that all of that is we have to take into account the 10% of the VAT collected that we have to give back to our citizens for their participation. Now, that program is only applicable to business to consumer operations, not to business, of course, because those are already incentivized by the VAT input-output mechanism that already exists. Now, we are trying to put so many things in 2 minutes, but I hope I didn't take too much time. In a nutshell, I'm not really able to put in numbers how the bump will be, but we are very, very, very optimistic in seeing that these measures, both the policy and the administrative measures, are going certainly to increase our VAT envelope collected every month. Thank you very much.
Actually, Mr. Jean-Louis, I wish we had more time. We'd discuss the incentivizing program that RRA has, because from what you're saying, there's a lot of incentives that you have put in place. It would have been great to hear whether those have worked and at what cost. But maybe that's going to be a conversation for another day. But thank you so much for sharing your prospects. I want to come to Kenya, come back home and ask Madam Rispa. What post TIMS, the tax invoice management system, what prospects, what revenue prospects are we looking at? And then Director Mukesh will share with us his parting shot on the general future. Madam Rispa?
Thank you again. As it is now, we are doing about 26.3 to 27 to the total tax envelope. And when I hear our colleagues on the call talking about 30 something, I'm challenged at the same time, wowed. And I do believe it is something we are capable of doing. Right now, VAT, when you're looking at it to the share of GDP, about 4% or slightly below. And so with this bump, we are looking at 6%, and borrowing also from Rwanda. Because what I believe is that even as African countries, we have a lot of capability just amongst ourselves, borrowing and reading from each other what our neighbors across are doing. Starting right from East Africa, there's a lot of potential, a lot of information that we can borrow from each other. Going back to the keynote speech of not working in silos, not just even as amongst ourselves, even as a country, borrowing best practice from others. So Rwanda has been here. We have been planning to visit as well. And just to say that you might be here thinking that in your small cocoon, you're doing perfectly well, but your neighbor next door has already done it, has made the mistakes, and is willing to help you skip the mistake and get to the doing bit. So that is what we are really looking forward to, getting onto the 30s of a contribution to the total tax envelope. And as it is now, if there's one tax head that every single person is paying, is VAT, even to a small child on the products that are not exempt. Everybody is incurring VAT. So why then shouldn't it be the tax head that performs the best? So that again remains a challenge to us. And in looking at this, and maybe it goes back to an earlier comment that was made by Mr. Zake on interlinkages, that something from Rwanda, a comment that said, you may have a small base, but the VAT is working very well. So again, interlinkages goes back to cleaning the tax register. What then does it give you? Quality output. So there's so many things that interlink. Zaki, I've gone back to class and I can see it's working well. So yeah.
You're a good student, Madam Commissioner.
I have to prove to the teacher, to the professor that it worked. So the comments have come through, the concerns have come through. We've taken them graciously. We are taking the challenge graciously, but we do hope that then we'll get to that level our neighbors are talking about. The comment again from Rwanda, I think it sounds like what we had also thought about. A number of jurisdictions call it, I think, tax lottery. It's a lottery program. Yes, that one, as an incentive. So again, even as we're getting to your level of EBM through our teams, you never know, we'll be looking out to borrow on what are the mistakes that you have made and how can we then navigate through that. But I think to sum it all is that it can be done. We believe it will be done. And not just being one-sided, working together with our taxpayers, our clients, and I think from a facilitative approach, and maybe just as I probably exit the stage at this point, is just to say certain things in life, as I always say, are, inevitable. Death and taxes. Change is imminent, right? So death and taxes is a must. Tough job, someone has to do it. We are the ones to do it, and we are doing it very graciously. And more importantly, change is imminent, and those who think it cannot be done should then get out of the way of those already doing it. Thank you.
What a way to punch it. Thank you, Madam Commissioner. I appreciated that. Okay, let's wrap this up with Director Mukesh. Give us the overview. What does the future look like for Kerry?
Thank you again. The future, I think, if I say it's very bright, I would say it's very bright for the nation in terms of, we've transitioned recently through elections and so on in a very peaceful manner. And I think that has inspired a tremendous amount of confidence. So the future for our nation is bright. Global economic situations impact everybody. But I think if we put our minds to it, we'll go a long way. As far as KRA is concerned, I think the journey on service has started in a very earnest manner, and that will continue. And that delivery of service is also anchored on automation, on making it easier to do what is required for taxpayers to file and be compliant. I think the other comment I would add is you can see now in textbooks in schools, there's reference to tax. The civic responsibility of tax, of individuals to pay tax is beginning to be brought about in our education system. And that's very important. And you will see in various textbooks, there is reference to why you should pay tax. And I think that starting at that level is very important. There's a soft side that we must come back to always. There's the hard side of filing compliance, but the soft side is listening to taxpayers and communicating effectively. And that's a journey, and it's an ongoing journey. And the more we can do in that regard, I believe the authority will be able to collect more and have more satisfied customers. As regards kind of the automation, TIMS is now very much in process. As Rispa mentioned, 35,000 customers have implemented. More will continue by the end of this year. But there is work going on also to make it easier to use a web-based system eventually, or an app system. So there's work going on to develop those as we move along. And finally, also there's work going on to bring in more taxpayers. If you look at the National Bureau of Statistics, it says we have 18 to 20 million employed people. We have 6.5 million PINs. So there's a gap there. And we need to narrow that gap in terms of employed people as per the National Bureau of Statistics to the ones on the KRA register. So there's work going on to encourage the informal sector to become part of the tax-paying community. So with all that work going on, the future is bright. Thank you.
The future is bright. Thank you, Director Mukesh Chandra. And finally, but definitely not the least, allow me to bring our keynote speaker for this session, Mr. Justin Zake. What have you heard? What is your final parting shot and perhaps your final challenge? Because I can see it. I know you want to throw one at us and we're ready for it.
I'm not going to punch such as Rispa did, but I can agree with Director Mukesh that the future is actually bright. It's how we take it, how we use those opportunities. That's most important. I've heard Tanzania and Rwanda have done things. Please, let us not reinvent the wheel. They've done these things, they've been there. So what if, I'm just being a little bit provocative here, what if Kenya Revenue Authority takes a segment of their taxpayers and introduces some of the things that Rwanda and Tanzania have done? Just a segment, pilot it. I told you I'm a Scrum person. Pilot it and see how it can be rolled out. We don't need to wait for years to get these things done. No, let's not reinvent the wheel. Sometimes, as the auditors general tell us, we have negatory expenditure. So we go out and source this $1 million system when something has been done for $20,000. Even in my work, I've seen that happen. Somebody asks for millions and I say, sorry, I can do it for 50,000. Come on, let's not reinvent the wheel. People have done things. How can we leverage on them, but avoid the bad habits? You know, so that's one. This has been an intensively rich discussion. We've now started co-creating. If you look at the chart and the people who are on there, 2,400 people, we're having a conversation. And at the end of the day, I'm just thinking widely or broadly, why can't we have this kind of platform? Okay, this is a summit. Why can't we have a continuous conversation on a particular platform like this? Within KRA, within Kenya, across the region? You know, what about globally? I can give you an example that, you know, my secretariat has only 5 people, only. But we have a global reach of about to about 5,000 others, including Kenya Revenue Authority. And we have created a platform, a community of practice. So, Director Mukesh, why can't we have a community of customers who can come back to us continuously? The chat is filling up. There are issues, and we can respond very, very easily. So for me, that would be, you know, the second issue. The third one, let's minimize intra-agency, intra-tax administration discordance. Minimize it. Let's collaborate more. Let's support each other more. When I see a RISPA, you know, doing something and I feel it's not right, I should be free to tell RISPA, I think we could do something different. And RISPA would be responsive to this, shall we? So let's not reinvent the wheel. How can we have this conversation continuously on a platform, customer platform? And at the end of the day, associate, collaborate, and not compete with each other. Well, again, you've done a wonderful job. Wonderful job of moderating. And I thank you very much. I thank you all as organizers for inviting me, even though you didn't expect me, but I've been here. So I'll hand back to you. Thank you very much.
Thank you, Mr. Zake. You know, we started this conversation when we called you Mr. Then in between, you were baptized to Doctor. And then when we finished, Commissioner RISPA called you Professor. So I think we'll stick with Professor Zake. Thank you for the challenge. And just reminding us at the end of the day, we need to move from competition, whether healthy or unhealthy, to collaboration and eventually co-creation. Ladies and gentlemen, man, this has been an amazing conversation. Unfortunately, we need to wrap up because we have our next discussants who are waiting to unpack the next topic. But before you leave, may I request that all our panelists, our discussants for the day, our keynote address, Mr. Zake, our Commissioner General for the Kenya Revenue Authority, and Mr. Ambassador Dr. Francis Mudhaura, our KRA Chairman, to please put their videos on so that we can do a screen grab. The media team will be leading us in taking the screen grab once I see all the very handsome and beautiful faces on my screen. Great to see you, the director. Yes, I can see CG and I can see Ambassador, I'm not sure I can see. All right. I think we can take. Okay, if you can see me, please wave so that they can know that. All right, there you are. Okay, thank you very much. And I think you can look directly into your camera and smile as we take the screen grab. Excellent, there we go. All right, so thank you very much. That was session one. We had about close to 2,400 participants. We are taking a coffee break. It is important for all of us. So just 2 minutes coffee break. Do not go anywhere. We're coming back with the conversation. We were talking about enhancing risk-based compliance through technology. Now we move on and discuss through data. Data is the new gold. So how are we implementing? You want to stay here with us? We'll be back after you grab your cup of tea. I have mine here, and then we'll be back in about 2 minutes or so.
I would like to assure you that KRA is committed to listening to our customers. You know, today I had a new word of brand obsession. Customer what? Obsession. And I asked myself whether my customers I'm going to be, am I the one to be obsessed with the taxpayers? It was quite a new terminology. And I saw that, you know, while it is easy to sell goods and services and be obsessed, like we are all obsessed with our phones and the internet and social media, because that is truly obsession. We need to make sure, I hear there is a country, is it Sweden? I think so, where taxpayers are actually obsessed with the tax authority. They love it. They always rate it as number one. Year in, year out. So it is possible to do so.
The paying of taxes by all of us is not an option. It is not something we choose. It is something we must do if we have to secure our independence and our democracy.
As a nation, we are able to meet our sustainable development goals because of taxpayers' hard work and their thoughtful efforts in being tax compliant.
Taxpayers remain our most valued customers. We continue our journey of simplifying tax procedures through the use of technology, including enhancement of the iTax portal. KRA's customer satisfaction journey is also anchored on improved trade facilitation to enhance tax compliance.
Tulipe ushuru tujitegemee.
Tulipe ushuru tujitegemee.
Tulipe ushuru tujitegemee. Yeah.
Tulipe ushuru tujitegemee kwa sababu hiyo ni haki yetu, ni haki ya Mwanakenya. Na lazima tutimize wajibu wetu ili Kenya yetu iendelee.
All right, so welcome back to session 2 of the annual tax summit. What riveting conversations that we had in the morning, talking about technology and risk-based compliance. How do we use technology to enhance risk-based compliance? Esteemed delegates, we are on to our second topic of the day. And right now we're going to have a conversation on data. We've had data and big data as the buzzwords, but how do we use data and big data? How do we use analytics to drive compliance? I'm excited about this panel because we've got 2 gentlemen and 1 lady who are in this particular space, and they're going to be sharing with us their experiences. Ladies and gentlemen, allow me to introduce the discussants of this second topic, still under enhancing risk-based compliance. The first off is our lady, Miss Yvonne Wafula. Miss Yvonne Wafula is the Chief Manager, Corporate Data Office at the Kenya Revenue Authority. Yvonne has over 15 years experience in the implementation and support of tax administration systems. She has been involved in supporting the development of tax administration systems through the translation of business requirements into appropriate technology solutions. And she is passionate about the effective use of technology in achieving business objectives. Our second discussant is Mr. Shadrach Anyuo. Shadrach is the Senior Solutions Architect at Amazon Web Services. And he is responsible for helping customers navigate the digital transformation through adoption of AWS cloud services. He also works with customers to ensure that they adopt best security practices while operating in the cloud. It will be great to hear from Anyuo how we have security with cloud-based solutions. And the final discussant is Mr. Brian Nyangena, who is a scholar at the Institute of Mathematical Sciences at Strathmore University. Now, Brian is a practicing scholar and a teaching fellow at the Institute of Mathematical Sciences, Strathmore University. He is passionate about development, and he is a subject matter expert in data science and machine learning, with experience in statistical and prediction modeling for finance, renewable energy, and agriculture. What a panel we have for you. I'm excited to hear from them. Now, ladies and gentlemen, KRA aims to adopt modern technologies such as artificial intelligence, otherwise known as AI, machine learning, ML, electronic invoicing. I think we had a little bit of that discussion in the previous topic, and blockchain to ease the integration of strategic partners and therefore facilitate acquisition of third-party data to support and enhance tax compliance. To start us off in this discussion, we have none other than Yvonne to take it away as she tells us how KRA is positioning itself in terms of data analytics, machine learning, and artificial intelligence. Good morning, Yvonne, and please go ahead.
Good morning, Wageni, and thank you. Good morning, everyone. The Commissioner General and Commissioners present, the KRA Board Chair, and the directors present, all panelists, colleagues, and distinguished taxpayers on the call this morning. Good morning. It's my honor today to share KRA's journey and learnings in the use of data and analytics to drive tax compliance. The data age, so to speak, brings with it some challenges to tax administrations, and KRA is not an exception to this. So what are the challenges that this age is bringing to us as a tax administration? For one, there is pervasive automation. There are new ways of doing business. Business is becoming more complex, and there's a lot of data that's availed. And with the complexity in business, so does the complexity in taxation grow. As tax administrations, we are looking continually to gain insights from data that's available to us to drive compliance and also improve our performance, get value for the work we do, and target as much as possible to bring in the revenue that you need to bring in as a tax administration. As the data grows, there's always a challenge of how do you manage this data? Do we have the right data? Is it relevant? Is it of the right quality? What are the issues surrounding it? With the growth in use of data, there is upcoming legislation and safeguards around data protection and privacy. How are we as a tax administration addressing these challenges on a day-to-day basis? Because this also opens the risk for litigation in case we are non-compliant. So these are the challenges that as a revenue administration we are looking at when it comes to the implementation of data and analytics to drive tax compliance. So for the KRA, we have two basic building blocks as we address these issues. One is the capability, the platform, allowing us to use the data that's available. These are the tools, these are technologies surrounding our ability to use this data. A very key building block to us being able to utilize data is the governance. What is the culture of the organization? What are the policies? What are the processes in place? Because governance enables us to unlock or realize the true value of data. So it's not just about the data or the technology, but also the structures surrounding how we can use this data, who can and how we can. So as an organization, we are working on these two fronts to ensure that we unlock the true value of data to drive tax compliance. Our data analytics platform is known as Insight. Our data journey, maybe just to mention, started way back in 2016, and we have been progressively building the capabilities around it. The data platform is not one solution, but more of a mix of, or rather a collection of tools that offer different capabilities, because as we learn with data, there's no one size fits all. Different stakeholder groups have different needs. So whatever platform we implement has to cater for all the varied user groups, from basic users to more advanced users. These are all present in an organization such as ours and other tax administrations. But at the heart of our platform is the data warehouse. This repository where we collect the data, we collect information, and from there we can build all these capabilities that support or rather help us to drive compliance with data. So as KRA, we have about three broad groups of data products that you're already using. One is the expert risk models, which we build around rules and using experiences of our auditors and seasoned compliance officers to be able to profile taxpayers, score them, determine who is the most appropriate to follow up. As you said, we have to apply a risk-based approach. So we target, or rather seek to get the high value cases, and those are the ones we take to audit. So these expert risk models help us to identify such taxpayers and then apply the necessary compliance efforts in terms of managing our risks. Over and above that, we are also implementing more advanced, I'll call them more advanced models, where we are looking at prediction, we are looking at forecasting, fraud detection. Our business has a lot of risk around it, and so we are building models that can help us even detect these schemes and detect the risk schemes that are present in our business. A very basic capability of a data platform is the ability to provide reports. I think for us, this was a key learning. When you started implementing our data project, we thought we'd go straight to the advanced models, but we learned that we cannot fly before we can crawl or walk. So the data platform that we have also provides us with the necessary reports to support day-to-day operational decisions, coming from the basic operation reports to more tactical and strategic reports, available when and how our various user groups need this. What is very important when implementing a data analytics project, it must be aligned to strategic goals. What do we as an organization seek to achieve? Data is the new gold, data is out there, everyone is speaking about data, but what are we as a tax administration seeking to achieve with the implementation of these products? First and Foremost, we seek to improve tax compliance. So we build products around selection, around risk identification, around fraud detection to drive the compliance. Another objective that we as KRA have, we seek to increase customer satisfaction. So what are we doing about this when implementing the analytics products? We look at automation of, I'll call them SLAs or KPIs to deal with, that have to do with the customer. We must track this so that we are able to offer our customers the right experience, and in so doing, we contribute to the organizational goal of customer satisfaction. As an organization, you also want to improve our effectiveness. We do not want to be caught off guard. We want to know what is likely to happen. Can we predict accurately if there's a change in a rate, for example? How is that likely to affect our revenue? And so we're building models around this, helping us to forecast and predict. And key for us is also to enhance our staff productivity through the consolidation of data. We significantly cut the time needed for analysts and people who deal with reports, the time they need to just collate and collect this information to come up with reports or draw insights. So as part of the data project, we're seeking to enhance our staff productivity. To date, I think we've cut the time that it takes just to collect information by almost 60% in the last 3 years. So we are releasing our staff to do more useful work, quote unquote, which is to explain the numbers and not just to gather the data. So what is it that we seek to do beyond compliance? I think I've talked a lot about compliance, helping us raise revenue, know what to do, address our risks. I think for us, data can also be used to improve our customer experience. For one, we can learn our taxpayers better, segment them for customized services, just by understanding their behavior, knowing how to categorizing better to give them a better experience in terms of education, targeted marketing. You cannot assume that one size fits all. We must be able to understand different segments of our taxpayers and design products in terms of education, in terms of marketing that speak to their need. And we can use analytics to just help us understand our customers better. We're moving on to real and near-time analytics to improve our service delivery. We want our customers to be able, in the future, when they file, for example, a refund claim, we are able to quickly assess the risk and know if this refund can be approved or not. So these are the enhanced capabilities that we as an organization are building around improving our customers' experience. Now, as I spoke earlier, there are two main building blocks when it comes to implementation of data analytics. There's a capability, and very critical is a governance. As an organization, we have a very structured approach in how we manage our data and information assets and the structures surrounding that. We are looking at, based on our business goals, what do we want to achieve? We realize that there are key enablers and also areas that we need to focus on. Some of the key enablers for us is having deliberate structures or I'd say organization structures that deal or address issues to do with data. For example, at the KRA, we have the Data Governance Council. This is a team of senior managers drawn across from all the departments in the authority who are looking at the data landscape. They're looking at the needs moving forward, not just the current ones. What do we as a department, for example, want to achieve in the next 3-4 years? What are the issues you're addressing now? So we're having deliberate conversations on data to do with quality, to do with the staff capacity. And these are discussed at a very high level so that it informs the prioritization of data initiatives by the various stakeholders implementing these things. So we must have those key, I would say, support structures that are looking forward and within, and also helping us to advise investments in data. For us as an organization, we know that data quality and security management is very key. As a we seek to be a data-driven organization, data being a raw material, we must focus on the quality, how good is it fit for purpose, and the security. For us, also, there's a big push towards improving the data culture in the organization. We found that it is it's one thing to bring in a technology, bring in a capability, but it's a whole other conversation about having your people move along with you, having your people understand what data can do for them. Yeah, how do I use it? How is it relevant for me? And what is my part in ensuring that we maintain the quality and the trust? Because we know that our staff interact with taxpayers on a day-to-day basis, and they're also contributing to producing the data that we need then to do the analytics. So it's important for our staff and various teams within the organization to understand their role they have to play in ensuring that the data that comes into a system is fit for use and also that can inform decision making. So our focus areas are data quality and management, literacy and culture, and availability. But today I'll just talk about, I'll touch a bit on security and quality, what we as an organization are currently doing. So for us, data quality is not a project, it's a process. It is a continuous activity that we do. And it's two-pronged. We look both forward and backward. Looking forward, you're looking at what are these data requirements that you have and what are the critical data elements. In as much as we have all this data coming in, we have it for our purposes, there are critical data elements that we need to track. So we profile them, we make sure that we are monitoring their quality consistently. And by doing this, you're able to inform even changes that need to be made in how this data comes in, so that at the end of the day, you're not having to address a quality challenge. Because we found out that cleaning or implementing a project that looks backward, which is what we call a data cleaning project, can be very expensive. But in the same vein, there are those issues that must be corrected. So as an organization, we are also looking back. What are these issues that need to be addressed so that we get our data to the right quality? But all in all, for data quality, we've applied a two-pronged approach. You're looking forward, we are able to identify those elements, profile them, monitor them, make sure that they're within acceptable levels of quality, and also look backward. What do we need to correct so that we have an acceptable level of quality? It's critical to understand that data quality is a success factor for analytics. I think our analytics is only as good as the quality of the data that informs it. When it comes to information security, I think for the KRA, this is very critical for us. As an organization, we are certified in ISO 27001, which is an information systems management tool that has several controls that make sure that you're taking care of our information risks. This not only gives assurance to you as taxpayers that you're doing all we can to safeguard our data, but it also helps us as an organization to make sure that we are doing all we need to do to ensure that our information assets are secured. When it comes to our data infrastructure, when I talk about data infrastructure, I'm not only talking about the analytics platform, I'm also talking about the systems, especially the internal systems that are the source systems that provide this data, that feed into the analytics systems. We have implemented secure infrastructure with the necessary redundancies and safeguards around it to make sure that what comes in is protected and is also the right thing that needs to come in. So we take care of all those risks, not just at the analytics platform, but also at the source systems. And as the global trend now is that there's legislation surrounding privacy of personal data. So we, as KRA, we have made deliberate efforts in compliance with the Data Protection Act of 2019, putting safeguards around PI or personal identifiable information. Who can access it? Why? How can they access it? And the safeguards around that, because this is very critical, and it's a compliance effort that we must address as an organization. This gives comfort to our taxpayers also, that your data is not just shared with anyone for marketing purposes and stuff like that. We only collect data for the compliance efforts that we are mandated by the laws to implement. And so it is very important for us to ensure that we are in compliance with the data privacy and protection laws that are in force. So in conclusion, what have we learned in our journey since 2016? I think the first thing for us is in people. The investment in the right skills can never be underscored. It's just as important, if not more important, than technology. The right skills must be available for you to realize true value in data analytics. Governance and culture. We might have the best technology, might have the best people, but if the structures within which we're implementing these products, within which you're utilizing data, is not right, we will never truly realize the potential. So what are the enablers surrounding these capabilities? What are the policies you need to put in place? What kind of competencies do we need to build? What kind of culture where whoever is dealing with data understands that data is an asset and treats it as such? So as an organization, we are doing a lot around governance and culture, just so that we can realize the true potential that data has to offer. Third, and very critical, is scope and alignment. As I said, we might all want to fly before we can walk, but we must put in all the capabilities necessary to support the basic to the advanced users, because in an organization, you'll have a broad spectrum of users and everyone requires data for their work. So we must take care of those needs. And it's very key that whatever data initiative that you implement has to be aligned to organizational goals, because only then will it make sense for you to implement. Thank you, and back to you again.
Thank you very much, Miss Yvonne Wafula, for just those great insights that you've shared with us. You've talked about data quality, data relevance, is it fit for purpose, the predictability of data, the quality of data, the governance around data. And I just want to bring in Shadrach on this. And based on your experience, Shadrach, how has Africa utilized big data to drive macro policy outcomes? Shadrach, I think you're speaking on mute. Okay, there you are. I can hear you.
Yeah, thank you, Wangeni. Thanks, fellow panelists, and thanks for KRA for organizing this for us to be able to share some insights on our areas of expertise. Data is really growing exponentially, as explained by the speaker, and we are seeing data coming from new sources and increasingly becoming diverse. With this growth, there is need for organizations to be able to look at how then do they build in modern data strategies that basically drives value out of, that enables them to be able to drive value out of the data that they have. And with the modern data strategy within organizations, this can basically enable them to be able to make better decisions, more informed, being able to respond and manage risks faster, improve efficiency, and basically be able to uncover new opportunities. What we've seen for decades is that there's been a cost and complexities when it comes to provisioning of things like ability to be able to manage this data from a storage perspective, from a compute perspective, and this has basically created a difficult trade-off of either for organizations to be able to continuously purge data and slow down the time to be able to gain insights, or to take the cost of resourcing to peak requirements, where they basically build models that they build systems that enable to manage peak requirements and not to grow with the dynamism that comes with the business challenge. But this has changed. It has changed because we are seeing the adoption of cloud technology. And cloud basically provides the foundation upon which an organization can be able to build modern strategy by not only looking at the on-demand storage and compute, but enabling access to latest analytic and machine learning capabilities, things such as data lakes, which basically helps you to be able to move from a siloed approach and to adopt modern ways of centralized storage of this data and providing the capabilities around running things like machine learning to be able to detect the value that is actually hidden in this data. And with these capabilities of the cloud, the scalability in storage and the limitless capability around storage of both structured and unstructured data coming from different sources, it's no longer about just having data with this capability. But the question is, how quickly can you be able to respond in terms of processing that data and driving actionable insights out of that data?
Shadrach, before I bring in Brian on this conversation and our audience as well who's listening to us, I understand we've got very many questions coming in, so I'll be going to those in just a minute. Let me stay with you just a little bit on cloud technology. Yvonne has talked about data security. So let's bring it now down to the common, what we call in Kenya, common mwananchi, the local man.
Yes.
There's all these benefits of cloud technology and data and big data and how we can use it to predict and give us insights. But what is your quick comment in terms of data security and cloud technology?
First of all, if you look at, for example, in AWS, where we are basically the leading public cloud service provider, we look at security as a top priority when it comes to how we deal with our customers. And we provide what we call a shared responsibility framework that governs how we engage with customers when it comes to implementing security as part of the architectural design when you're running in the cloud. What I mean is that we have the responsibility of what we need to do to ensure that our customers are secure. But there's also the responsibility of the customer, because it's not about only the service provider, but it's about the customer. And we provide tools that enable the customer to be able to ensure that they are protected. It starts from, where do you get your cloud services? In AWS, we have something we call regionalization of these services. Our services run out of regions. So the customers have the leeway to choose which region makes economic sense from compliance perspective, from accessibility and latency issues, from performance perspective, and even from cost perspective. They have the choice to make those decisions. But within that shared responsibility model, we basically define what is it that the customer needs to do, from providing things like protection of data while that data is moving between systems or while that data is actually at risks. We also provide services that enables you to be able to provide governance around what the previous speaker spoke about, personal identifiable information. So we provide services that enables you to be able to pick exposures and be able to protect any personal identifiable information that might have been exposed. And we also, within that framework, we provide services that enables organizations to be able to define the accessibility patterns on that data. Who access that data? At what level do they need to access that data? So this responsibility model, in a nutshell, provides what we call security in the cloud, which is the responsibility of the customer, and security of the cloud, which is the responsibility of the cloud service provider.
Okay, thank you very much, Shadrach. I think I'm going to come to you, Yvonne, at some point to give comment on KRA's responsibility model that Shadrach has alluded to. But before I get there, let me bring in Brian to the conversation. Brian is a mathematical scholar. So from your experience and from your perspective, what are the existing opportunities for data-driven tax compliance here in Kenya and in Africa?
Thank you so much, Mageni. I'm glad to be here. Very good company, and thank you, Yvonne, for your presentation. It was really insightful. I'm seeing KRA is doing quite a lot on that front. It's really exciting. So to just answer your question again, in terms of what can be done to sort of drive this initiative and be able to use the growing field or the dynamic field of data, machine learning, and all these big words that have been thrown out there. There is a lot that you can do on that front. And I feel like KRA has taken actually the right step with that. And in terms of, I would actually—
Brian, could you please speak up a little bit? I think I'm getting some feedback that you're not as loud. Please go ahead.
No problem. Is it better now? Good. Okay. I was saying, to sort of address your answer, I would want to touch on what Yvonne had mentioned on the pillars that KRA is actually focusing on, because I feel it's among the key organizations within Africa that is actually taking key steps around figuring out how data can actually play a key role with tax compliance, alongside some of our other speakers who are in the other session. I think the guy from Rwanda, Jean-Louis, and I know Mexico and other countries are doing very big things around that. But to touch upon that and what the opportunities are, I think Yvonne mentioned as part of the second pillar, there's an initiative to increase satisfaction for our customers at the end of the day. She mentioned something that got me really excited. When KRA will be able to pay my refund, I will be a very happy man. I made a couple of requests on that. And if we can provide solutions where something can be done on that front, would be very exciting. And I remember she mentioned something about segmentation of their customers, or what you guys are calling clients, to offer customized services. So key among them being education, doing targeted marketing, or trying to offer information that would be very relevant to some of your clients regarding different opportunities around that. Because voluntary compliance has been a very big thing, and I think KRA has done a good job around that, but there's still a lot that can be done on that front. And in terms of the use of data and machine learning, on our front, as you said, I'm a mathematical scholar here at the Institute of Mathematics. We take data and these advancements in this field very seriously. We've done quite a lot on that field. Part of my research study is actually around how to use these technologies to improve different areas, as you see in the renewable energy space, and I'm very excited to figure out what can be done here. My key point would just be touching on the data protection DPA 2019 that was mentioned by Yvonne, and what the opportunity lies in there. I'm a very big customer of AWS. Shadrach, I use some of your services to run machine learning models, and one of the key things that we can see around that is that there are a lot of the field is growing, so more techniques are coming out that can be able to fit within the regulatory frameworks that we're working with. Data and the protection of, and the governance around protecting data for the clients with PII, personal identification information, is very key. And as part of our research here at Institute of Mathematics, we figured out that there are other ways. There's a very interesting field called federated learning, which has been growing over the last 5 years, which allows us to draw insights using machine learning models without actually having to share private information. So organizations can still leverage on the data that they have, protect their customers in that field, but still be able to utilize that data to draw up models that can improve compliance, improve organizational efficiency, while still maintaining the tenets of data protection. So I feel there's a lot of field that can be done there. And as you're talking about co-creation, it's a new word I've learned today. I was used to collaboration. As we're trying to work towards that, we'll be very open to figure out what the areas of collaborations will be. And all of us heading towards a common goal, as Yvonne earlier alluded to. I think I'll stop there and take any questions that will be coming forward.
All right, thank you very much, Brian. I think, yes, I agree with you. The new buzzword for today is co-creation. And I think it's also really nice just to hear the camaraderie that is on this table, because you use Shadrach's products, and Shadrach, I think at some point down the road, hopefully he's going to use some of maybe your paper as well. So it's really nice to hear that this is where theory meets practice. Allow me to bring in Yvonne to this conversation. And Shadrach had mentioned something on the responsibility model. I'm not sure that came out strongly in Yvonne's presentation, or if it did, maybe you could just sort of give a quick recap on that as you give comment on KRA's responsibility model when it comes to data. and then also respond to the place of BI, business intelligence, in KRA's data quality. Meanwhile, we are still taking in your questions, delegates, and we shall be getting to them shortly. So please head over to the Q&A section and we shall be addressing the panelists with your questions. Yvonne?
Okay, thanks, Wageni. I think if I get you correctly, when you talk about the responsibility model, I'm not sure if you're talking about access, how we allow access to our data platforms.
So Shadrach had mentioned that they have put in place, or they have modeled a responsibility framework on how do you manage data to enhance data security, so that there are sort of like levels of who handles what data and what sort of data belongs to or is managed by which sort of people. So the question is, in KRA, is there that responsibility model or something similar?
Yes, there's something similar. We call it, first there's the access matrix, but we also have an information classification matrix, so to speak, which defines who accesses what and for what reason, and the various levels of approvals required. For example, if a user requests access to a certain data set, what kind of safeguards have we put around that? Who needs to okay such an access? When it comes down to usage of the BI platform, because you realize that the data platform, we have brought in data from various sources. Yeah, so we have more of a consolidated view, even at the level of the Insight platform, or which is our data analytics platform. We have defined, we've classified the information and who does what at which level. So there are various levels which have been defined in terms of what you can do. There are those who can only view, and we also determine what they can view. There are those who can build some models. They can manipulate data, so to speak. And this is very controlled because data is sensitive, especially once you consolidate it. So this is done as part of our governance framework, defining our data assets and the various levels of access to that data. Yes, and to answer your question on what is the role of BI when it comes to data quality, first of all, BI is a consumer of data. So the quality, as I said, the quality is the output of our analytics is only as good as the quality. But over and above that, we can also use the tools available in BI to profile our data, to track and monitor our quality, such that it makes us more reactive. Like right now, as part of our looking forward, we've put in, I would say, tools that help us to identify anomalies, even in the source systems. We are using, we are monitoring these critical data elements using BI tools, and we are able to give them a score and say, this particular field which we determine as critical, the level is either dropping or increasing. And so it informs decisions. I think the key deliverable of BI is to help us to inform decisions. So even if we can use BI to track quality, it can also help us to come up with interventions or actions that we need to do back in our source systems to improve that quality. So it's working hand in hand, both for insights and also tracking our quality. And we've implemented that as part of our quality roadmap.
And I like what you said, Yvonne, at the very beginning. You said that data is a process, not a project. Therefore, from what I'm hearing you say, is that quality has to be checked throughout the data value chain, if we were to call it that. That just because you check the quality at the entry point or at the source point does not mean that you check the quality of data throughout the value chain. All right. So thank you very much for that, Yvonne. Allow me to bring in Shadrach, and there is a viewer question, and the question is, by use of data analytics, is it safe? Oh, the question of safety again. For taxpayers' privacy. No, was that the question? No, here's the question. Can data analytics lead to erroneous forecasts based on reliance of technology? Can data analytics lead to erroneous forecasts based on reliance of technology? Shadrach, that's your question.
I would look at it differently. It's not based on the reliance of technology, but if you look at what Yvonne started with, Yvonne talked about the fundamental aspects of building business intelligence. It starts from the data. And the key aspect here is data governance. She actually demonstrated 3 areas around data governance: data quality and management, data literacy and culture, and data availability. Once you've gone through that, when you've created a process and responsibility that ensures that the quality of data is up to the right standards, consistency and security of that data usage across the organization is up to that level that is acceptable, then it's always what you give is what you get. So it starts from the data governance aspect. How do you basically acquire the data? How do you transform the data? At this point, you can be able to enrich that data. And then out of that, how then do you create visualization? And in other models, like Yvonne alluded to, we've basically looked at the quality of that data based on machine learning models, where you basically look at the patterns in that data, not from a human responsibility aspect, but using already trained models that provide insights, even to the data quality itself. So building a BI and depending on BI does not start or end with the reports that you get. It's not about the visualization part. The hard work is on the data management. How do you acquire that data? How do you clean the data? How do you analyze the data? And then the last part is what output do you get out of that data?
Thank you very much. So thank you very much, Shadrach, for that. Just very succinctly bringing it out in terms of how do we handle data. Allow me to bring in Brian, and there is a question, and Brian's question is, with such, oh, where's the question, please? Brian's question. Okay, there we go. How do you, Brian, manage data quality and literacy levels as per various segments of taxpayers? So there's a hyphen, there's a forward slash, I don't know whether it means end exposure levels or exposure levels. So the question is, how do you manage data quality and literacy levels as per various segments of taxpayers and various segments of exposure levels? I think that's what the questioner is asking, the delegate is asking. Data quality. Brian. Brian, can you hear me? Shadrach, can you hear me?
Yes, I can hear you.
Okay. Yvonne, can you hear me? All right, it's perhaps on Brian's side. Okay, lady and gent, we are 10 minutes shy and we need to bring this conversation to a wrap up.
Sorry, Yvonne. Can you hear me now?
You're back. Yes.
Yes, I'm back. I apologize for that.
That's fine. Do you want me to take the question again?
Yes, please.
Okay, fair enough. And so the question to you was, how do you manage data quality and literacy levels as per various segments of taxpayers and various segments of exposure levels?
Okay, thank you. So I think in terms of answering that, I will hinge on to what I mentioned in the presentation. As you can see, I'll keep referencing on that because she did quite a good job at that. And she mentioned at one point, as you're working towards achieving these goals, one of the key things is for you to be able to make sure that the people who are handling, because it is more than the models, the math. There is the people who are actually handling the data, the people who are responsible to curate that data, clean it up, ensure these quality management and governance structures are actually maintained. So in terms of ensuring government quality, data quality, and awareness, we at the Institute of Mathematics usually conduct a couple of training sessions. We have a lot of experts within that field. And we've actually collected a lot of data, especially in the research arm. So we have developed mechanisms as to how we can empower, upskill the people who are handling the data so that they can adhere to the right standards and so as we can ensure that the quality is very well defined. I hope you can hear me, Yvonne. I'm seeing you struggling, looking at the screen.
Yes, I'm struggling, but I think we're getting you a little bit.
Okay, sorry about that. So I was saying, okay. Within the institution, we're looking at 2 of our research. What we've done is we figured out the ways in which you can train the people who handle the data to ensure that the quality is actually maintained. Because it's one thing for you to say that the data needs to adhere to certain standards, but the people who are handling the data the entire infrastructure that you're building around that. We have worked on performing a lot of upskilling sessions and education around it. And in terms of how that can then now be driven to draw insights later on, it's just about being able to work together and making sure that you're always on top of the new technologies that are coming out there. This is a very dynamic field. Things keep on changing. Collaboration and working with the relevant team members, because as you say, all these elements cannot be siloed. We all have to work in collaboration towards achieving this common goal. One of the key tenets within the institute is that we cherish collaboration. How can we then leverage on all these conversations with industry experts, different stakeholders, all work towards this common goal, so that we ensure data quality and awareness of the people in terms of segmenting taxpayers. I can get into the details kind of in the interest of time. There are models which have been mentioned here, machine learning models, that do a very good job at customer segmentation. That way you're able to identify clients that require specialized or different kind of upskilling or information session in terms of them being able to understand what data can do for them. I hope that answers your question. Just for the internet connectivity issues.
All right, thank you very much, Brian. Ladies and gentlemen, we are wrapping up our session. We've had great conversations on data for risk-based compliance. And as we do our wrap-up questions, I have one more question for you, Shadrach. So I'll give you the question and then you give us your takeout, your punch line as you wrap up your session. And then I will go to Yvonne. I'll get her question as she gives us a wrap-up, and Brian as well. So Shadrach, the question from the delegate is, how do revenue authorities fully leverage on data analytics, keeping in mind lack of acceptance in collaboration for linkages and information sharing with data-rich agencies or organizations or bottlenecks in the law? Do you want me to take that question again for you, Shadrach?
No, I get you. Thanks. I think, as always, technology moves faster than the law. So innovation will always be ahead. But we have to be cognizant of the fact that there's need to work within the compliance of the law. From what Yvonne basically presented, there are what I would say compliance frameworks that governs operation of technology as a whole, not only for building business intelligence, but governance around management of personal data. I think in Kenya, we also have a data protection law. And what we've actually done is that in most cases, we've built services that basically comply with these international standards or regulatory frameworks. Our services basically comply to international standards like HIPAA, PCI, DSS. We comply with most of the ISO frameworks that are within the industry. And this basically demonstrates that we build with the compliance in mind. When it comes to the issue of security, like I've mentioned, security to me is basically a gray area for most organizations. And we can have a deeper conversation to demonstrate how cloud basically proves even to be more secure than some of the traditional data centers that probably some of the customers have used. But coming back to my closing thoughts, I think what most organizations need to do basically is to start by looking at the data governance. There's need to not only break the internal silos, but even to be more collaborative within the relevant agencies that are required to implement issues that basically benefits the citizen. And this basically creates around three benefits. Being able to, if you look at it from a data perspective, approach is that when you break those silos and build what we call data lakes, which are basically repositories that allows for storage of any kind of data, both structured and unstructured in standardized open formats. This will basically enable you now to take advantage and start driving value out of that. Through plugging in APIs from machine learning algorithms already built in the industry, not locking an organization to proprietary data formats and specific analytic approaches. eliminating the need to unnecessarily move, transform, or be able to reformat that data. And the whole of it is that it basically enables you to be able to prepare to gain deeper insights and value out of your data. Traditionally, what has happened with institutions that basically work to administer tax, there's always been a focus on how do we evaluate, how do we analyze transactional data to be able to use it either for compliance purposes or business planning. But this goes into the history. What data analytics basically provides, and modern technologies like machine learning, is to make them become driven by foresights and insights, meaning that they're able to drive insights into the data and also being able to look into the future, what lies ahead through the foresights. So data analytics basically helps them to be able to become more insight and foresight-driven organizations.
Thank you very much, Shadrach. I think the biggest hurdle really to climb is the data security aspect, especially from this other side. But thank you for so succinctly putting it across. Every other thing sounds great, but I think for what the common man thinks about, it really is the data security. But I think one day there'll be freedom in that aspect. Let me bring in Brian. And Brian, I would like you to give us your parting shot. And as you give us your parting shot, paint for us broad strokes of what an ideal legal and policy framework for data governance for a tax administration would look like. I know you do not work for a tax administration, maybe you never have, but you're an outsider looking in. And sometimes it's great to just hear, I think, what Mr. Zake challenged us, is to have those informal conversations of allowing people to tell you one or two things, and that could actually change the course of your sales. So, Brian, what is that ideal legal and policy framework for data governance for tax administrations as your parting shot?
Thank you again. I hope I'm now clear.
Oh, you are.
I want you leaning into your screen.
Okay, let me relax.
No problem. So as my parting shot, I think in terms, I have never worked in the Revenue Authority or in the tax department, but looking from outside, what I would say in terms of the legal framework is that, as all my other colleagues have said, this is a field that keeps on changing. And Shadrach rightfully put it, innovation will always outpace legislation, but nonetheless, doesn't mean that there's not a lot that can be done around that. There is sorry about that. Can you hear me?
Yes, now you're back.
The team is very important that you're trying to. Okay, thank you. The team that you work with. Framework, as you guys have, I think it was called the Data Governance Council, that's looking at what are the things that are changing in the industry, how do we keep up to pace with innovation. I like saying success is when opportunity meets preparedness. So in terms of legal, I apologize. I know my internet has not been the strongest at this point. I don't know what you lost me. Okay.
I think, Brian, we lost you, but we got, you lost me when you last said success is when opportunity meets preparedness. Then after that, you went off. But I think we've gotten the gist of what you were saying, and apologies for the internet connectivity on your end.
I apologize as well. Sorry for that. In the interest of time, I think that will summarize my contribution. Thank you.
All right. Thanks, Brian. Thanks, Brian, for that. And finally, Yvonne, let me come to you. What is KRA doing to enhance integrity of the taxpayer data, to enhance compliance, as you give your parting shots?
Thank you again. There's a lot you're doing in terms of enhancing the integrity of the taxpayer data. As I said, we are looking both forward and backward. Once we have identified the taxpayer database as is, especially the information on taxpayers critical. So this is continually being monitored, and we are informing the process that collects this data so that it is of acceptable quality. And also looking back, there's a big data quality project that we are just at the tail end of completing, maybe in the course of the next few months or so. So just to make sure that all our taxpayer data is because what we had it in two disparate systems. So we're bringing a consolidated view and ensuring that you have all the data about a taxpayer from one single source, that you don't have this fragmented view of our taxpayers and their transactions. So there's a lot that's going into the quality aspect, and especially the team I work with, the quality team is the biggest team, just looking into how we can get our data to the right levels, both to improve our taxpayer experience and for us to be able to make decisions surrounding our taxpayers. So as a means of conclusion, data is good, it is very good, and technology is good. But for us to unlock the true potential of data, we must have the right structures, the policies, the supporting or the enabling framework for us to realize the value. Because unless we have that, we won't truly harness the potential that data has availed to us, especially in terms of driving compliance as a tax administration. Thank you.
Thank you very much, Yvonne, for that. We appreciate everything that you are doing to lead this particular process, which in the Kenya Revenue Authority. Thank you, Shadrach, as well. Great insights coming from you, especially in terms of cloud storage and data security. Brian as well. I think Brian has logged off. But may I ask that we take a quick screen grab for this particular session? Okay, I'm told you wave. Brian, you're back.
Yes, I am. Sorry about that.
That's when the party was ending, but welcome back. We wave again. We've been asked to wave, so please wave. All right, and thank you. I think the grab has been taken. Thank you very much, Yvonne, Brian, Shadrach. Great conversations in terms of data. Like I said, we're always constrained for time. There's a lot we need to unpack, especially the value chain of data. But perhaps this will be, it's a preliminary to a forward conversation in the future. Thank you very much. Please pass our greetings to your teams. Ladies and gentlemen, distinguished delegates, we're going to take a break from the morning session. Please grab a meal. Let's meet here again at about 1:55 p.m. and that's East African time. And we shall begin our second session in the afternoon. And in the afternoon, we are going to be having a discussion around scaling the tide, customs administration in the globalized age. We began last year with a conversation of the Africa Continental Free Trade Area. We continue that conversation this afternoon. So we're going to talk about customs. We're going to talk about global trade. You want to be there for that conversation, all right? So keep your questions coming in the Q&A. And I told you that I'm looking for the participant of the day, and the team in the background has been looking at your engagement, and I'm happy to announce that we have two participants of the day, and the first participant is Miss Hope Mutanu, and the second participant of the day is Mr. James Mugo. Mr. James Mugo. And my kind request to Hope and James is that you could send in your name and physical address so that we can deliver to you the gift hamper from the Kenya Revenue Authority. Send your name to stakeholder.engagement@kra.go.ke. I think the team will post that email address in the Q&A so that it's easy for you to just copy paste stakeholder.engagement@kra.go.ke. So please send your name, your physical address, and your mobile number to that particular email address. All right, ladies and gentlemen, thank you so much for your indulgence. It's been a great morning, great conversations. We've talked about enhancing risk-based compliance. We've talked about technology. We've talked about big data. In the afternoon, we move to trade, customs. That will be our conversation. See you in the afternoon. Let's log in from 1:55 p.m. East African time.
Are you a VAT registered taxpayer? Have you heard of the upgraded ETR system by the Kenya Revenue Authority? This upgrade is through the KRA Tax Invoice Management System, TIMS, which introduces an electronic tax invoice. The VAT registered taxpayers are required to adopt ETR devices that have the capability to validate invoice data and transmit the same to KRA on a real-time or near real-time basis. A key feature of the new electronic tax invoice is the QR code, which will allow one to confirm the validity of a tax invoice. The details populated on scanning the QR code will include the name of the trader, invoice date, total invoice amount, total taxable amount, and total VAT amount, if applicable. This will go a long way in ensuring VAT is accounted for correctly. For more information on TIMS, visit www.kra.go.ke.
Is Lilian Nyawanda. I'm the Commissioner for Customs and Border Control at Kenya Revenue Authority. So facilitate trade and to protect our borders while ensuring compliance. Customs has been part of the Mombasa Port Charter where we have specific initiatives that we've undertaken. We have the Authorized Economic Program, where we have importers and exporters signing up for our green channel, and their goods then are granted preferential treatment and fast clearance of cargo. We also have the pre-arrival clearance program, where we encourage importers to declare the goods way before the vessel arrives, so that by the time the goods check in, the clearance process is very fast, and we've seen many importers taking up this program. We also have our ICMS program, which is Integrated Customs Management System, that is basically new technology ensuring the fast clearance of cargo, and also it's risk-based, so it means our focus is more on post-clearance audit rather than spending so much time during the verification process. The intention is to give our importers and exporters a smooth and fast experience during clearance. We have our scanners that we've installed across all our border points, JKA, at all the airports, Mombasa, ICD, our borders like Busia, Namanga, where we ensure that we reduce the time it takes to verify cargo, and we are leveraging on an intrusive inspection of cargo. We also have our regional electronic cargo tracking system, where our goods that are passing through Kenya are secured through seals and monitored all the way to exit the country to Uganda, Rwanda, Burundi, DRC, and many other countries that we are collaborating with. The East Africa Community Customs Management Act provides for various levels of appeals that taxpayers can undertake in cases of dispute resolution. So we have the appeals mechanism. A taxpayer should be free to engage and, of course, object to the decision made by the commissioner. There are levels of appeal. So you appeal. If you're not agreeable with the decision made, you can further take it up to the tax tribunal, which is an independent body that reviews the cases and gives judgments based on the law. We also have court mechanisms available. However, if I focus on the ADR, ADR is an opportunity to move out of court, out of appeal, and engage. So again, ADR is an independent channel where the taxpayer comes in and is able to go through the dispute mechanism, where we have an independent mediator between KRA and the taxpayer. And this provides an objective process where the taxpayer is able to undertake and be heard and view and air their views and get an objective ruling. Again, the ADR is free, so there are no costs to it. And just further to that, we encourage taxpayers to engage. Customs is welcoming taxpayers to engage. We have various channels of communication. Not everything has to go through appeals. We have our social media platforms, we have walk-ins, we have a customs help desk. We are here and ready to engage. So we encourage our taxpayers to feel free, come forth, let us hear you, let's engage. Customs is a member of the Border Management Committee, and we take a lead role in this initiative. One of the mandates of customs is protect and safeguard our borders. So whatever is coming in or getting out needs to be secured and ensure that we're protecting the kind of cargo that's coming in. We have prohibited and restricted items that we need to check and ensure that they don't come through or are given the necessary licenses that are required. So some of the initiatives that we've undertaken are the one-stop border posts, where we've ensured that we are partnering with the countries. For example, if it's Malaba, we are partnering with Uganda to ensure there's one point of clearance amongst the two countries. Part of the things we have done is we installed scanners, we have checks that takes place there to ensure that everything that is crossing through is safe for our citizens. We also have, under marine, we have patrols across our waters. We have boats that we undertake. We have marine staff who are specialized in this area to again ensure that we deter any prohibited or restricted items checking in to our country from the waters. Again, we have our K9 unit where we have sniffer dogs that are trained, and we have staff that are trained and specialized in this area. Again, the dogs help us in detecting drugs and other prohibited and restricted items to ensure, again, our borders are safeguarded. We have various channels where we just ensure that anything that comes in, is safe for our citizens. So customs, again, takes the lead amongst other border agencies. KRA's mandate is to collect revenue on behalf of the government. So KRA is an agent of the government. KRA collects revenue, administers taxes, facilitates trade, provides a conducive environment for taxpayers to pay taxes rightfully according to the law. My call to the taxpayers is to encourage us to continue paying taxes and to thank you for the good work you've done in ensuring that we are all paying the rightful taxes that we should. So the customs staff have been very helpful. My team is professional, helpful, competent, and very capable. The customs team have played a critical role in clearing cargo, especially during this COVID time, and they went above and beyond the call of duty to ensure that goods have been cleared as fast as possible, especially the vaccines, the health equipment, and they've delivered. And above that, they went ahead and delivered even on the target and surpassed that. So to the staff, I would want to tell them well done, job well done, and keep up the spirit. And we'll continue with the same spirit to ensure that our taxpayers have a brilliant experience in the clearance of cargo. Thank you all, and let's continue building our country. Pamoja twaweza.
Hello and welcome to Tubonge Tax, the show that provides you with the tax information that you need to stay informed. I am your host, Alan Madoka. And in this very, very special Tubonge Tax episode, our first vodcast, I have some very special guests with me. We have Mr. Andrew Osiani, who is the Chief Manager for Stakeholder Engagement and Events Management at the Kenya Revenue Authority. And we also have Mr. Nixon Omondi, who is at the Policy and Technical Advisory Division, which is also, of course, part of the Kenya Revenue Authority. Now, in this very exciting episode, we're going to talk about the upcoming Annual Tax Summit 2022, which is the 8th such event to be held. Now, let me start with you, Andrew. Why does KRA host the Annual Tax Summit event?
Yeah, so the tax summit, 2022 will be marking the 8th tax summit. So that means we started in 2014. And 2014, this started as a conversation. We were looking for a platform for sharing ideas on how to improve taxation. And so that's how the tax summit came in. So the tax summit is one of Kenya Revenue Authority's prime stakeholder engagement platforms, where we mobilize, policy proposals and ideas, on how to take the tax administration agenda forward.
Okay.
And we also do this with various stakeholders, international stakeholders. So it brings
Yes.
together the private sector, the civil society, bureaucrats, government, policy experts, the media, academia, and at times students, who have a lot to contribute on tax and customs issues. So we hold it, primarily for that. So essentially, it is a platform, it's an ideological platform.
Right,
That's number
right.
one, So it's an ideological platform in that that's where we exchange ideas and innovations in tax management.
Mhm.
It's also a skilling platform.
Yes.
And by skilling, we mean this is where we enhance the skills and capacity of tax professionals, to be better at what they do through knowledge exchange and networking. It's also a cooperation platform
Right.
where policymakers and bureaucrats and people who handle tax matters, cooperate to better understand what taxation is all about.
Yes.
And finally, it's also a diplomatic platform. It's
Wow.
a tax diplomacy platform
Okay.
because this is where, as a continent in Africa, we mobilize, our issues, especially around the rights to taxation
Mm.
and, the rights to tax as an African. Africa is ours and therefore it's our business.
Of course.
So
Of course it is. Yes. Yes.
this is the platform where we bring all our sister agencies from all over the world, especially in Africa,
Yes.
to talk about tax agenda or
Mm.
tax matters that affect us as Africans and speak with a single voice from there.
Okay. So it's actually bringing tax to relevancy and it's bringing it now to the forefront with the necessary experts and
Mhm.
stakeholders. Wow.
Mhm.
That's quite interesting, Andrew. Now, what has been the impact of the annual tax summit on KRA? I mean, what has been the progress on the implementation of the summit recommendations, which I'm sure there have been many over the years?
Yeah. So when we started in 2014, we started as a free discussion,
Right.
among stakeholders who work on tax issues. And at some point, especially from 2016, it started dawning on us that we need to be tracking what we are doing.
Mm.
Because when you have proposals, and ideas coming through all over the place, and then you end the event there and disappear, and you don't come back to, to take stock of what you're doing,
Right.
that will essentially make it useless. So what we decided to do from 2016 is to monitor some of the key things that are coming out of there,
Mhm.
especially recommendations, policy and technical recommendations emerging from the summit.
Right.
And some of the things that the summit has given birth to are many. So, for example, when it comes to predictability of tax environment,
Mm.
which is a key proposal that came out from the last year's summit,
Mhm.
one thing that has come of it is the national tax policy.
Mm.
Which
yes, very relevant. Yes.
exactly, because taxpayers are saying we want a favorable tax regime.
Right.
One of the ways of making it favorable is to make it predictable. So the
Exactly.
tax policy, being hosted by the National Treasury was as a
Mm.
result of this conversation. Two, it has also been very helpful in enhancing our service agenda.
Right.
This has been very important. you can see over the years, we've really tried walking that service journey, and we have been trying to be more service driven.
Right.
So one of the things that came out of that was, for instance, the customer relationship management system, which we have right now.
Yes, yes.
Where, we have an activated frontline, that tries to sort out your issues and escalate those issues that can't be sorted out to other levels, for maximum resolution. And we monitor that.
Right.
So that has been there. There have also been policy proposals around stakeholder communication and stakeholder relationship.
Yes.
We are so serious about this as an authority right now
Yes.
because we even monitor the health of stakeholder relations.
Wow.
Through stakeholder relationship health audits.
Right.
When we started, I think we were about 65%. Right now, we're at 67.5%.
Okay.
Meaning that stakeholders, find our relationship with them a bit healthy, right? From treasury to private sector and all these people. We listen to them and all these things. But another key thing that directly affects the administration of taxes is through business process engineering and adoption of technology to make tax administration more efficient.
Yes.
So what we've done in this space is to adopt cutting edge technology to drive tax administration. So in the customs front, you have the integrated customs management system.
Yes,
that
ICMS.
is
Yes.
exactly
Okay.
ICMS. That is now, really overturning how things work in customs and trade facilitation.
Okay.
Right now, there's a conversation going on which we'll be discussing around tax invoice management system, to help us also monitor real time, business transaction and the world of business commerce, so that we get the right type of taxes. So that has been there. But even internally, things like iSupport, to revolutionize how our internal operations really work. So others like cargo scanning systems, customer relationship management system, and all these technological avenues that KRA rode into was a result of the tax summit. So there's a lot,
There's a lot
that has
happening.
happened. This is just a few.
Wow. Okay. Now, Nixon, if I can jump to you, the theme of this year's annual tax summit looks at now and beyond enhanced service delivery to improve tax compliance. Now, with this in mind, what is the impact of modern technologies on enhancing tax compliance and maybe, to some more importantly, tax base expansion?
Rightly put. And to pick it up from where Mr. Siany leaves it, when we talk of enhanced service delivery, what do we mean? We know that sometimes tax acts as a pain. It's not easy to pay.
Of course.
But what the government is doing, and specifically KRA, is to simplify the process, to make it as easy as possible so that our taxpayers can comply. Because, of course, tax is a legal matter.
Yes.
All of us have to bear our fair share. But that said, we are also ensuring that everyone pays their fair share by leveling the playing ground for everyone. It won't be fair if, my next door neighbor is not paying tax and I'm paying.
Of course.
So all the measures that we are putting in place to ensure that everybody pays their fair share, the process is also simplified, is what basically we bring to the tax summit. So we bring to the tax summit a host of conversations, not just within our country, but beyond Africa, and of course Africa. Because Africa, needs its own solutions to our unique situation. And you've seen a number of times we bring in speakers from Africa,
Yes,
and
all
also
over,
from
yes.
outside the country, just to have a conversation on where the world is going to. This summit is important in also looking at the disruptive effects of digitalization and COVID.
Which
We
is
know
it's a
that,
very current issue. Yeah?
Very, very current.
Yeah,
Because
yeah.
when you look at digitalization, right from the time internet, started to be used in Kenya in
Yes.
the early 90s and even before, it changes a lot how we do business. It isn't business, the processes. And Mr. Osianya has mentioned the effort that the authority is taking to ensure that paying tax is simple, the process is verifiable, the process is very clear,
Yes.
and is also predictable.
Right.
Again, if you look at the disruptive effect of COVID, We know that COVID has affected a lot of supply chain methods, and it has even affected how we live our lives, how we do certain businesses. So it's only fair that even our taxation follows that kind of disruptive channel, not to overburden our taxpayers, but also to ensure that we don't lose, the much needed revenue that the government wants. So this tax summit, I'm sure, will live to that dream, where we share experiences from the taxman and what we are doing to make our lives better, to ensure that the government meets its mandate through taxes, but we also share experiences from Africa and beyond.
Okay.
Yes.
Now, Nixon, I think I have a very tough question for you, and you've alluded to it in your first answer. In terms of tax simplification, I'm sure everybody watching Tubonge Tax and listening to it today wants to know what specific mechanisms has KRA put in place to simplify tax and tax processes, as you talked about earlier.
Very, very true. For tax experts, they understand a canon. It's called the canon of taxation,
right,
by Adam Smith, that a good tax system must be simple. Simplicity involves simple to understand. The common mwananchi must understand the basis of payment,
right,
and how to pay it.
Right.
2, the process of payment should also be simple enough for anyone sitting at the comfort of their homes to do comply.
Right.
So KRA is approaching the simplification in 2 fronts.
Right.
1, we want to simplify tax to our citizens.
Okay.
We want to educate them. We want to organize forums, including the summit, where we tell them, this is the tax. Yes. What is it about? What is it? How do you go about it? That is the simplification. So you've seen we've done a lot of course, we are doing podcasts.
Yes.
We are having tax Thursdays. We are having, there are a lot of time you see our own CEO, this Commissioner General, appearing on TV to clarify certain tax matters, together with many other, tax experts.
Yes.
So we are
KRA TV.
KRA TV, we've recently launched it,
Right.
so that we specifically harness tax knowledge, and make sure it flows to
All
the
the way to the
common man.
ground.
So that is the first point. The other one is simplification through processes. And thanks to technology, we are able to simplify the process of registration.
Right.
And I don't know how many were there before iTax. It could take you weeks to even get a PIN.
And I think I even remember you used to have lines outside of Times Town, and I remember every year, actually, in the newspaper, that was a common picture.
Actually,
of lines outside Times
the
Town.
news would have been how longer the line was compared to the previous
and
year.
actually, this year there's nobody, and that's
Sure,
all. As you say, through
So
the advancements of
that
technology.
is part of the simplification.
Right.
In fact, somebody said that
Yes.
for customs, before the regional electronic
Yes.
cargo tracking system,
Yes.
you would have 19 kilometers
Yes.
of trucks,
Yeah.
lining up for clearance at the border.
Yeah, yeah.
But now with technology and the simplification of these processes, that's
Simple.
a story of the past.
Simple. In fact, again, in customs, there used to be called the long room.
Yes.
Before the Simba. And it was actually long because you needed not less than 17 signatures to clear your goods. So we are coming from,
manual
certain processes that were not very friendly. So we are putting in place the ICMS, the cargo electronic tracking systems.
Right.
Mr. Osian mentioned about the tax invoice management system.
Yes.
A system that will enable our citizens
Right.
to even verify if the good is genuine. If I sent Ellen to go and buy, a certain part of a motor vehicle, for example, from a shop,
right,
I'm able to verify that indeed that invoice is from that shop simply by using the QR code and the KRA iTax system, which is accessible so long as you have internet.
Okay.
And it's also ensuring that people pay their fair share.
Yes.
Because we are able to only give input where we have actually received
the money
equivalent, and many other benefits that come with the tax invoice management system.
Yes.
So there are many systems we are putting in place.
Right.
We even have a system for whistleblowing.
Right.
Yes, you can.
iWhistle.
iWhistle.
Yes.
You can easily report incidences of tax evasion
Anonymously.
anonymously. Yes. And of course, you are rewarded by law. So this is part of the simplification,
right?
So that everybody pays their fair share, but they don't belabor to pay it.
Yes,
they pay it in a simple manner,
right,
in a very friendly environment. And of course, we've also had a culture change.
Right.
The simplification comes with the culture change from the employees. You can always walk to any KRA office, and the officers will give you an ear to all your queries, will guide you, and will not charge you even a shilling. And that's part of the simplification.
And actually, before we move on to the next question, I see you even incorporated sign language interpreters as well in most of your major offices as well to include, to be inclusive.
Very important.
To members of people living with disabilities.
Very important, because these are people who are able differently.
Right, right.
And we need to take care of everyone.
Absolutely.
Including language barriers. We are even trying to translate our website and a lot of our documents to Kiswahili.
Right.
So that the mama mboga and, my mom at home can always read and understand what Alan is also able to understand in English.
Right.
That is
what we call it assisted channel
service.
Yes. Where, another thing that is happening is the self-service. I mean, driving taxpayers to the self-service options, where we have USSD, iTax, and empowering the taxpayer, to comply, and of course compliance through payment and declaration. So filing and payment of taxes on your own.
Right.
So through USSD, and our systems have been integrated with the telecoms, major telecoms in the country, just so that your payment of taxes is easier. But also the assisted service channels, like the contact center right now. We have a national contact center as KRA, but then this is being expanded, you know. So we are having additional channels, that will be able to serve taxpayers. So, for example, WhatsApp for business, that's one consideration we are having right now.
Okay.
But just to add on to what Nixon was saying, that another way of simplifying taxes is making it easier for the citizen to hold us to account.
Right.
Very true.
On payment of taxes, not really on use. I mean, of course, KRA's mandate ends with collection.
But
in terms of use, so we even commission annual customer satisfaction surveys.
Okay.
Where we ask the citizen, what do you think about us as KRA? How did we serve you in the course of you making you comply with taxes? And the reason why this is important, Alan, majority of voluntary compliance model, majority of Kenyans actually comply with taxes. And anytime you have an enforcement issue, it only happens with a very few minority at the top. Those ones who already know, but they will not pay, can't pay, won't pay. Catch me if you can.
Right.
Okay.
And unfortunately, those are the cases that the public hear about.
But they tend to be louder,
of course,
than the guys who actually comply with payment of taxes.
Yes.
So, of course, these ones, of course, there's another way of enforcing a payment of taxes on them. But majority of Kenyans, we actually interact with them, and we give them a chance to hold us to account on how we serve them through customer satisfaction service.
Yes.
So maybe, Alan, before we move from the simplification, it will not end without telling our taxpayers that we are also bringing in an app.
Oh,
we are all going up. So you want to do your banking, you want to do your shares,
mobile economy,
and you have your app and you can view.
Right.
So that is an option that we are soon availing for our taxpayers to simplify the process of compliance.
Okay.
But even beyond the app is just as Andrew is saying, we want the self-service from the taxpayer, so that you do everything on your own.
Right.
We are only there to guide you where necessary. And that's why we've issued a lot of guidelines. If you go to the iTax system, just the portal itself, you're able to get all the guidelines step by step. How do you do a PIN? How do you file a return? How do you pay? All those guidelines are available. And I think it would be good so that our taxpayers make use of those guidelines. You only, you can contact us when you are stuck, but basically it's a self-service model.
Okay.
Yeah.
Now, I think simplification also leads to the expansion of your tax base. So that actually leads me to my next question. What mechanisms has KRA put in place to enhance the tax base? I know it's been talked about frequently. So maybe if you can briefly talk about what mechanisms are there specifically to enhance the base so that more people pay their fair share.
Very important.
Yes.
And we cannot talk about enhancing without maintaining the already existing base.
Right.
So what we were discussing before in terms of simplification and people complying is ensuring that the existing base is generally compliant, the 80% we are talking about.
Yes.
So to ensure that we get additional revenue,
Yes.
because as we all know, that government expenditure keeps increasing by year because of the demands of citizens. So we also need to be innovative and in a way that doesn't affect our taxpayers adversely, but they comply.
Right.
So one of the means is ensuring that all property owners, whether you have a residential property or commercial property,
Right.
you pay your fair share.
Yeah.
So we are having a block management system. We are having a team that is ensuring that all property owners, shoulder their fair share of tax.
Right.
We are also cognizant of the effect of digitalization and the digital economy.
Okay.
So we are also enhancing that tax base by not just, ensuring that our own players in the digital space pay their fair share, but even non-residents who interact a lot with the economy also get to pay tax. And that's why you saw the government introduced a digital service tax,
Right,
VAT
right,
for
right.
non-residents.
Yes.
And coupled with that is the issues about voluntary compliance. It is just a matter of ensuring that everybody, if inadvertently you do not pay your share, your taxes, you can come forward, pay, and we give you reprieve for penalties and interest. And it's by law and unequivocally you get the waiver.
Right.
So there are many mechanisms of expanding that tax base. Of course, we also have legal means. You always see there are goods coming into the exemption list, some leaving,
Right.
but depending on the direction that the government is taking and the economic policies.
Okay, thank you so much, Nixon. Andrew,
But maybe just
Right.
also, I mean, just to add on that, we also focus on taxation of the informal economy.
Yes.
Very important.
Yes,
And
yes.
His Excellency, the President, recently challenged Kenyans and said, he leads by example
Right.
to ensure that everyone pay their taxes. So if at all a Kenyan, who's making a living, one of the ways of showing responsibility on this is just by paying taxes.
Paying
So
their taxes,
bringing as
yeah.
many people as possible into the tax net. And informal economy in Kenya, is one critical base
largest,
that we
very,
are targeting.
very.
And also there's a current technical debate going on around digital service tax.
Of course.
So,
Yes.
and himself is the brainchild here. I mean, so this is another way we are trying to expand the tax base. And of course, through the tax summit,
Yes.
we have had discussions about this with the OECD.
True.
Where this was discussed, and we are saying as a country, we are not signing into the statement on the inclusive framework
Right.
until we are properly heard.
Mm.
Okay, and one of the reasons why we are talking about that is because it has taken us time to get DST into the tax net,
Right.
and we will not just lose it like that. I mean, it's part of our taxing rights that we are focused on in the tax-based expansion agenda. So these are very critical, ongoing issues. Of course, data analytics
Yes.
is
Yes,
another
very
way.
important.
Even through using third-party data, to help us collect taxes,
Okay.
because we still have very rudimentary data, and we are working so hard as an authority to ensure that our data, is enhances compliance.
Right.
In other countries, I was telling somebody that in Norway, for example, they give birth to taxpayers. They don't give birth to children.
Right.
No,
Right.
because they give birth to you as a taxpayer. So
You get a pin immediately
so
on birth.
it's like you get a pin immediately at birth. So maybe
Wow.
we get to that point as
Yeah.
a country someday and say,
As soon as you're
we'll
born,
give
you get your
birth.
pin. Yeah.
Exactly. So you see somebody expecting a child and say, that's a taxpayer coming, and
Yeah,
you start planning
true,
for him
true,
right from Nixon's office.
true.
And and also I hear with the implementation of tax education within the education, the formal education system.
Very important.
Yes.
That will also nurture people
Of
into
course,
thinking about.
of course,
thinking about taxes.
integration of tax, education into the national education curriculum has
Yes.
been very important, because we want to create a taxpayer
Awareness,
right from
right.
school, where we say
School.
now that we don't give back to them, we are saying
Yeah, from what they're
that
learning.
from a young age you need to know that paying taxes is a patriotic
important.
duty.
Yes.
We don't want you to meet that kind of information in university or at your workplace,
When you
so
start
that you
working, yes.
voluntarily, pay taxes. And to that front, I mean, we have several tax clubs. We also have centers of excellence in tax education, you know, Kanga High School and so many Kieni Girls High School and the rest across the country, whose primary responsibility is to act as our tax education resource centers, you know, on the ground, working in conjunction with our regional offices.
Okay.
Now, Alan, before we leave there, you know, they say after the discussion on taxation of the digital economy, we cannot have it without looking at the informal economy.
Yes.
We know the level of informality, especially Africa, I think is leading, then Asia. And that shows you that a big number of businesses are actually trading in the informal economy.
Of course, yes.
So we can urge our taxpayers in this forum that come forward and pay your fair share. But above that, we are also working on mechanisms to harness the revenue without adversely affecting the businesses of those mamambogas, the hustlers. And what I wanted to add, there's also conversation of merging all these documents under the Oduma number or something like that. And we believe when there's that single identifier to taxpayers and citizens, sometimes it also leads to enhanced tax base, because there are people who are hiding behind, you know, the multiple documents, not to come forward and pay their fare. Above that, I also see a lot of discussion in the global arena on how taxes can be used to enhance climatic issues. We know the emission of carbon, you know, the greenhouse gases, and the use of carbon credits and taxes. So I think that is a discussion that is coming. And most likely we'll hear it in the summit.
Yes.
And it's important for Kenyans to know that taxes, there are a lot of incentives in the tax laws, so that we use clean energy. And that means maybe if you're emitting a lot, then you might be paying higher tax than those who are emitting little. So it's also important to note.
That's a very important issue. Now we lead to the next question, Andrew, which is change. And I know His Excellency the President, and as well as his predecessor and many others have mentioned the word Kenya Revenue Service and the transition from the word Kenya Revenue Authority to Kenya Revenue Service. Now, how does this transition from KRA to KRS affect or change how the current KRA will administer their taxes?
Now, first of all, revenue administration or domestic resource mobilization is the topmost economic priority of any government. And if you look at our 8th corporate plan, we not only call it transition from KRA to Kenya Revenue Service, we actually call it transition from KRA to KRS, not only in name, but also in service. You know, in service delivery. Because, you know, you can transit. I mean, I can declare you Alan Madoka. I can declare you Alan Madoko. I've just changed A and O. So even then, I mean, you can have an agency there, but then only remove the A and replace it with an S and it's KRS. But does it mean that things are changing? So for us, this is a service journey. And if you look at our summit on day 2, we are hosting a very critical public lecture by Professor Anderson from Leiden University. He used to be in the OECD, and he was one of the people who contributed the seminar work on how to create a tax administration 3.0. What that means is how to create a modern tax administration. And the lecture is actually titled Transformation on Stilts, you know, towards tax administration 3.0. What does that mean? It means transformation, quick transformation in response to service needs of the people. Now, one of the biggest motivations for this transformation is to conform to global best practice. You look at tax administrations globally. We don't want to be left behind. You know, I think for Taxpayers Month, leaving no one behind.
Leaving no one behind.
We also don't want KRA to be left behind in transformation. So we are looking at how do we conform to international best practices in tax administration. By the way, this has already started in some form or shape. And a lot of our work within the authority, you know, mirrors that. If you look at our people perspective, so the work around transformation, I mean, there's a whole project, and we've subdivided into 5. And if you look at customer, so what we're trying to do in the customer perspective is to create a delighted taxpayer. It's very hard to create one. Nobody is ever willing to part with money
Of course,
to pay
of course,
taxes. But
yes.
we want you, even if you may not feel really pleased, but we want you to be convicted and be happy to pay your taxes.
pay
So
your
how do we mobilize a proper service infrastructure that will lead to you being a delighted taxpayer?
Okay.
Then if you look at people perspective, we want to create, a service culture in the people who collect taxes in our people. Well, even in the Bible, I mean, tax collectors were revered, they were not really liked. But we are trying to say,
Yes.
we are tax collectors, we relate with people, we work for the economic good of the country. How
yes.
do we do it in a humane way?
Right.
So we are trying to create service-centered people, and a culture of high performance. And that is
Right.
already going on. In fact, I think we are the only government institution right now, for example, that integrates integrity, into what they do in government. The only one, Ireland, by the way. And we don't apologize for it.
No, of course not.
And if you look at things like performance management, performance management culture in tax administration, evidence-based performance management culture in tax administration, where, you look forward to a reason to go to work.
Right.
So we are trying to create a staff culture, that is service-friendly, that is performance-driven and all that. If you look at business processes, we're also trying to change that perspective so that our processes are more efficient, so that we have a 360-degree view of you as a taxpayer.
Right.
So let's say you import goods from the US. We can see you both from a customs and a domestic taxes perspective. So that's what technology and BPR is trying to help us do. But again, in the policy and legal, we're also sensitive about our brand. So we are trying to see, are we, will you love our brand? What are we doing about our brand love? Because
Right.
you don't just change a name. There are a lot of legal things, intellectual property
lot of
rights, and all
things,
that.
right, right.
But identity of KRA will also be very important. So, to be honest, there's a lot that's already working across all these processes internally, even though we are not yet KRS.
Yes.
KRS will find us on the journey of transformation,
Very
which
true.
has already started.
Mhm.
But we are basically changing ourselves,
Right.
along those 5 perspectives.
Okay.
True, Alan.
Right,
I
yes.
think what we are doing by this change of name is really entrenching what we have changed as our practices, our culture, and the processes.
Already,
We
yes.
want Kenyans to be proud of their revenue authority. From the first time you look at our logo and the KRS,
Yes.
you are proud to be associated with the revenue authority.
Right.
From the point you get into Time Star building, you are getting into a government facility
Yes.
that meets your demands.
Yes.
That is able to serve you.
Yes.
And you get, you get what you went to, you've gone to look out for.
Yes.
That's basically the transformation that we talk about.
And you see, globally, just to revisit this customer
My name is Lilian Nyawanda. I'm the Commissioner for Customs and Border Control at Kenya Revenue Authority. So Customs is a department within Kenya Revenue Authority. Customs' core mandate is to collect revenue, facilitate trade, and to protect our borders while ensuring compliance. Customs has been part of the Mombasa Port Charter, where we have specific initiatives that we've undertaken. We have the Authorized Economic Program, where we have importers and exporters signing up for our Green Channel, and their goods then are granted preferential treatment and fast clearance of cargo. We also have the Pre-Arrival Clearance Program, where we encourage importers to declare the goods way before the vessel arrives, so that by the time the goods check in, the clearance process is very fast, and we've seen many importers taking up this program. We also have our ICMS program, which is Integrated Customs Management System, that is basically new technology ensuring the fast clearance of cargo, and also it's risk-based, so it means our focus is more on post-clearance audit rather than spending so much time during the verification process. The intention is to give our importers and exporters a smooth and fast experience during clearance. We have our scanners that we've installed across all our border points, JKA, at all the airports, Mombasa, ICD, our borders like Busia, Namanga, where we ensure that we reduce the time it takes to verify cargo, and we are leveraging on an intrusive inspection of cargo. We also have our regional electronic cargo tracking system, where our goods that are passing through Kenya are secured through seals and monitored all the way to exit the country to Uganda, Rwanda, Burundi, DRC, and many other countries that we are collaborating with. The East Africa Community Customs Management Act provides for various levels of appeals that taxpayers can undertake in cases of dispute resolution. So we have the appeals mechanism. A taxpayer should be free to engage and, of course, object to the decision made by the commissioner. There are levels of appeal. So you appeal. If you're not agreeable with the decision made, you can further take it up to the tax tribunal, which is an independent body that reviews the cases and gives judgments based on the law. We also have court mechanisms available. However, if I focus on the ADR, ADR is an opportunity to move out of court, out of appeal, and engage. So again, ADR is an independent channel where the taxpayer comes in and is able to go through the dispute mechanism, where we have an independent mediator between KRA and the taxpayer. And this provides an objective process where the taxpayer is able to undertake and be heard and view and air their views and get an objective ruling. Again, the ADR is free, so there are no costs to it. And just further to that, we encourage taxpayers to engage. Customs is welcoming taxpayers to engage. We have various channels of communication. Not everything has to go through appeals. We have our social media platforms, we have walk-ins, we have a customs help desk. We are here and ready to engage. So we encourage our taxpayers to feel free, come forth, let us hear you, let's engage. Customs is a member of the Border Management Committee, and we take a lead role in this initiative. One of the mandates of customs is protect and safeguard our borders. So whatever is coming in or getting out needs to be secured and ensure that we're protecting the kind of cargo that's coming in. We have prohibited and restricted items that we need to check and ensure that they don't come through or are given the necessary licenses that are required. So some of the initiatives that we've undertaken are the one-stop border posts, where we've ensured that we are partnering with the countries. For example, if it's Malaba, we are partnering with Uganda to ensure there's one point of clearance amongst the two countries. Part of the things we have done is we installed scanners, we have checks that takes place there to ensure that everything that is crossing through is safe for our citizens. We also have, under marine, we have patrols across our waters. We have boats that we undertake. We have marine staff who are specialized in this area to again ensure that we deter any prohibited or restricted items checking in to our country from the waters. Again, we have
Good afternoon and welcome back to session 2 of the 8th Annual Tax Summit. My name is Wagani and I've been your moderator since morning. It's been a great morning of great conversations as we unpacked the theme of the 8th Annual Tax Summit, Now and Beyond, Enhanced Service Delivery to Improve Tax Compliance. We talked about the impact of technology to enhance tax compliance. We talked about big data and how it can help us improve tax compliance. Now we shift gears, and I hope that you've had a wonderful lunch hour. And thank you so much first for coming back. And we shift gears and talk global trade. In this afternoon session, our panel is ready and our keynote speaker is also ready. We're going to be discussing scaling the tide, customs administration in the globalized age. Our keynote speaker is Mr. Pranab Das, who is a director for compliance and facilitation at the World Customs Organization. Now, Mr. Pranab Kumar Das is the director and has over 36 years of experience in customs and indirect tax administration, having worked in various positions in the frontline offices and specialized directorates of customs and indirect taxes in India. Mr. Das's deep commitment to customs reforms has seen India's World Bank ranking under the pillar of trading across borders improve from position 146 in 2017 to position 68 in 2019, and overall EODB rankings from 100 in 2017 to 63 in 2019. Ladies and gentlemen, distinguished delegates, it is now my honor to welcome Mr. Das to address us on scaling the heights, customs administration in the globalized age. Mr. Das, please take it away.
Thank you. Thank you, everyone. Am I visible?
Let me just confirm if you're visible. Yes, you are visible, Mr. Pranab.
Okay, that's wonderful. Good afternoon, dear delegates. I am Pranab Kumar Das, Director of Compliance and Facilitation in World Customs Organization. I am very happy to be here in this session. I first thank the organizers for inviting WCO to attend this important seminar. Dear colleagues, over the last 7 decades, globalization has been the most powerful force that shapes the world, no matter in political, economical, societal, and cultural terms, or in our day-to-day life. Prevalence of multilateralism and emergence of international organizations have paved solid foundation for globalization. The World Customs Organization, as the unique intergovernmental international organization on customs affairs, and the mission we carry out are part of the efforts for facilitating globalization. Recently, a number of factors such as the COVID pandemic, geopolitical conflicts, food supply shortages, energy price issues pose challenges to the process of globalization. We have to acknowledge the fact that confidence in globalization is more likely to vacillate at the moment than ever before. But we will need to see at the same time that the force of globalization has demonstrated its resilience, adaptability, and perseverance. And a remarkable aspect of globalization is international trade. The ideology of trade liberalization is an enduring and dynamic engine that drives globalization forward. World trade today is roughly 40 times in volume and 300 times in value the level it was in 1950s. This leap in a large degree is attributed to international customs community's endeavor. Trade liberalization is essentially about eliminating tariff barriers and non-tariff barriers. In both the dimensions, customs role is always remarkable, from laying down the HS codes, implementing rules of origin and customs valuation, to simplifying and harmonizing customs trade formalities, realizing customs modernization, and coordinating different agencies at the borders under the auspices of trade facilitation. Regional integration is an important part of globalization, especially on the back of trade. The African Continental Free Trade Area is a successful example which embraces most countries in Africa as one of the free trade agreements that cover the largest population and geographical size. AFCTFTA members are committed to eliminating tariff and non-tariff measures to a high degree with the aim to creating a single and liberalized market throughout the continent. AFCFTA member customs administrations have paid sufficient tribute to regional integration by simplifying trade procedures, shortening the release time for goods, upgrading the single window systems, enhancing customs to customs cooperations. For example, the community-based systems CBS established by the Kenya Revenue Authority is a quite impressive example in this regard. The CBS serves as the national single window and integrates all necessary governmental agencies and the business communities. In other words, the approaches made by the KRA as well as other customs administrations in Africa are also indivisible composition of the WCO membership's dedication to globalization. I would like to take this opportunity to appreciate the contributions that customs colleagues across the world have made to the recovery of economy, trade, and society during the pandemic. In 2021, WCO set the theme of the year as customs bolstering recovery, renewal, and resilience for a sustainable supply chain, and therein called on the international customs community to reinforce collaboration to drive the recovery processes, embrace advanced technologies to enable innovative and digital methodologies applied in customs operations, and enhance preparedness of customs administration's staff through awareness raising and capacity building, as well as technical assistance wherever mandated. As a result of these efforts in these aspects, the world trade and global supply chain are ready for regaining vitality, and we are seeing such recovery world over. In the meanwhile, we must see that the pandemic has not ended, and there are still huge tasks on our shoulders. On the other hand, it is not the time for us to unwind, especially as many of the projects against the pandemic, for example, measures for quickly releasing vaccines and medical supplies are underway. On the other hand, we need to reflect on what the world would be after the pandemic and take on updated measures and proactive guidance in this regard. It is evident, at least, that post-pandemic world would be thoroughly enter into a digital era. Digitalization in many areas, including manufacturing, financing, trade, etc., have already commenced years ago, but the pandemic expedited the process of digitalization. When it comes to customs, demands for paperless documentation, remote submission, advanced electronic cargo submissions, non-intrusive inspection, and so on become more urgent before the pandemic. Therefore, methods for customs operations need to change. Technological innovation features the digital era. Recently, WCO published WTO study report on disruptive technologies 2022. The report enumerates a list of emerging technologies such as blockchain, Internet of Things, artificial intelligence, and machine learning. And biometrics, virtual reality, 3D printing, drone usage that customs administration can build into their day-to-day work on trade facilitation. Our survey demonstrates that customs administrations have benefited extensively from these technologies and are expanding the scope of application. Moreover, WTO dedicated 2022 theme to scaling up customs digital transformation by embracing a data culture and building a data ecosystem. The WTO has also led its data strategy, which contains 3 building blocks, namely data sharing, communities of practitioners, assistance to members. Hereby, I would like to suggest WTO member customs administrations be well prepared for the digital transformation as early as possible. And now let me focus on WTO as one of the advocates of globalization in the context of post-pandemic. The lessons that we have learned from the circumstances of the pandemic, food supplies shortages, energy crisis, point out that globalization remains the rule of thumb for recovery of the world. Globalization entails cooperation between all stakeholders, not only individual countries, but also international organizations, the private sector, and the citizens. The role of international organizations, which are driven by the numerous members, is salient because they are usually providing public products that universally benefit various countries across the globe. I'd like to mention WTO vision statement, borders divide and customs connects, which coincides with the essence of globalization. The WTO, as headquarters of the international customs community, has provided a rich set of public products that take the form of conventions, compendiums, guidelines, notes, and capacity building projects, etc. Within the WTO strategic plan, trade facilitation, revenue collection, protection of society, and organizational development stand as strategic objectives that represent the main areas of customs functions. The WTO has developed instruments and tools on trade facilitation, like e-commerce, framework of standards to secure and facilitate trade, safe framework, single window, authorized economic operator, coordinated border management, data model, advanced passenger information, passenger name record, disaster management and supply chain continuity, etc. I believe that these WTO instruments and tools will be conducive to WTO member customs administrations, modernization initiatives, and members' engagement in globalized supply chain allocation and integration. On the customs tax cooperation, the WTO has published guidelines for strengthening cooperation and exchanging of information between customs and tax authorities at the national level. Customs administration and tax administrations as well may refer to the guidelines when they're designing mechanisms and legal framework. For example, MOUs for customs tax cooperation, exchanging information and data between two administrations, taking on joint actions, training of staff from the two administrations, mutually benefiting from this exercise. WTO has provided capacity building on this topic in some countries in Asia and Pacific region, South America, North America, Central America, and Caribbean region as well. If there are needs from customs administration in Africa in this respect, WTO would be pleased to incorporate the projects for general capacity building plan. Besides working with more than 180 members, 184 precisely, the WTO also attaches great importance to synergy between other international organizations and cooperation with the private sector and academia on many such issues, such as trade facilitation, negotiations, establishment of single window, anti-terrorism, anti-corruption, preservation of flora and fauna, natural disaster relief, protection of intellectual property, fight against narcotic smuggling, updating HS codes, and so on. WTO has created partnership with WTO, UNECE, UNCTAD, even ODC, WHO, etc. All the partnership enriches the instruments and tools for globalization. Also, WTO constitutes private sector consultative group where the representatives of companies or industrial associations from private sector would sing their voices to the WTO and customs administrations. And this helps a wider hearing of globalized concerns by the general population at large. In Africa, WCO looks forward to consolidating relationship with not only member customs administrations, but also regional organizations such as AFCFTA, Secretariat, the private sector, and academia. In spite of the conclusions, in spite of that, difficulties stemming from the pandemic, food and energy shortages, and so on, the strides of globalization have not stopped. The era ahead of us will be featured with digitalization. Customs administrations should be prepared for a new digital era. The WCO, as a multilateral intergovernmental organization, is an advocate of globalization, and the many instruments and tools that I have just enumerated and will continue to benefit its members in better participating in the globalized international economy and trade. I'm sure the customs administrations gear up to this new challenge and reap the benefit of globalization as it has never before. Thank you.
Thank you very much, Mr. Kumar Das, for that very well articulated keynote address for the afternoon session, talking about the work of WCO, the ease of the movement of persons and goods, the single window system, challenging us on eliminating tariff and non-tariff barriers. And with that canvas that has been painted, allow me, delegates, to bring us to our discussion this afternoon. Mr. Das, if you could still please hang on as we discuss with our panelists in the afternoon. We have a Q&A where our delegates are posting questions, and we shall be able to field a few of those questions to you and to also the panelists. Now to discuss on the Africa Continental Free Trade Area that Mr. Das has also hinted on, is our AFCTA a catalyst for trade and value chain recovery in Africa? That's what we shall be discussing with our panelists who are also on call. So allow me to introduce them one by one. We have Mr. Peter Jonjo. Mr. Peter Jonjo is the CEO of Twiga Foods. He co-founded it, and he is the group CEO of Twiga Foods, a B2B business-to-business e-commerce company that focuses on food and grocery in the informal retail. Twiga currently employs about 1,000 people and has about 100,000 customers, delivering to about 10,000 customers every single day. The second discussant that we have is Mr. Jean Guy. Mr. Jean Guy is the regional coordinator at the Africa Development Bank, and he's the acting director of the Regional Integration Coordination Office. In his capacity, Mr. Guy Africa oversees the day-to-day management of the department and reports on strategic performance of the bank's active regional integration portfolio, currently valued at $13 billion. He is also supporting the design and financing of regional infrastructure investments and coordinates the bank's engagement and policy dialogue with the African Union, the regional economic communities, and the Secretariat of the Africa Continental Free Trade Area. Our third panelist is Commissioner for Customs and Border Control right here at the Kenya Revenue Authority, and that's Miss Lilian Nyawanda. Now, Miss Lilian Nyawanda has a broad wealth of experience in customs and international trade with the East Africa region and the African continent at large. She also has extensive experience in policy and legislation, having been part of various legislative reviews and changes. She has gained her experience from the public and private sectors as well as academia. Our next panelist is Flavor Businje. She is the Acting Director Customs at the EAC Secretariat. She is a seasoned customs expert with more than 18 years experience in coordinating, implementing, and managing customs policies, laws, and procedures at national and regional levels. Currently, she's the acting director at the East Africa Community, acting director of customs at EAC, spearheading the implementation of the East Africa Community single customs territory with the ultimate goal of attaining a fully functional customs union. And last but certainly not least, we have Mr. Alban Odhiambo. He is a Senior Director, Trade Environment Chief at Trademark East Africa, or what we like to call TIMEA. Alban is an entrepreneurial ICT and business development expert with over 15 years experience in designing, developing, and implementing trade, transport, and logistics systems that aim to enhance efficiency and sound governance of public and private sector organizations such as customs administrations, port authorities, standards and quality agencies, among others. He has been involved in the implementation of information systems across Eastern Africa and Asia. Esteemed delegates, we have only the best of panelists for you this afternoon as we break down the Africa Continental Free Trade Area discussion. And we ask ourselves, is this a catalyst for trade and value chain recovery in Africa? I want to start the conversation with you, Peter Jonjo. And Peter, good afternoon. Good to see you. I saw you in the morning and thank you for staying on with us. One quick thought on Mr. Kumar Das's presentation. Plus, I want you to also delve a little bit and tell us what has been the impact on livelihoods in Kenya for Twiga Foods. Mr. Jonjo?
No, thank you so much, and thank you so much, Regani, for having me on this esteemed panel. I think the first thing is to step back and look at how her value chains have been disrupted, because sometimes when we talk about the Africa Continental Free Trade Area, it's good to also have a context in terms of a problem that we're trying to solve. I look back during the COVID period, and many of you were aware that at some point, containers in the world got displaced and goods could not move as freely as they used to. And when I look at before COVID, and you look at the amount of rice that was coming into Kenya from Thailand and India, was a significant amount. And if you looked at the ports and all the warehouses around the coast, everywhere was full of Indian and Pakistani rice. Something interesting happened when we had the disruption of a value chain and it became extremely expensive to import rice. We suddenly discovered that our neighbor Tanzania has enough rice to actually meet the Kenyan requirement. And it was very, very interesting to note this, that, and that's the first time actually I took a trip going out into Tanzania. And I was surprised by the quantum of rice that exists. Kenya today imports maybe about 650,000 metric tons of rice. Tanzania produces 2.2 million metric tons of rice. It is enough to feed all of East Africa based on the requirement that we have. And the key thing is that sometimes you'd never discover that because smallholder farmers are sitting with inventory and have nowhere to sell the rice. They're actually sitting on a surplus, while on this other side, we're actually spending Forex, importing from countries actually that want us to pay in dollars, yet we'd have paid in local currency. So, and this starts opening our eyes in terms of just the potential that we have in this space. Another one I want to note is around maize. Today we are having a maize shortfall in the country, but if you look at the amount of maize that's coming from, again, Tanzania, coming again from Zambia, it starts telling you a story that if we then have a bit more coordination amongst African countries, there's significant opportunity for us to actually start making a significant impact in terms of how we operate. The other thing I wanted to highlight is we've also seen significant issues around things like fertilizer, because we're being hit from two sides. There's a devaluation of a shilling, and then there's a commodity inflation because of the war that we have with Russia. And that's why you're seeing, for example, the government starting to talk about the importance of doing this, because unless we get fertilizer and other commodities to be affordable, we will continue importing. And it's very sad to see Kenya today importing very, very basic commodities. So I think if we can restrict our importation to neighboring countries and manage the forex, and then also start figuring out ways in which we can create affordability of inputs, then that has a huge impact. But let's talk about the livelihoods, which was a question, the second question that you talked about. The key thing that is interesting is that if you look at the history of Kenya over the last 10 years, household per capita income in nominal terms has been growing in the single digit space. When you adjust it for inflation, it is declining, which means that affordability is becoming a very, very big issue in Kenya today. And the key thing is that because of a commodity pricing or because of inflation, we are seeing changes in consumption behavior. I'll give you an example that I saw that was very, very interesting. During COVID, the price of wheat flour became cheaper, actually was half the price of maize flour at some point during COVID. And it was very interesting when I went out into the market to actually visit, you know, the mamas who cook for the construction sites. It was very interesting. Overnight, everyone switched from ugali, and now everyone was having chapati and tea. And it just showed you that how quickly consumer trends change on account of affordability. So the key thing is that I think we've had significant challenges around affordability, and I think there's a huge opportunity for us to address waste. Where we work as Twiga is working on value chains and eliminating waste. You know, many of you might not know, for example, 50% of the tomatoes that are produced in the country sometimes don't make it to the retailer or don't make it to the consumer. A lot of that is actually lost due to handling and post-harvest losses. And when you think about the wastefulness of the informality of our supply chain, I think there's a huge opportunity in terms of sorting out some of those challenges. And that's basically what Twiga does. We leverage technology, we make investments in infrastructure to eliminate this waste, because we can see that the consumer is very, very stressed right now. And they're basically looking at ways in which they can access food more affordably. So when I put all that together, I think there's a strong case around import substitution, localizing our value chains, and where we're not able to do that, there's an even stronger case for the Africa Continental Free Trade area, because then you find that there's a lot of our neighbors who actually have surpluses, and we don't have to pay for that food using foreign currency. So that's basically some of the trends that I see in our space and some of the dynamics that I see that are becoming more and more relevant in this food security conversation.
Thank you very much, Peter, for that. And even just sharing the opportunities that Kenya saw thanks to COVID, when we now turned to our neighbor right here who had the food that we were looking for across the seas. But I want to bring in Commissioner Lillian, who's the Commissioner for Customs and Border Control. Hearing what Peter has said in terms of the leveraging on opportunities that cross-border trade can give us, and hearing what Kumar Das also presented, then my question to you is, what is Kenyan Customs experience in championing integrated cross-border trade to facilitate legitimate trade within the country?
Thank you again, and thank you, Kumar and Peter, for the insights. So I'll just take us through what integrated border management means, then I'll go deep into the Kenyan experience. So basically, integrated border management is the organization and supervision of border agency activities to meet the common challenge of facilitating movement of legitimate people and goods while maintaining secure borders and meeting national legal requirements. Basically, it's coordinating all this together: movement of goods, people across the borders, and ensuring that we are protecting our borders and we are facilitating trade, along the process. So integrated border management has three pillars. So one is intra-service cooperation. That is basically cooperation within the same agency. So if I can talk about KRA, how does this work? We have different departments in KRA. Of course, Custom is the one that leads in terms of border management and coordination, but within KRA, we have other departments like our ISO department, investigation and enforcement, where we work together, we coordinate
so that our activities then are not in competition, but we cooperate together to ensure that we are protecting our borders, and we handle smuggling and all other things that may be interfering with our trade, and we facilitate along the way. Having talked about intra-service cooperation, that is within the organization, in this case it's authority, the next pillar is inter-service cooperation. Now this is cooperation across different agencies. So Kenya has different agencies that we brought together, and we take a whole government approach. So in managing our borders, we have actually more than 20 agencies that are in this process. So we've come together, and for the land borders, customs, basically under KRA, is the lead agency. For the air, anything coming through air, then we have the Kenya Airports Authority leading, and anything through the port is led by the Kenya Ports Authority. But if I can talk about the, basically the land borders, we have agencies like the National Police, the National Intelligence Service, we have the Kenya Maritime Authorities, KEFIS, Kenya Defense Forces, the immigrations, all these come together. And then we take one approach, because whereas immigrations may be dealing with individuals' movement, customs is dealing with the movement of cargo. So when you put all Kenya Defense Forces looks at protecting our borders, so all this put together, then there's concerted effort and coordinated approach in handling our border issues. So that's the second pillar. The third pillar is international cooperation. So we've dealt with, managing ourselves within the authority and organization. Now we've dealt with different agencies, pulling the different agencies together, to be able to manage our borders. Then the third point is now cooperation across our national borders. So that's where EAC comes in, COMESA comes in, ACFTA comes in. And if I can delve deeper into this, we have several partner agencies and development partners that we work with. We have Trademark represented here in this panel. We have UNODC, WCO, we have the US Customs and Border Protection, we have Interpol, we have JZ. All these are development partners that help us in this process. However, if we can talk about in terms of the border points, some of the initiatives we have in the land borders is the one-stop border posts. So Kenya has 7 one-stop border posts. That's basically Moyale, Isebania, Malaba, Busia, Namanga, Taveta, Lunga, all bordering different countries. Ethiopia on the north, we have Uganda, we have Tanzania. And in all these border points, we have a coordinated approach where with Uganda, for example, if goods are crossing into Malaba, we only clear the goods at one point. So move exports from Kenya to Uganda, the goods arrive at Malaba, which is the border point between the two countries. They cross over to Uganda, then they are cleared at that point. And and vice versa. If goods are coming into Kenya from Tanzania and they're coming through Namanga, they cross over at Namanga into Kenya, and then they're cleared at that point. So that way we remove the duplication of, of clearance and paperwork and all that. So we have just one stop border point. So having talked about the 3 pillars, then I'll talk more about Kenya. So how did this, coordinated agency and border management operations come across? So again, this came through legislation. So we have the Border Control and Operations Coordinated Committee, we call it BCOCC, which was established through security laws, an Amendment Act of 2014. So we have the legislative framework that then gives us the power to operate in that, in that management. So in terms of levels, we have the Border Management Secretariat, which is the executive level of the different agencies. And then we have now border management committees on every border point. So at the land borders, we'll have committees that are led by customs team who chair this, the different agencies. And then at Mombasa and the airport, we have joint operations centers again, where we bring together the different agencies, and we have lead agencies there. So basically, in terms of how this has helped us, in terms of efficiencies at the border point, bringing the agencies together means there's a coordinated approach, there's a whole government approach on our side. Efficiency, even with the other countries, the agencies on the other side and across the borders, efficiency and compliance levels have gone up because we have one mandate and we are all pulling towards the same direction. efficiency, revenue uplift. We've seen increase in terms of the revenue you're collecting, because again, with this approach, then we're able to safeguard smuggling and other illicit trade and ensure that we are facilitating legitimate trade and getting the revenue that ideally is due. We've also ensured integration of our systems, like, for example, Uganda and Tanzania under the single custom territory, we've integrated our system, so it makes it easier, to clear the cargo and to facilitate trade. One of the other issues I want to highlight is the impact, apart from, just our core mandate of trade facilitation revenue, and, one of the impacts we've had is even in the community, where we come in together as agencies, be it at Moyale or Malaba or Taveta, be it at the border between Namanga, where Kenya and Tanzania are coming in, the community around there has grown. And we've seen impact in terms of, businesses cropping up, economic activities coming up. We've had a lot of influence and impact on the community. We've trained a lot of our women, especially, and there's a lot of focus on women and small scale traders. So there's a lot of that also, the softer issue that we are looking at this, just apart from our core mandate of trade facilitation and revenue collection. So again, those are my few remarks on integrated border management. Thank you.
Thank you, Commissioner Lillian, and especially of highlighting the three areas, the three corporations: intra-service, inter-service, and international cooperation. And I just want to borrow on that and leverage also on what Peter talked about in terms of buying the rice from Tanzania. And I want to bring on board Flavia from the EAC. Now, Kumar Das talked about the single and liberalized market throughout the continent. From an EAC perspective, hearing what Peter has talked about, how easy, or maybe it was not too easy, but then it was simpler to buy rice from Tanzania, hearing what Commissioner Lillian has talked about in terms of the three areas of cooperation and most of the international cooperation, as the EAC, what is the policy framework or policy coordination framework for border management in EAC, the East Africa Community? Flavia?
Yeah, thank you very much for the opportunity, and I'm glad to be part of the team. Basically, the framework that governs border coordination at the EAC level, I may not say that it is a one-size-fits-all because it has different dimensions, but particularly at a regional level, we pick the policy framework from the Customs Management Act, which is implementing the Common Customs Union Protocol, which was established in 2005. And from that time, the community embarked on establishment of common border points. So we basically look at the international practices like the World WTO trade facilitation agreements that relate to coordination of borders. We look at the Customs Union, the Customs Management Act that provides for clearance of goods across the border, and also the most recent being the OSBP, which is the act that manages the operations of the border. This act particularly brings about the establishment, the operations, and the coordination of the borders of the different agencies, as has been mentioned by Commissioner Lillian. So the policy itself is cutting across because we have the national approaches, that particularly those that relate to the adjacent borders, because like I said, we have the regional law, but also other laws do affect the operations of the OSBP, because if partner state A wants to collaborate with partner state B, then they have to enforce the laws that govern their bilateral operations. The framework that has enabled us to also establish the committees, the different committees to deal with the operations of the border. That is we start with the interagency cooperations. We have the national committees, then the regional committees, and then we have the council that usually gives directives that are implemented by partner states. That is in case there is need for the council to intervene. But also this one, the other policies that lead to alignment of like working hours, particularly for the borders that are operate at as OSBPs. We have about 13 OSBPs that are operational, and most of them operate at different working hours. But the most important part here is the policy or the alignment of the same time to ensure smooth operations of clearance and also movement of people. We have the SAFE framework, the WCO SAFE framework, which provides for the supply chain, particularly looking at the borders. Commissioner Lillian talked about the single customs territory. We have talked about interconnectivity. All those are embedded in the regional laws, particularly the Customs Union Protocol and the Act itself. But we also have other policies that come from the different agencies, like the police, the security, for purposes of safeguarding the security of the borders. And we also have to the other agencies that have different operational laws. So at our level as a region, we do have the Act itself, the protocol, the acts, and the international practices that help us to align our policies relating to border management. Thank you very much.
Thank you, Flavia, for painting that broad strokes in terms of the governance framework for border management from the EAC perspective. You mentioned a lot on the OSBPs, which are the one-stop border posts, and the team or the organization that has been helping us implement the OSBPs in the region is Trademark East Africa, playing a very active role in that. And so it only behoves me to welcome Alban Odhiambo from Timea, Trademark East Africa. You've heard what the previous discussants have talked about. And for me, the question is, what is the future of border management from your perspective? And how do we make border management sustainable? You've had the frameworks, you've had the policies, you've had the traction in Kenya, the traction in EAC. From Timea, what is the perspective?
Thank you very much, Wageni, and good afternoon, all participants and fellow panelists and the speaker from WCO. A very interesting question on what's the future, and that's something we've been crafting and discussing and co-creating together with our stakeholders. And it all begins with how I would probably talk of this on how we do trade across borders in particular and how it looks like. And I would want to use the analogy of a wedding. So imagine you are in a wedding and there's the bride and the groom, and the bride and the groom during their wedding day are trying to get everything organized. So they are the same people trying to organize catering, where people sit, and all of that. It just looks messy, right? And that's exactly how we trade today, even with some of the progress we've made as a region, and hopefully we will do along the continent. That's how messy it is. The kind of trade we want, the kind of borders we want, is like when you go to a wedding. The bride and the groom have nothing to do with anything to be organized or to be done on the wedding day. It's their day. So behind the scenes, they are all the organizers, the planners who get everything done for them. Their work on the wedding day is to show up. Now, that's the kind of borders we want. We want borders where goods show up and all the other things are done. And that's the idea we think of futures of borders. So in fact, in our narrative now, we've started talking of integrated corridor and border management frameworks. So we should start thinking of the future of borders. A border is a continuum. It's not a geolocalized place where all the action takes place because of the constraints we have or the kind of procedures we have or systems we have that limits what we are able to do, and therefore all the action takes place at this confined location. This is not sustainable, even as we set up one-stop border posts. COVID demonstrated that along our borders, whether it was Namanga, Malaba, Busia, the kind of queues we could see that are there. And even present day up to now, that's the reality we have. So some of this infrastructure we are setting up to facilitate trade, as long as we remain with the understanding of a border as a geo-localized position where all action takes place to facilitate trade happens, will not help us create the kind of efficiencies and connectivity we need. So we need to think of corridors, borders as a network so that connects. And therefore the mindset we need to move into is one where actually where the consignment is, that's the border. So as the consignment moves towards the border, it's irrelevant. So we should be moving to a new dispensation where we just don't talk of one-stop border posts. We should be talking of no-stop border posts. Because why should a container be stopped at the border if we have customs and border entities of the countries of interest from the point the consignment is moving through the collaborative frameworks, cooperation frameworks between customs, other border agencies, the importers and the exporters, and across the countries of connection on transit, that they are connected seamlessly, they are sharing information, they are sharing processes and procedures, they are sharing intelligence, they are also finding mechanisms of resolving disputes. Why should a consignment stop at the border? For what reason? There is no reason absolutely, unless that reason is to identify that this consignment so crossed this border on this day. That's the kind of future borders we want, and that's the kind of efficiency our private sector needs. Our private sector does not need efficiencies where a truck spends 2 days at a border waiting to go through border formalities. Those 2 days, in terms of the value of that truck, and I'm sure Peter will resonate with this very well, the value that that business is losing by 2 days spent being static, because a truck only makes money when it is on motion, is revenue lost to that business. That revenue lost to that business is tax loss to the government. So it all has a ripple effect on all of us. So as long as you see a truck parked at a border, everyone is losing. We are all losers. And therefore the future we think, as I said, is these seamless borders, and the technology is already there. KRA is already building some of this, and the other revenue authorities in the region are building this. And I think this is the future we want, and this is how we make our supply chains seamless across borders. Peter, I'm sure will tell you that when you talk of whether it's e-commerce or just normal conventional movement of goods in the continent, the biggest hurdles they face are logistics and, of course, cross-border payments, the issue around how payments are managed and settled. But when you look at logistics, and that incorporates all border formalities, processes, and procedures that happen at a border, there are major encumbrances in many ways that we need to make seamless. It's so disheartening that you will even hear stories, for example, either like in West Africa, we've been engaging there, where you'll hear stories like it's much easier to import an item from China to West Africa than to move it, let's say, from some part of Africa to West Africa. And we are the same continent. We need to address those issues. And I think one of them is working on our border frameworks, creating those connected corridors. And as I mentioned, the EAC experience and our experience has shown us that it's possible. The political will is there. We can leverage on that, bringing the agencies together to agree on common frameworks, and then moving towards this new dispensation of corridors and borders as seamless locations where consignments move. And that way, then we make our corridors and borders safer for our people. We make them more secure against illicit and illegal trade. We also make them more efficient and more coordinated. And that's the beginning of us creating those value chains that need to emerge to support our economies as they grow and as they become more competitive. And finally, as I mentioned, this is one of the factors, not the only one, but one of the factors that will contribute significantly, and I learned the word significantly, in making our businesses, our supply chain, more competitive within the region, within our countries, and within the continent. And as I finish and I conclude my remarks, is that let's just remember, every single time you go to a border post and you see a truck parked there for 6-7 hours, that's revenue lost. That's money we will not get. That's money gone down the drain, and all of us lose. It's not just the transport company that loses. Every single one in Kenya loses, the region loses, because that's another uncompetitive business we've just made. And that's a business that is going to be outcompeted by another business in another part of the world they are not even aware of they are competing with, that is going to, in a few years, open shop here and run them out of business. So I think the success of our businesses, the success of our system is all in our hands. And I think the vision we have of what we need to implement is there. And if we champion this, working on available solutions that are there, we can create these realities, and they are not rocket science to be done. And the EAC experiment has proven this, and I believe the continental framework will also prove this. These are things where political will, ease of negotiation, and agreeing on frameworks can make this happen. Funding could be an issue, but funding should not be what holds us back. Good solutions, good ideas, always find funding. They will never miss that funding. Thank you.
Thank you, Alban from Timea. At this summit, I think the sub-theme should be co-creation. So Alban has thrown a couple of spanners in the works. He has said, you know what, let's stop calling it integrated border management. Let's call it integrated corridor and border management. How about we even stop talking about one-stop border posts to no-stop border posts? I think Commissioner Lillian has a comment on that. But before I get to Commissioner Lillian, why don't we talk to the financiers, Mr. Jean-Guy Africa from the Africa Development Bank. With everything that you're hearing and the conversations going on, does AFDB play an active role in border management in creating a borderless Africa for trade of persons and goods? Jean-Guy?
Thank you very much, moderator. And we definitely do. And usually our intervention in border management are embedded in our wider program, particularly in our regional infrastructure programs in the area of transport. When you think of it, whenever we invest in regional infrastructure for the transport sector, it's to allow people primarily and goods to move. So over time, a clear realization was that if we do not embed elements of soft infrastructure in our projects, we will not achieve that ultimate goal of any road that is to move goods and people. So virtually every transport operation has within it elements of customs modernization, border management embedded within them, particularly transnational infrastructure, transport infrastructure projects. So usually the type of activities that would be included in those programs would focus on customs modernization, the utilization of intelligence-based risk management and post-clearance audit systems. We would aim to enhance cooperation and partnership We would push for the adoption and the automation of procedures and maximize the use of digital technologies. We would include activities to promote a culture of integrity and a professional knowledge-based service culture. We would try and establish cost-effective dispute settlement processes, and really, where it's needed, establish the legal frameworks that Ms. Nyawanda referred to earlier that would allow us to even start engaging. For example, not all borders around Africa have OSBP acts, and the model of the EAC, which I used to work for, about 12 years ago, is quite a telling one. Before you can even bring customs to work together, you need a legal framework, a supranational legal framework. And what you see is different recs are at different levels of development. So East Africa is definitely leading the way. We've supported the OSBP thing between Arusha and Namanga, again embedded within a larger program. And we are actively supporting many programs within the EAC to roll out these OSBPs across the region. I think this will serve as a sort of pilot phase that we can replicate to other regions. I'll share some of the challenges we faced in the past, some of the things we see there, some of the details coming out from our ongoing support within the area of integrated border management. I think the first one is resistance to change. It's one thing to pass these rules, and what we see often is the center implements them relatively quickly. The center, I mean the city. But then you find great difficulties in achieving the same level of implementation throughout all the country's border. The larger a country, the more challenging that it is to break through resistance to change. I think earlier there were mentions of the number of institutions involved: police, immigration, ports authority, customs. Imagine each has a policy imperative. In some cases, sometimes vested interests. It's very difficult to break through all of them and force through change. So resistance to change is one issue that we've often found. The dearth of, the absence of legal frameworks to back the exercise of modernizing customs is something that also run against a lot of times, particularly when you're trying to implement it at regional level. Sometimes the rules exist at national level, but there's no OSBP Act, or there's no supranational rule that governs the customs, the conduct of customs at regional level in such a way that we can move with the establishment of certain institutions that would help us move faster. Of course, you've got the issue of cooperation and connectedness among government agencies. I mentioned it earlier: police, immigration, ports, standards bodies, and then in some cases, failure to involve the private sector. Yes, so these are some of the challenges. Overall, it's an absolutely crucial sector for us because we've realized that it's one thing to build roads, multinational roads, and we're very good at that. We've invested, in infrastructure in general, close to 40 billion over the last 6 years alone. So we specialize in infrastructure. But what we've realized for transport infrastructure, regional transport infrastructure, is that we can only succeed if we involve customs early enough and we embed within it all the elements you've mentioned today, the integrated border management systems. Thank you very much.
Thank you, Mr. Jean-Guy, for that. I would like to remind our esteemed delegates that our Q&A session is still going on and it's open for you. Do you have a question for the discussants? Do you have a question for our keynote address, Mr. Kumar Das? Please post it at the Q&A section and we shall be sampling a few of them to share with them to our discussants and to Mr. Das. And before I head there, Commissioner Lillian, I wanted to circle back to you and hear your thoughts on, you've had Jean John Guy's, now you have the advantage. You've had John Guy's propositions, his challenges, especially resistance to change, etc., where the center is very easy to implement, but as you spread out, it becomes a little bit difficult. But then I also want you to comment on Mr. Alban Odhiambo's proposition. How about a no-stop border post? How about an integrated corridor and border management process? We want to hear your thoughts on that, Commissioner Lillian.
Thank you, again, and thank you, John and Alban. And I must say, these are very, insightful thoughts, and my mind is just speeding and thinking of all the possibilities, Basically, I think the challenge, and I think I like what John said in terms of how do we look at the legal framework, addressing the resistance that there, how do we then think beyond, where we are at right now? It calls for a lot of thinking. I'm thinking the world is basically one market right now. And as Alban said, I couldn't agree more, with what Alban said in terms of we need to go beyond thinking of the physical borders and go, beyond that. And for me, as Alban was talking, I was just thinking about basically we should look at more virtual borders. They are actually virtual borders, so that because I'm thinking of organizations and they're thinking very fast, and the world is changing. I'm setting up a farm, a manufacturing plant in maybe Seychelles, and I want to supply the Reunion Islands and South Africa and Mauritius and everyone else. And I don't, my market is in all over Africa. I don't have to set up manufacturing plants in all the other countries, So you leverage on where the expertise is and the materials are, and you want to, even just talk of Kenya, many companies want to set up here as a hub and then supply to the rest of Africa. So then that calls for us to think beyond, and I'm challenging myself, from a customs perspective, to think beyond just our borders, the immediate borders that we, the 7 OSBPs and the land and sea borders, and think through on then how then can we be at the forefront as customs to lead this conversation and engage the private sector, Peter and the team here, and see what are you thinking, come into their space and think, what are your thoughts? What are the possibilities? Then leverage there, look at our laws and see what then do we need to change and adjust, what are the policy changes that we require? What are the legislative amendments that may be required? And then how do we tap in then from a ESC level, ACFTA level? Africa is becoming one market. And then once we reach there as Africa, how then does Africa deal with Europe or North America? I think it's a bigger conversation, but I like the fact that we are somewhere, a journey of 1,000 miles starts with one step. The thoughts are coming through, we are somewhere, and I'm happy to engage further and just see how we can put these think tanks together and, create a world of possibilities. So those are my reflections, Wageni. Thank you.
Creating a world of possibilities, and that's what this conversation is about. We are weaving in between the integrated border management in facilitating legitimate trade and talking about also the Africa Free Continental Trade Area. So we are just segueing between these two great conversations because we've got such a great panelists here with us, and the audience is talking. And allow me to share the first question, and it's to you, Mr. Peter Jonjo. I think that story of rice from Tanzania really tickled a couple of our delegates. And here's a question for you. So the person says, thank you, Mr. Jonjo, for sharing your insights. What are the price disparities, if any, between the rice you sourced from Tanzania, Kenya, Thailand, and India? And why do you think that those price disparities exist? So talking about pricing of rice from across our borders.
No, thank you so much. And maybe I'll just first start by providing some context. Tanzania is very different when you think about how it farms compared to the neighbors around it. So what has happened in Tanzania over the years is that people have actually settled in towns or villages, and they do not live on their farms. And their farms are more or less open for agriculture. So what you're seeing in Tanzania is that there's been a significant amount of mechanization within the smallholder farming ecosystem, which has allowed for very, very large contiguous farms producing certain products. Now, when you go to places like southern Tanzania, the other thing is that the government has a policy of certain products being grown in certain areas. So if you go to places like Mbeya in the south and all you see is rice. And what the Tanzanian government did, I think 10 years ago, was to introduce a rice variety that was specific to Tanzania. They call it Saro 5. And this Saro 5 variety has actually a larger, a more significant starch content. And the whole idea was, how can Tanzania use rice to meet its food deficiency? And what has happened over those 10 years is that Tanzania has more or less like grown its rice production or rice output by over 10x or tenfold. And that rice is now basically what we are importing into Kenya. It's very different from what you get in Thailand and India in terms of a basmati rice. But it is a rice that also is very, very nutritious and also has a unique taste. And the difference between the two is that, you know, if you're importing a bag of rice, so we deal with 25 kg bags, because our customers, the kiosk, they normally use that rice to scoop. So you can buy a cup of rice or you can buy 2 cups and all. So basically, this is scooping rice that is targeted towards the lower end of the market. And a bag of Tanzania rice, when the rice is in season, is sometimes as low as 1,500 shillings for a 25 kg bag. But when you're importing the rice from Thailand, sometimes it'll cost you about 2,200 shillings a bag. So you can see that there's significant disparity between the two. One can be paid using a Kenyan shilling, Tanzanian shilling equation locally. The other one is paid through using dollars. And we also have to ask ourselves, you know, in this age that we're getting into where dollars will be very, very scarce, how do we want to use that going forward? So those are some of the dynamics that I'm seeing in terms of price. But also one thing it has taught me is that if a country really, really focuses on a problem and doesn't let go, this is not about saying that we will do it this year. You're having a 10-year program and you can see the transformation that has happened in Tanzania. I'll give you another example. Sometimes we're even buying potatoes from the southern part of Tanzania. And those potatoes sometimes travel 1,500 kilometers to come to our warehouse. And sometimes the quality is much better than some of the potatoes you buy from, say, some of our potato growing areas in the country. And all this is dependent on how we've actually approached agriculture. So I think the key thing is that, and I think just lastly to close this point, you know, we have a huge opportunity as a country in terms of fixing some of these supply chains. But if you look at it, agriculture is 30% plus in terms of contribution to GDP. The amount of financing from banks going to agriculture is less than 4%. And that 4% is going to exporters. So the key thing is that you're expecting farmers to transform the way they produce, but they're not even able to access capital. So we need to first find ways in which we can give them access to capital and help them transform their means of producing and basically help bridge the food gap that we have.
Thank you, Peter. I can tell you that Mr. Swalehe from the Tanzania Revenue Authority was chest stamping as you talked about how much we are importing from Tanzania. And Commissioner Lillian was not very excited because we are not... You're not talking much about the Kenyan agricultural produce. However, that's not the conversation for now. Allow me to bring in Alban. Alban from Timea, we have 2 questions for you from our audience. And the first question is, what are some of the practical steps or projects that have been funded to facilitate growth to our economy, both in the short run and the long run? And the second question is, what are the practicalities of the prior suggested models to facilitate smooth export systems?
Thank you very much. Those are very good questions. So some of the practical projects, and some of them have been mentioned here as Commissioner Nyawanda mentioned, for example, the one-stop border post. We've done a lot of one-post border post projects, and within them also worked on creating the integrated or coordinated border management frameworks, working with KRA and the counterpart customs entities and border agencies of our neighboring states. So, for example, the Moyale OSPP that was built by support from the African Development Bank, we worked on the IBM framework, working together with Ethiopian and Kenyan customs and other border agencies. And we've done the same on borders between Kenya and Tanzania at Holili, Taveta, done the same at Busia. And we've done other borders as well with the other countries that don't share borders with Kenya, e.g. Rwanda and Burundi. So those are some of the initiatives we've done. And of course, one of the big ones is on customs digitalization and modernization. So in Kenya, we've supported KRA on the new integrated customs management system. So that was funded through UK aid, supporting Kenya. Also setting up the new KRA data center as well. So moving KRA towards that capacity to be able to host, manage, build homegrown solutions that support customs modernization, having a state-of-the-art data center and hosting facility of their own. And there are other sort of softer aspects that we have supported on digitalization, work with Kentrade and many other government entities as well. So I think there's a lot we've done as an organization, particularly in Kenya. I'll mention probably the confines of Kenya, that has really helped in a way to facilitate trade and to reduce transit time. But there, as I mentioned, there is still more to do. So those are some of the practical examples. Now, whatever I was talking about as the future, I don't want us to think that this is sort of like a dream we have. Some of the steps towards this future I was talking about, as Nyawanda mentioned, of building this sort of virtual borders or how we make it seamless, good border, it's already happening. So one of our flagship projects, we've been running this for the last, on a pilot basis for the last 3 years, is called the Trade Logistics Information Pipeline. So it's this digital backbone based on distributed ledger technology, similar to blockchain. We're working with KRA and other Kenyan government entities, of course, led by KRA and Kentrade, where the idea is we try and connect our systems, our processes, procedures with destination markets where we import or where we export. So let me give an example like the UK. So we know what we export to the UK, we know what we import from there. So we get through a digital platform, KRA and HMRC in the UK, create a coordination framework of sharing information to facilitate faster clearance. And the other agencies do a similar framework. And through this digital platform, number one, they share information and processes. So whatever is cleared by KRA as leaving Kenya, i.e. at JKIA or Mombasa Port, is considered as good as already cleared in the UK market. So it will not have to be subjected to additional border rigor procedures and administration, whether it is landing at Heathrow or at Felixstowe or any of the other ports in the UK. It will access the market immediately. And that's already a project we are trying to pilot, and there's a lot of excitement about it, speaking with some of the destination markets that we sell our exports, let's say in the Netherlands, where a lot of our flowers go to. Of course, I mentioned the UK. There's of course big interest also from the US because of our Goa exports. There's also interest as well from other countries, for example, like China, on working on this. And of course, we are working with KRA as the main interlocutor of this connectivity that we would need to facilitate all the other border agencies. So this future we are talking about of virtual no-stop borders is going to be a reality sooner than later. And for me, my excitement is Kenya, East Africa is going to be part of this pioneering. 4 years ago, when we brought this idea, we were almost shut down and told it's not possible. 3 years down the line now, people are excited and saying, wait a minute, this sounds a very good way of doing trade facilitation and making sure we are facilitating access to credible data, access to data that helps customs do their evaluations, clear consignments much faster, and makes businesses focus on their core business. So I'll give an example. Kakuzi Flowers, Kakuzi, the exporters of avocados, as we know, have a large logistics department they have employed. The reason they have done that is because of the complexity of the logistics way of moving consignment, getting permits, clearance, and all that. So if we make this seamless, Kakuzi doesn't need a huge logistics department. Doesn't mean those people become unemployed. They probably now engage on more sophisticated ways of doing logistics. That's value addition. Now, this future for me, as I mentioned, I'm excited because it's going to happen sooner than later. And actually, EAC Kenya will be part of those frontline states that, believe you me, is already doing this. So this will be a new way of how then we show the world better ways of public-private sector partnership across borders, across countries, collaborating to make seamless, borderless supply chains that facilitate trade, but still guarantees security and safety against illegal trade and also illicit trade that may be happening. So I'll probably conclude there and say, just tell the audience, this is a reality for me that will happen sooner than later. And let's just work together on this. On Kenya, we are working with the agencies here very hard on pushing this. In the EAC, we are doing the same as well with Flavia's team already on similar concepts around ACT. And some of this we are going to be pushing as well as ideas at the continental level, because this is what is help us to digitally connect and translate those digital connection to supply chain efficiencies and make our businesses competitive. At the end of the day, any government, any revenue authority, any tax administration, what they want are profitable, competitive businesses, because that's how you enhance your tax bracket. That's how you enable trade facilitation to work for those businesses. And that's the clear mark that what we would be doing as facilitation is succeeding. Thank you.
Thank you very much, Alban. Alban, you always have one that you have in the heart that we didn't see coming. But really appreciate, I think you have ended it well, that the point is that we need to guarantee that society will be protected, trade will be facilitated, taxes will be collected, and so will statistics, even though we go the virtual one-stop border way. So thank you very much, Alban, for that. I have an audience question, and I want to bring in Flavia from the EAC. And this question goes to you, Flavia. And the audience is asking, what are some of the measures to curb the high rising rates on inflation, specifically on food and local sectors, so as to sustain growth across Kenya and the EAC, which has been stagnating? So the audience is coming from a perspective where growth in the EAC has been stagnating. So maybe that's one area you want to clarify. And then secondly, you want to give a comment on the high rising inflation rates. Flavia?
Thank you very much, Madam. Well, I will just, first of all, give the perspective that with the expansion of the ESC and having 7 members right now, we anticipate to benefit from the expanded market in terms of probably industrialization and also looking at the opportunities that come with the expansion of the community. So we would look at it in line with the approach of industrializing the East African manufacturing sector, so that we are able to curb the prices that are coming up. We recently noted that the Russia-Ukraine crisis really made it so difficult for the world, not only East Africa, but it was a global crisis. So we are looking at it in line with how best can we promote our own production by giving probably incentives to the manufacturing sector that will be able to improve in terms of maybe importation of fertilizers that will enhance production within our region. So the sector itself that will manage the food crisis will lead, first of all, the political will to enhance production within our area and also provide for other incentives that will facilitate farmers, and also development of transport sector that will enhance movement of foodstuff from one area to the other. We are talking about, yes, integrated border management, but how best, if you take an example of what is usually the crisis that we usually have at Namanga, it's usually not because of the transport issue, but we know we have the infrastructure in place, but there are other barriers that create limitation in terms of access to foodstuff. We know Tanzania has quite a lot of agricultural produce, but how does it reach to the beneficiary? So those are some of the issues that we need to look at as a region and try to harmonize the procedures that come with such limitations. We have different facilities in terms of accessing the different markets. We know that region A is able to produce that much. We can come up with what they call, the sheet that will help us to understand where it has more produce and how it can easily be accessible. So it is a combination of a number of factors that can lead to the reduction in food supply or food prices that are coming up within the community. That is all I can comment on that, on the food price. Thank you.
Thank you very much, Ms. Flavia, for that comment. And you touched a little bit on the Ukraine-Russia conflict, and I'll be coming shortly to Mr. Jean Guy on his comment on that. I have a question for you. But before we go there, Mr. Kumar Das, you've had the conversation that's going around the table. I have two questions for you. One, I want to hear your comment on the conversations that are across the table. And secondly, I think there's an audience question from Mr. Kumar. And the question is, given that the future is borderless, what sustainability measures or frameworks are in place or can be implemented from the global perspective to support Africa achieve this? So one, you give us your comment on the discussion that's going around the table. And secondly is to answer the audience question. Mr. Kumar. Mr. Kumar, you're on mute. Great.
Yeah. Thank you, Wageni. Yeah, I heard a very interesting conversation starting with Peter, then Lillian, then Alban. It's very interesting to know the way the things are moving with KRA leading the way and the kind of improvements that the KRA has undertaken, particularly the systems that they have put in place. It's very interesting to know that they have very robust system in place, particularly the community-based systems, and then the system like customs management. These are all based on the kind of the single window system that WCO has been championing, or coordinated border management, that the guidance, that document that we have been providing. And the other issue that Albert mentioned about the distributed ledger system, or the kind of system that they have also thought of implementing, which will take the different co-creators joining together. And when we talk about different co-creators joining the system, then we think about the safe framework of standard, which has three pillars: customs to customs, customs to business, and customs to other government agencies. The three pillars, particularly the customs to business, is one important pillar which perhaps has come out very strongly post-pandemic, and that we have also the private sector coordinated group, consultative group, which we are coordinating with customs and WCO. And this has come out very strongly during the pandemic, particularly the kind of cooperation that we received from the private sector in ensuring that vaccines are properly distributed seamlessly post our council resolution, which is how customs can seamlessly move the vaccines and also target the counterfeit vaccines. So we had different operations like Operation Stop, which was which we conducted over a period of time. Almost Operation Stop had 3 layers where we had undertaken it first with general counterfeit, how to address the counterfeit medical products. Then once vaccines got published, to ensure that the listed vaccines with the right information is carried out, and we circulate that information with the help of the vaccine manufacturers. We consulted Johnson & Johnson, we consulted Moderna, Pfizer, or all major vaccine manufacturers, and had a sensitization. Almost 5,000 customs officers over a period of time were sensitized. And this was a wonderful operation across continent, across all the member administrations, with the help of international organizations like WHO, WTO, OLAF, Interpol, Europol, and UNODC, you name it, and we conducted it. So idea of telling is that what we hear today, how to move in a digitalized world with the help of the private sector, as well as with the help of modern technology. So the WCO also has unleashed the data strategy, as I mentioned, where we have one area pertaining to the capacity building. So we intend the building capacity of all our administrations, including the African communities, as well as the entire African customs administration at large. So that is where we think the solution lies. We should have a digitalized environment as we move. Both private sector is moving, so the customs and other border agencies or border regulating agencies should move together on a coordinated border management principle with a single risk management risk engines. All of them can put their risk factors into the one single window where it can address all the risks. So that what we talk about, instead of one stop, no stop. When you say no stop, then everybody should come on the same page. Everybody should be safe, secure, and should be having a kind of mechanism within their administration which can facilitate seamlessly the secure trade. Then only we can think of no stop border. We can think of a single risk engine which can address all the border agencies' risk parameters. We can think of having a coordinated platform, having a single window which is headed by customs, like Lilian has mentioned about the kind of like national trade facilitation, intra-agency, interagency, and international agency cooperation that the customs has been spearheading. The similar kind of structure can be there, where all these different players, including private sector, can come on the same page, and they can be certified as a truly secure entity, which can be roped in the secure the blockchain technology that Alban had talked about, and what Jalgaya has talked about. Like we have a kind of structure. We had a kind of infrastructure which is well developed across the region, and it fits into all the administration's requirement. And more importantly, when we talk about the regional administration, regional integration, this is African Continental Free Trade that agreement that has come about, bringing in a large number of countries in the region, which hopes at a kind of the potential for intra-Africa trade. It can boost intra-Africa trade provided everybody gains in the process, and everybody can gain in the process, where the value add by each different members are all factored in, and each one acts on the competitive advantage, and they work together based on their resources, based on their expertise, and based on their competence, and can gain. And it's a win-win situation when you talk about a cooperative agreement. So what we or perhaps envisage is a kind of situation where everybody gains by cooperating, by contributing to the common agenda, and by reducing the tariff and non-tariff barrier to the minimum. So what Alban has been talking about, that yes, we can think about a better future if everybody agrees for a common agenda. So the togetherness is important, the commonality is important, cooperation, coordination is important, and that is what you have been providing. I thank you for providing this opportunity to WCO, and WCO as a champion, as a voice of 184 Customs Administration at large in the global arena, is always there to help customs administrations, to help their capacity to provide technical assistance wherever needed. And we have the tools and instruments, we have the conventions to assist and guide them, and we provide all facilities, and we have the different instruments to take care of this. So thank you once again for this opportunity.
Thank you very much, Mr. Kumar Das. A win-win for all. I was just hoping you'd finish your comments with yes, we can, because I just feel like that's the direction we were going. But before I call in Mr. Jean Guy for his question on the Russia-Ukraine conflict and its impact, we're going to run a quick poll for both our panelists and our audience. And the poll should be coming up right now, should be popping on your screens right now. And it's just a quick poll that's asking, what do trading across borders indicators measure? What do trading across borders indicators measure? A, do they measure time and cost of logistical processes of exporting and importing goods? B, do they measure no-stop border posts? Or C, do they measure one-stop border posts? The poll should be coming on your screens. Please answer it, and then we shall look at the poll results a little bit later. As we do that, Jean Guy, you've been very quiet, and I hope you're ready for this one. It's a two-part question for you. How has the value chain disruption affected trade in Africa post-COVID-19 during the Russia-Ukraine conflict? That's the first question. The impact of COVID-19 on the value chain and the impact of the Ukraine-Russia war on the value chain. And the second question is, what policy measures can African countries put in place to fast-track recovery from such disruptions? Mr. Jean Guy?
Thank you very much. This is it's a very big question. It's a very big question. Thanks a lot. Just, I think on GVCs, global value chains, I think it's important for me to just perhaps provide some very generic definition of what we mean when we talk about them. If you look at it, they've been at the heart of trade-driven poverty reduction for the past 30 years, ever since this era of globalization started. And what it did is that it split global production into distinct activities, and it spread across the world. And that happened primarily because of massive advances and major drops in the cost of transportation, of logistics and communication, which allowed for easier than ever before movement of people and goods. You think of a car, you might think of the engine, and it's assembled. It might be assembled in the US from parts made in Europe, China, Japan. Same for a phone, same for a plane, any product that you might think of. The funny thing about the dichotomy about Africa is that it's actually highly integrated into the global economy, but in the wrong way. It's integrated into those lower value added tasks and activities. The share of our trade with the world is about, the share of our total trade with the world is 80 to 90%. So we primarily export to the rest of the world. And yet that our total trade only represents 3%, So it highlights just how much we're dependent on the global economy for our trade, but how minute the value of our trade is with the rest of the world. And it's because everyone knows we are exporting raw materials, petroleum products, unprocessed minerals and agricultural products. I'm talking about the continent as a whole. Bear in mind, Kenya is doing quite well in this space. We're talking about Africa. So we are exporting these raw materials. We sit at the bottom of global value chains and we are powering the world industries, and yet we have very few to call our own. So our experience with global value chains has resulted in very limited transformation, structural transformation. Now, coming to to Russia, the Russia-Ukraine conflict, I think it's important not to isolate the conflict from the other crises we've been facing. For the past 3 years, Africa has been facing multiple back-to-back crises. COVID started in December 2019, right when we're beginning to recover towards the end of 2021, beginning of 2022, boom, the war in Russia started. But we must remember that in between, we also had to deal with a lot of social unrest, security threats, a resurgence of violent coups, disasters linked to climate change. So all of this exposed deep vulnerabilities in not only Africa's integration in global value chains, but in value chains themselves around the world, and a big thinking around the need to restructure them. Now, COVID affected in ways we're all familiar with, the containment measures, the immediate impact that affected us tremendously in terms of the drop in global demand for oil and mineral, the disruptions in in terms of food trade and tourism, and it pushed tens of millions in poverty. Then came the war in Ukraine. And it came right around the time when we were beginning this very painful recovery. And it pushed up inflation by, again, contracting demand and reducing the purchasing power of our citizens. But in this specific case, it was particularly, these types of crises are always detrimental to the poor in the sense that they tend to push up inflation and reduce the purchasing power of our citizens. But in this particular case, it actually affected the very food crops that the poor depend on to survive. Wheat, maize, rice, soybeans. It increased the cost of fertilizers. There's another element that, is important to bear in mind. It had a very bad impact in terms of the sovereign debt situation of most African countries. We have today close to 22 countries that are either in debt distress or at high risk of debt distress. So recovering from a crisis from a position of debt distress is very difficult. So the bank, we launched a COVID response facility, and we provided billions to countries in terms of emergency finance to help maintain vital health services, expand social protection, protect jobs. And here we were capitalizing on experience with Ebola. We also launched the Africa Emergency Food Production Facility to provide the resources needed to countries to help them cope with the shocks, So in all, some of the measures that we recommend are the ones that are being discussed here in terms of how we recover. The issue of debts, we must identify ways to solve it. The G20 Common Framework for Debt Resolution is one way, where the G20 countries are bringing all official and private creditors around the table to discuss options to restructure, countries that are in risk of debt distress. And then the issues of trade policies and trade facilitation. In an environment where developed countries are placing restrictions on export of strategic items like food supplies and medical supplies, not only do we need to ramp up our own production, but it needs to move freely across. So that really links into the topic at hand. The issue of eliminating non-tariff barriers. It's of no use to implement the AFCFTA if countries turn and raise non-tariff barriers, because the net effect that we're hoping from eliminating tariffs would immediately be substituted by a raise in NTBs. And we've seen that happen in the past. The issue of access to finance, Peter alluded to it, and it's not, the AFCFTA will not succeed if it's only for the big players to buy into it. The SMEs have to be able to capitalize on that, and we've got a huge problem in terms of understanding the AFCFTA. Large companies tend to understand where the opportunities lie. You know, I was amazed by how Peter can just, you know, explain the dynamics and the characteristics of a single product. You know, not all can, surely not government, but that level of awareness about the opportunities need to go down all the way to our SMEs so that they understand what we're dealing with and we facilitate access to finance. I've spoken about regional infrastructure. I won't go into it. We all know we need to plug them, the goods, the people, they need to move freely. And then the last one, I'll close on this one. It touches a bit on, it's on the AFCFTAs, this whole issue of supply chains mapping and sequencing. You know, if we want to succeed at that game, we must understand global and regional trade and production and consumption patterns, like the patterns, to understand where the opportunities are. How much does it cost to produce a product and where? What type of policy should we advance? And that's where this link between private sector and government, because private sector tends to have the information that is needed for government to pass the types of policy that would help them capture better markets. Yes, so this is it for me. Trade facilitation, supply, better mapping of supply chains and where the opportunities are and the types of reforms to help us capitalize, managing the issue of debt, providing access to finance to SMEs, and plugging regional infrastructure gaps. Thank you very much, Wageni.
Thank you, Mr. Jean-Guy, for that. And I liked how you started. You're saying, you know, there's the conflict in Russia, Ukraine, but what about in Africa? Are we ready in terms of the instability of some nations to actually, for us to be able to adopt to the AFCTA, that we are painting this great, glorious future, but we can't move if all countries are not at the same place. So thank you for that. And allow me to bring in Peter. Oh man, our time is fast spent, so we're going to use this also as a wrap-up session. The conversations have been so riveting. But Peter, as you come in to give your final remark, Trigger Foods is all about transforming the African retail. Picking up from what Mr. Jean-Guy has just challenged us on, how is the food value chain? Africa, part of it is hungry. We are here talking about the AFCTA. So what is the place of AFCTA in supporting the recovery of the various disruptions that the African nations face, whether it's hunger or war or poverty? How do we recover in terms of the food value chain? Peter?
Thank you so much. And I also just wanted to just emphasize to Jean-Guy that we're still an SME. So I think
the jury is still out on that one.
So one of the things I just wanted to highlight is that you know, we talk about movement of food between countries, but we also don't look at movement of food within the country. And I think that's also one thing that we need to more or less start thinking about how we address, especially now that we cannot start having technology solutions that provide visibility in terms of where the demand is and how food needs to move there. I'll just give you an example of the banana value chain, right? So most of the bananas are grown by smallholder farmers. So these farmers basically in a week maybe harvest 2 or 3 bunches of bananas. Those 2 or 3 bunches are not enough for them to hire a vehicle and go to the local market. So what you do is that you have now the first layer of brokers. This is somebody with an old pickup in the neighborhood who's able to get those bananas, put them all in the pickup and take them to the local buying center. When the bananas get to the local buying center, you find somebody else there who's then going to buy from the guy with the pickup. Now, this guy accumulates the bananas together, but does not have the resources to take it to the capital city. So they wait there until you get another broker who comes in with a 5-ton, 10-ton vehicle and loads the bananas and is able to take them to the city. The bananas then get to the city. And what you find is that now when they go into the wholesale markets, let's say in the case of Kenya, like Wakulima, you find that Wakulima has its owners. You can't just walk in and start selling, right? So you find another layer of brokers there. They buy the product and then they sell the product to a smaller market. Like you find maybe Wakulima is feeding Toy Market or is feeding Mudhurwa Market. The product then goes to that market. From there, you have somebody who goes there with a mkokoteni, picks up the product and takes it to the retailer. That product has been touched by 5-6 people since the time it was harvested. During that process, a lot of that product has actually gone to waste, because as it's being handled, I don't know whether you've seen those bananas being handled in the market, they're being thrown from person to person. The likelihood of a significant amount of damage happening is high. The reason why we have some of these broken value chains is because you have a fragmented production layer where you have smallholder farmers, and then you have a fragmented retail layer, which is the small retailers. And as long as information is not flowing freely between these two layers, what you have is a lot of inefficiency that is created. So even as you import product, addressing these local bottlenecks is extremely important. And I think today, with cell phone technology, with a lot of the applications that we have, we can start finding solutions that actually help us deal with some of these challenges. And that's one of the things that Trigger has done to ensure that when we're thinking about the retail, how do we ease how product comes into the country and gets into the retail, or how the product leaves the farm and gets into the retail? And that's part of the challenges that we're addressing. And I think even as we're thinking about the AFCTA, these are some of the challenges where we need to figure out how do we create efficiency in terms of movement of food within the country and between countries. And that way then we start eliminating cost, we start eliminating wastage, and start building efficiency, which we pass on to consumers who are then able to benefit from lower prices.
Wow. You've left us on a high. We were still in the market passing the bananas, but thank you very much, Peter. It's been, excellent listening to you. I want to bring in the East Africa perspective from Ms. Flavia as she gives us her parting shot. Ms. Flavia, what are the challenges and prospects of integrated border management in the EAC as you give us your parting shot as well?
Thank you very much. Quite a number, because we are looking at issues to do with the non-tariff barriers, particularly that are caused by the multiple agencies that are at the different borders, the porous borders that usually creates threats, security threats within our partner states. And this, of course, affects trade or movement of goods across the border. When we implemented the single customs territory, we anticipated that clearance of goods would start at the point of entry and would smoothly move from that first point, for instance, the port of Mombasa or Dar es Salaam, to the final destination without any interruptions. But it has proven to be that the current borders that we do have, much as they are really good infrastructure and they facilitate trade, but they still cause a bit of delay in terms of cross-border trade. So it becomes so difficult when one country imposes a certain requirement in regard to documentation, and you realize that the efforts that we have put into the simplification of processes from the point of entry to the destination is all lost in having the consignment take 1, 2, 3, 4, 5 days at the border, waiting for a specific document to be approved by a certain agency. So that is something that we really find as a challenge within the integrated border management. We can also talk about the issues of state relations. You can relate that some of the partner states, once they are they have different misunderstandings, it really creates a very big challenge in terms of trade. Some borders are closed, and therefore the communities that are around that border may not be able to trade smoothly, and hence affecting the production of that specific area to move the good from that particular area. Interconnectivity of systems, that means we have as customs, we have advanced in terms of interconnectivity, but what about these other agencies that require to approve clearance of goods? So we need to also improve on the connectivity of such agencies, and also advancing the infrastructure in that particular context. So the levels of the multiple government agencies with different and conflicting regulatory policies. We mentioned of more than 15 agencies at the border, for example, one of the borders, but each agency has a regulatory framework, and that agency would like to implement or to execute that regulatory framework at the border. So it becomes so difficult to manage, much as we have a regional law, but then it is something that we need to work on in line with harmonizing some of the procedures that relate to the border. The recent COVID-19 restrictions really opened up the minds of the partner states, where we did not have a harmonized approach to dealing with the clearance process at the border. So we have to look at a way of looking at management of pandemics other than, let's say, COVID, that showed us exactly what we lacked at the time. So there is a lack of coordination among partner states while we develop the policies that govern border management. Maybe the other would be, you see, some countries give authority to the local authorities nearby the borders. So these local authorities may once in a while impose certain restrictions, certain levies that may affect the cross-border trade. So they have the authority, but they are passing that authority where it is not relevant. So it becomes a challenge for us to be able to coordinate, yet it is seemed to be a national program. In terms of remoteness, where we cannot reach the security issues, where we cannot reach the interconnectivity, lack of facilities, limited personnel, and also limited infrastructure for the borders to operate smoothly. Well, it's quite a number, but all that come to the result into a number of non-tariff barriers that some of them are policy related, some of them are infrastructure related, and others are lack of harmonization of certain policies. So that is what I can submit. Thank you very much.
Thank you, Ms. Flavia, and thank you for sharing your comments on this. We're doing our wrap-up session. You know, I'm torn between calling Mr. Jean-Guy or Mr. Alban, but I know if I call Alban, he's going to throw a big one, and if I call Commissioner Lillian, she's going to have to take it. So I'm going to ask Alban to go fast, and then I'll call Jean-Guy to take what Alban will throw and catch it in the air, and then Commissioner Lillian will finish it up for us. So Alban, as you give us your parting shots, tell us, I know you've shared very many huge ideas that are quite exciting. Some are quite, wow, hair-raising. But how can Kenya leverage on technology and partnerships to enhance border management in a globalized age, even taking from what Flavia has just shared?
Thank you very much. I mean, very quickly to answer that, I think KRA is already doing a good job at that. If I talk of KRA, other government agencies, of course, in Kenya are doing a similar job as well. So like partnerships we've done with KEFIS, for example, around plant health, also with AFA around the trade in agriculture and food, Kenya Ports Authority as well. So I think there's a lot of awareness and consciousness within Kenya government agencies on the power of digital technologies to sort of help them address some of the inefficiencies, some of the governance challenges they face in the environment where they operate. So I think that's already there. So when we talk about cross-border engagements, I think KRA is part of that sort of family of entities that is already venturing into that. So for example, implementations of systems like the regional electronic cargo tracking, that's already KRA using a common digital framework together with other customs administrators in the region to facilitate that movement and leveraging on technology. Under the ACT framework as single customs territory, as Flavia explained, it's also part of that KRA opening up and sharing information to facilitate faster transit. So for me, I'm very happy that there is that consciousness within KRA and other government agencies has mentioned that has that. I mean, I'm proud to say at KRA in particular, Customs Administration, the Customs Department, you have very brilliant minds there, people who think big, people who adventure, they're going for those daring ideas as we spoke about them here. They're not shy to go there. And the biggest part of it is they have their hearts as well. They wear their hearts to this. So they are invested emotionally. They are also invested in terms of the mindset of where they want things to go. Doesn't mean that we are doing our best, but we have the ingredients to do better. And I think that's where KRA is. There is always room for improvement for us to do better. And some of these innovative ideas we are talking about are those things. And just echoing what was said in the panel in the morning, the idea about co-creating, so getting customs to journey together with the private sector, as Kumar mentioned, that private sector, customs collaboration, and government agencies together. KRA in the Kenyan context, and I guess in many other administrations, jurisdiction, customs playing that role of really driving the agenda of facilitating trade to achieve those objectives that any economy would want to achieve, to drive growth, to drive that independence of the country and drive the growth of wealth in the country. So I think from the digital space, KRA is in a very good space. They're doing the right investments, doing the right things. There's more to be done. There's more investment required. There's more effort to be put. And I guess partners like ourselves, I'm sure AFDB, are willing to work and journey with institutions like KRA to achieve these objectives. Because as Jean Guy mentioned, this is how we create a continental market for ourselves. This is how we ensure we create sustainable businesses in the continent and in Kenya for that matter, because then we have a digitally connected continent. We have a way that it's easy. The day we have, as Peter mentioned, a grower of bananas somewhere in central Kenya or of maize somewhere in eastern Kenya, who is able to know that there's a market for their maize in Ghana, then we know we have arrived. And we will get there. And for me, that's my parting shot, that's what the continental arrangement is all about. It may seem a pipe dream for many, but I don't think it is. The fathers and the mothers who were in Addis and signed this agreement had a vision. Most of them may not see it, but I think we have the responsibility to make those steps every day for us to get there, because it guarantees then the future of our continent and the stake we need to claim, as Guy mentioned, within the global trade. We have a stake, we've not claimed it. It's there, we need to go and claim it. No one will give it to us on a silver platter. We must go and claim it. And doing these things we are doing and talking about now is how we begin that claiming process. And finally, these things, now maybe the bigger word to throw there, not really big, is essentially how we become smart. So have smart corridors, have smart borders, smart customs, smart businesses. This is the infrastructure we need. And believe you me, if we have this, we beat the rest of the world, hands down, no doubt about it. Thank you very much.
Thank you very much, Alban, from Team Mayor, that we need a smart ecosystem. And thank you for the great accolades for Commissioner Lillian. I'm going to call her, but first let me hear from Mr. John Guy. Your parting shots. We've talked about the AFCTA, we've talked about the integrated customs border management system. We want to hear your final parting shot from the AFDB.
Thank you very much, Wageni. I've very much enjoyed this exchange, and I wanted to bounce off of Alban's words to say that I am, and really the African Development Bank is just as optimistic about not just KRA, but just Kenya in general, and it's mostly from my perspective about the capabilities, you have a vibrant private sector. And I still recall those days when I used to work at the EAC and we were negotiating the Common Market Protocol. It amazed me how private sector was able to influence the policy positions of government. So and it's notwithstanding the challenges you might have, but there's clearly a vibrant private sector, a forming and strong industrial fabric that is growing, and that merger between government, that bond or that working relationship between government and private sector that is necessary to capitalize on something like the AFCFTA is clearly working or at play in Kenya. So Kenya is fully ready for the AFCFTA. KRA has a clear indication of the needs in terms of what needs to be done in terms of making borders borderless or even virtual. I was quite amazed that there is even this discussion. And all I wanted to tell you is that you can continue to count on the African Development Bank. We will continue to work with the government of Kenya, with the East African community, and the whole of Africa. In the EAC region alone, we've invested close to $10 billion. We've got an active portfolio of close to 10 billion in energy, transport, water. In Kenya alone, since 1967, we've invested in the neighborhood of 5 billion, again, mostly in areas like transport, public financial management, trade, and OSBPs. And every time we received clarity in terms of what the strategic orientations were from government in each area. So that's really helpful. And my parting words is that you can really continue to count on us and to make sure that Kenya benefits from the AFCFTA, but not just Kenya, the whole of Africa, ultimately. Thank you very much.
Thank you very much, Mr. Jean Guy. Alban says we can do better. Jean Guy says we are on the right track. I want to call upon Commissioner Lillian. These are your key partners, Commissioner. Timea, you have AFDB, you've got EAC, you've had what they have to say. What is the role of stakeholders and key partnerships, so to speak, in implementing this, the AFCTA for you and the cross-border management, as you give us your parting shots?
Thank you, Wageni. I hope I'm audible.
Yes, you are, ma'am.
Okay, thank you, Wageni. And I can't overemphasize the role of our stakeholders who are all represented here, and we can't thank you enough. I can't thank you enough. And I would say that Kenya as a country, and even KRA and even customs would not be able to have reached where we are without the partnership, the support, the collaboration, and the constant nudge to push us, to get where we are. So we are really, really grateful. And I believe this is just the beginning. We look forward to even more and greater partnerships and collaboration and, challenges to move forward. Sometimes we get stuck in thinking we've arrived. So that constant nudge to just keep telling us you can go higher, we can go virtual, you can go, beyond. That keeps the energy going and the drive, and ensuring at the end of the day that we we deliver our mandate, which is revenue collection, trade facilitation, and protecting our borders, and of course, impacting the community along the way in all this. So in closing, I would say as Africa and the world, gears towards becoming a global market, then cooperation, the words that have been used here that are cooperation, coordination, collaboration, and if you can pick the word of the day, co-creation, then will be the vehicle to ensure seamless integration, both locally, regionally, and globally. So where does customs come in then? Our responsibility as customs is then to be present in all these conversations, to be agile and adaptable, and to be responsive to the needs of our stakeholders and our customers. Thank you all.
Thank you very much, Commissioner Nyawanda, just emphasizing that customs has a seat at the table when these conversations are taking place, and not just a passive seat, but an active seat. You know, you have meetings where people are just passive and they say nothing. I like the emphasis that we're here and we're also going to do something about it. To wrap this whole conversation and this engagement we've had, allow me to bring back our keynote address, Mr. Pranab Kumar Das. What have you had? What is your parting shot? Were the conversations exciting for you? Did they meet your objective now that you gave us the keynote address?
Yes, tell you, Vagani, I'm really thrilled to hear so many interesting topics being told in so animated manner. I'm very hopeful, and as a global voice for the customs community, heard Lillian leading the way as customs community in KRA. I'm talking about WCO as a leading global voice of all 184 member administrations. We really look forward to a smart and secure ecosystem. I talked about the three pillars that safe framework of standard has envisaged. Once we really implement and we have authorized economic operators in all streams, not only among the various operators, but also among the, when we have started implementing in e-commerce, we have started trying to implement in free zones, and the Alban referred to about the secure, the pipeline, kind of the distributed ledger system technology, the modern technology that we can imbibe, that will set the tone for the entire process, and we can look forward to a better and more secure future, and a win-win situation with the greater cooperation with the private sectors, with more coordination among the government agencies, and customs leading the way with a very smart single window, with very high reliable risk profiling system, so that we can really look forward to a kind of no-stop system that we have been envisaging or we have been dreaming of. So with that, I think we are looking forward to a better future, and AFCFTA definitely has a greater role in that regard, because the regional coordination and the kind of win-win situation it can, and a level playing field that it can platform, it can present, that will set the tone for the better growth for the entire African Union and all the administrations therein. And we can definitely look forward to a better future for all the African communities, including all business and everybody there. Thank you.
Thank you very much, Mr. Kumar Das. Thank you so much, my discussants. What an amazing and engagement discussion we have had this afternoon as we talked about scaling the tides, the customs administration in the globalized age. And we're talking about tomorrow today. So we have loved the conversations. I hope you have also loved the conversations. Before we close this particular session, may I request that all the discussants and the panelists put on their cameras so that we can take a screen grab. Alban talked about the people who met in Ethiopia one time and birthed the dream of the AFCTA. Maybe some of them are here, maybe some of them are not here. So let's also take a picture so that the future generations will also know that we were here. And we also want to request our Commissioner General also as well to please put on his camera as well. And anyone from the KRA Board of Directors, yes, I see you, Ambassador. I see you, Mr. Swalehe. Thank you very much. I see you. I see you. Thank you for the cameras. I think they're on. I see you, Director Mukesh. I see you, Commissioner Matuko. All right. Why don't we take this grab? I am asked that if we can wave. I don't know what the wave means. I think we're just saying hello to each other. Right, there we go. And the screen grab has been taken. Thank you very much. I want to thank you, Mr. Das, for your engagement. Thank you, our discussants, Mr. Peter Jonjo from Twiga Foods, Commissioner Lilian Nyawanda from the Kenya Revenue Authority, Mr. Alban Odhiambo from Trademark East Africa, Mr. John Guy from AFDB, Miss Flavia Businje from the EAC, and have I left any other of my panelists? I want to say thank you very much for this particular session. I feel like I have left one more panelist, and my apologies if I have, but thank you very much for your engagement. And we were, like I mentioned in the morning, we were going through the participants of the day, seeing who's engaging most in our comment section. And the team has gone through, we have the participant of this particular session, and we have had loads of questions. So our panelists, we request that, at your own free time, you may look through those questions and the interactions. However, the participant of this session, they were two, and we have Mr. Isaac Nyongesa and Miss Emma Nganga. So Mr. Isaac Nyongesa and Miss Emma Nganga, congratulations for being the participants of this particular session when we talked about customs in a globalized age. Please send your full name, your physical address, and your mobile number to the email that will be shared with you at the Q&A box, which is stakeholder.engagement@kra.go.ke. That's stakeholder.engagement@kra.go.ke. Ladies and gentlemen, we asked you a poll question. I think on my end, they came out too, and we're ready to show you the results. Are we ready to show you the results? Oh, there we are. So the first question was, select the best indicator of trading across borders. And 64% said time and cost of the logistical process. I was hoping to see maybe at 80%, but yes, the answer is A, time and cost of the logistical process. And no, the answer is not B, nor is it C. The second question was, select the option that is not a consideration for cross-border trade. And yes, correct. The answer is enhanced fraud. However, we see there are a few responses that talked about increased revenue and expansion to new markets. I think it's an opportunity for us to engage with our stakeholders even more to clear the air. So thank you very much, distinguished ladies and gentlemen, for participating in the poll question. As we bring this summit to a close today, we're going to go through a story. We love stories. We are Africans. We love stories. We tell best our stories through visuals. And so over the years, we've had the annual tax summit. Every summit has an objective that it chooses, that it opts to accomplish. And so we want to show you a video that talks about the tax summit over the years, the objectives that were there, and what we have accomplished so far. Wow. Thank you so much for that story. That is our milestones for the previous years that we've had the annual tax summit. What you've told us, we've been able to implement, perhaps not at 100%, but yes, we've been able to implement. And thank you very much for that video. Thank you so much, our delegates from across Kenya, across Africa. We've had such a great conversation today, great conversations from the morning. Thank you for registering, for joining us today and staying with us until this point. It's been such a privilege to have hosted this year's annual tax summit, which is the 8th annual tax summit. My name is Wageni Wamba, and allow me now to welcome our Commissioner for Investigations and Enforcement, Dr. Edward Karanja. He is also the co-chair of this annual tax summit, and Dr. Karanja will give the vote of thanks and then usher in the Commissioner General, Mr. Gethi Mboro. Good afternoon, Dr. Karanja, and how are you?
Fine, thank you. Hope I can be seen.
Yes, you can be seen and you are loud and clear.
Okay, thank you. The KRI Board Chairman, the Commissioner General, our esteemed keynote speakers and panelists, our sister revenue agency heads and colleagues, our esteemed taxpayers, all our colleagues and staffs, ladies and gentlemen, I wish to take this opportunity to thank Ambassador Muthaura, the chairman of KRI Board of Directors and the Commissioner General, for opening this summit and giving us hope that as per the theme, it's an inspiring theme, and I believe we'll be inspired throughout. I wish also to thank you all, especially our speakers, for accepting to share with us your knowledge, experience, and insight in this year's annual summit. I especially want to thank our keynote speakers, Dr. Justin, Zake and Dr. Des for your mind-blowing challenge to us in Kenya and Africa on how to take tax administration to the next level. I also extend special thanks to the panelists, that is our Director Mokesh, Commissioner Lispa, Mr. Karinongo, and Mr. Buyagumba. We thank you for your contribution in the VAT compliance discussion. We really learned a lot on how to make our revenue systems more responsive to the needs of the business and the economy. I would also want to thank our Mrs. Fon Wafura, Mr. Ayuo, and Dr. Nyangena for enlightening us on the power of data and how data analytics is used in enhancing compliance in tax administration in general. I also extend our gratitude to Mr. Jojo, Mr. Jean Africa, Commissioner Ririan, Fravia, and Odiabo for nourishing us with extensive knowledge on the opportunities for customer administration to drive service delivery in the contemporary global commerce. Finally, I thank the taxpayers, our sister tax administration agencies, international development partners, our staff and organizers of this forum, organizers of this summit for overseeing and ensuring realization of successful summit where knowledge meets practice I also want to take this opportunity to thank our moderator, Madam Wageni, for the great job of moderating all these sessions and making sure that we are kept awake and alert during the entire summit. It is now my great pleasure to invite the Commissioner General, Mr. Mboro Gethi, to give his closing remarks. Thank you all and happy Taxpayers Month. Thank you.
Thank you very much, Edward, and for those wonderful, that wonderful vote of thanks. I hope I can be heard, ladies and gentlemen. We have had a very wonderful engagement today. And I think, again, Wamba, you have performed at grade A. Indeed, you've done very, very well. Very energetic indeed, steering the conversation through. Our panelists too have done very, very well. The engagements were very, very deep. Indeed, deep and practical. And I truly appreciate what came out of these engagements. I deeply noted that the now and the future of tax administration will be driven by technology. But we also noted that technology alone is not enough. Therefore, we also have to add the collaborative approach to dealing with our taxpayers. It came very clear that feedback is very, very important. And as a tax administrations, we must listen to the feedback coming out, and then we must go out there and give solutions to the issues that affect our taxpayers. Service delivery therefore remains critical to our operation. Our attitude towards taxpayers remains that of service delivery. The engagement, in my own view, came also brought out the place of data. That data continues to be very critical in our work, because that which is supported by data then has what we'd call an expected and credible outcome. So we will continue to deploy data in risk management. Came out very clearly, and that risk management will therefore be able to guide our interventions as tax administrations, so that then we deploy our resources as appropriate. The last topic was very engaging indeed, very deep in terms of the future of customs and the phenomenon of virtual borders, which I really thought through as the debate was going on, how we will be looking at once goods are cleared in one country, then they have free access to the other country. That would be a tremendous move indeed. And therefore, what I saw from that is the need for the country from where the goods are cleared to invest properly, because that country's systems must be dependable, must be credible, the technology and the processes must be right, the risk management, everything must be right, so that then the rest of the world can trust. And the less incidences of non-compliance, the better in terms of promoting the trust. I was very excited also to note from our very able panelists that the TIMEA and the Africa Development Bank and other sponsors remain open to us as tax administrations to continue supporting our endeavors. So we truly are grateful for that kind of support. And I want to assure you that in my own view, this particular tax summit has built on the past and has lived to its billing as a platform where great ideas emerge and we have deeper conversations like we have had today. It is my conviction, delegates and distinguished panelists and our participants, that the ideas that we have received in this summit will continue inspiring us to continue improving in our systems and processes, our attitude towards our customers, and in the greater good of serving our countries and humanity. So allow me to thank all of you once again for being there, participating in this forum. The participants were quite engaging. I did love the questions. I listened to many of those questions, and they were very informed questions, meaning that our participants were very engaged, and they listened and they had a great focus on the issues that we were discussing. So I would like to finish my closing remarks, assuring you that we will continue improving our processes and continue improving the nature of engagement we have through this tax summit into the future. On behalf of the KRA Board and Management and myself, the staff of the KRA, want to thank all of you who participated in this forum, guests, panelists for accepting to come and spend your time with us, investing in preparing to work with us and giving us many ideas that we are going to implement and consider moving forward. Thank you very much, and God bless you.
Thank you very much, our Commissioner General of the Kenya Revenue Authority. You've wrapped it up so beautifully. We really just wish this was a 2-day summit or maybe 3-day. But, well, we are very cognizant of the times we're in, and we are grateful for the great conversations that we've had. Tomorrow, though, we shall be having a public lecture on the transformation on stilts towards tax administration 3.0. So, ladies and gentlemen, we want to welcome you to tomorrow's session. Same link, same time from 9 a.m. We are going to finish today's session with the anthem, and then you're free to leave. Thank you very much.
Tukae na udugu, amani na uhuru, raha tupate na ustawi. Mungu twaomba uilinde Jumuiya Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike.